Hello students, how are you all? I hope you are doing well. In the previous video, we have discussed about CA curriculum. In the CA curriculum, we have total 3 levels now. Out of that, first level is CA foundation. In CA foundation, we have 4 subjects. Out of that, first subject is accounting subject student. And I have also discussed about the importance of accounting subject in the entire CA curriculum. Yes or no students? So, accounting paper we have in the foundation level for 100 marks and inter level for 100 marks and final level also for 100 marks. Apart from this CA course, this subject will help you in your practice also. Suppose after completion of your CA, you may go for practice or you may go for job. There also this accounting subject will help you. CA is nothing but accounting, taxation, law matters and auditing. So these are very important core subjects in your CA curriculum students. That too, this accounting subject is the basis for the next levels of your CA curriculum. That's why be careful students, because in the next levels you will not get the basics again, and in the next levels nobody will teach you the basics of accounting. Don't expect in the next level, that means intermediate and final level, they teach again the basics of accounting. No students, no. So that's why be careful here itself. Now, so yesterday I have shown you the our course accounting subject table of content. That means the chapters or units that we are going to discuss or the syllabus of accounting. So we are going to cover each and every unit or chapter given in our study material, ICA study material. So, but we have divided the same chapters in a sequence of chapters, but we discuss all the chapters. Next step, I hope you have registered with ICAI. After registering with ICAI, you will receive study materials students. So after getting study materials, you just go through the study material once again. You can check whether all study material content is covered in our materials or not. But in ICAI, they give you study material, that is material, content and illustrations plus practice questions. But what we did here is we have divided our material into two parts. We have divided our material into two parts, students. Total course material we have divided into two parts. The first part is concept book. The first part is concept book. This contains all the concepts of chapters. Second book is practice book. Second book is practice book or question bank. You may call it question bank. Practice book or question bank. So this question bank contains all problems of ICAI study material. Here what we are planning is all the concepts of ICAI we discuss in the classroom. In the practice book or question bank contains illustrations of ICAI, illustrations of ICAI, and practical questions. Practical questions. ICAI study material contains illustration and practical questions at the end of each chapter, plus true or false statements. True or false statements plus MCQs. In the first level, we cover these things: illustrations plus practice questions, true or false statements, and MCQs. In the next level, after completion of all these things, after completion of all the chapters, what we do is we try to record some videos separately for RTP problems, MTP problems, and previous year question papers problems. I repeat, first level we discuss all ICAI illustrations. Second level we discuss RTP problems, MTP problems, and previous year question papers. Yesterday I have discussed regarding ICAI sources. ICAI sources consist of what? Four things na: study material, RTP revision test paper, MTP and previous year question papers. Yes or no, students? So, in our entire CA foundation curriculum, we discuss all ICAI sources. If you are thorough with the concept book plus these ICAI problems, then you can easily score 70 to 80 marks, students. You can easily score. Yes or no? So, this accounting paper is a real scoring subject in your CA foundation level, and this subject will help you to overcome the aggregation problem. That's why I have given the name of our subject is the real scoring. The real scoring and never boring subject. The real scoring subject. Because here you have a scope to get easily 90 plus also. Once you are perfect, thorough with the concepts and problems, then you can even score 90 plus marks in accounts. Yes or no? That's why our subject name is what? Real scoring and never boring subject. Because all this concept, this subject consists of problems now. When you are solving problems, you involve so that you never get bored. So that's why, what is our subject name? Tell me, students. The real scoring and never boring subject. Is it clear, everybody? Yes. Now observe carefully. See the table of content here. So yesterday I discussed already, if you are from commerce background in your plus 2 or intermediate, whether it is CBSE or state board, state board, then most of the chapters you come across already. Most of the chapters. So it becomes easy for you. But don't worry, students, those who are from science background, also, you need not to worry. Because when it comes to CA foundation, it is a new syllabus, new subject to all the students. Because in the CBSE level or state board level, the level of knowledge may be different, or level of questions have been asked in the exams are different compared to CA curriculum. Yes or no, students? Yes. So when it comes to CA foundation level, all students are equal, whether they are from science background or from commerce background. Here only thing you need to focus on logic. Here you need to focus only on logic. Why we are doing in this manner? That's why. That's why I frequently use the word simple logic. Simple logic. This is our word. Simple logic. Why? Because in our CA curriculum, in entire CA curriculum, whatever you learn, always think from logic point of view. Here there are no magic, students. There is no magic in our course. Only thing logic. Why we are doing like this? Why we are doing like this? That's it. If you can understand that logic behind why we are doing like this, then the concept becomes easy to you. And that too, when I'm explaining concepts or solving problems, I will give you real time examples which you can correlate with your real life also, so that you can understand the concept or subject in a better manner. Whether you study foundation, intermediate or final, do remember only one simple mantra, that is simple logic mantra. What is the logic behind this? What is the logic behind this? That's it. If you ask this question to yourself, then you can understand the subject easily. Whatever it may be, whether it may be accounting or law or economics or mathematics or auditing, taxation, whatever it may be, you can get the real subject, students. Is it clear? Is it clear? Yes. Now come to one by one chapter. Basics of accounting. First, we try to understand some basics in the accounting. I will assure you, students, you never get bored. Is it clear? Right. Next chapter is journal entries. This is the very, very basic chapter in entire accounting subject. Next, once you are thorough with these journal entries, ledger, trial balance, subsidiary book, cash book, almost you got the accounting subject. Almost over. Accounting subject is over. Sir, We have this much of syllabus now, sir. Yes, the total syllabus depends on these 4 chapters. The total syllabus depends on these 4 chapters. Subsidiary books includes cash book also. Is it clear, students? Yes, that's why while you are watching these videos, try to make important note points plus understand the concept. Understand the concept. If you did not understand, then simply go back and listen again, once again. Yes or no? Yes. In video lectures, we have that facility, na? Yes. And you have any doubts, you can simply post in the group. I will respond immediately. Depends on time factor. Is it clear, students? Yes. Next one. Accounting for GST. I hope you have listened the word GST, goods and service tax. That we can understand here also. Next one, bills of exchange and promissory notes. Now, commerce students try to correlate the subject here, that means the chapters here, with your intermediate chapters. Then you can understand easily. Next one, bank reconciliation statement. Next, inventories, capital and revenue expenditure, and receipts also. Depreciation and amortization. Preparation of final accounts of sole proprietor. Rectification of errors. Financial statements of not for profit organizations. Accounts from incomplete records. Next, partnership and LLP accounts. LLP means limited liability partnership. Limited liability partnership. The same you get in your law subject also. Law subjects also. In your law subject, we have Partnership Act 1932. We have Partnership Act 1932 and LLP Act, Limited Liability Partnership Act 2008. So you can compare, you can relate the accounts of partnership firm and LLP with the Partnership Act in law and LLP Act in law. Like this, you can compare. Next one, partnership accounts consist of 5 separate units. Unit 1, Introduction to Partnership Accounts. Unit 2, Treatment of Goodwill in Partnership Accounts. Unit 3, Admission of a Partner. Unit 4, Retirement of a Partner. Unit 5, Death of a Partner. Unit 6, Dissolution of Partnership Firms and LLP. Is it clear? Next one. 18th chapter, Company Accounts. Company Accounts. In your law subject, CA Foundation Law, you have Companies Act 2013 also. So here you can relate. Yes or no, students? So in the CA course, the beauty is you can relate one subject with other subject, one chapter with other chapter. Then you can understand the actual subject, why it is related. Okay. Next, Unit 1, Introduction to Company Accounts. Unit 2, Issue, Forfeiture and Reissue of Shares. Unit 3, Issue of Debentures. Unit 4, Accounting for Bonus Issue and Rights Issue. Unit 5, Redemption of Preference Shares. Unit 6, Redemption of Debentures. Now, last unit is Theoretical Framework. It contains various theory units. Okay, that's why I have given this chapter at last. Is it clear, students? Now do one thing, just pause the video once and try to revise. Try to revise the chapter names first. Because in professional courses now, first thing you need to understand is your syllabus. What is the syllabus I am going to cover? That is very, very important, students. What is the syllabus that you are going to cover in your professional course? That is very important. That's why just pause the video and go through the entire content once again. Here, if there is any possibility, try to write the chapter names. Chapter names. Most of the students, they don't even know the chapter names. Truly. That's why go through these chapter names and try to write down. Pause the video. Yes. So I hope you have done this simple activity, students. Clear? So during the video, I will say some activities. So just pause the video and do this work. So if you do it, no, then it is better. You can understand the concepts. Next, now we discuss our first and foremost chapter, that is Basics of accounting. Basics of accounting. As this is a basic chapter, don't expect anything in the examination from this chapter. This is very, very basic, students, to make you understand the concept of accounting. Why should we learn this accounting subject in our CA level? Why should we learn accounting first? That I will tell you now. Now, look at here. Come to your material. Come to your material. What is our subject name? Accounting? No. The real scoring and never boring subject. Accounting. The real scoring and never boring subject. Accounting. Is it clear? Yes. Now look at basics of accounting. First, understanding the concept of accounting. First, we try to understand the concept first. Okay. For that, I have given some examples here. Look at the first example, student. Look at the first example. You have to solve it. Okay, be careful. 1st April, an individual started a grocery store with 1 lakh. Okay, immediately you can visualize. Yes, there are some grocery stores nearby your house. Just visualize. Yes or no? Yes. So how much amount he invested? 1 lakh. So he started business with 1 lakh rupee. What is the business he started? Grocery store. Means what? He will purchase grocery items. He will sell grocery items. Yes or no? That is a business. Okay. He purchases grocery items. So in the bracket, what they are giving? Goods. So his business is what? Grocery store. What he has purchased? Grocery items. So these grocery items are called goods. Okay. For 90,000. Okay. And sold all the items for 1,25,000. So he purchased for 90,000. He sold for 1,25,000. Okay. He pays shop rent for the month of 2,000 because he's doing business in a premises na, so that he has to pay some rent. How much rent he is paying? 2,000. And a salary of 5,000. Suppose if he employs some worker, so we pay salary to that worker. How much salary paid? 5,000 rupees. Very good. Will you calculate whether the business earns profit or loss? What they are asking? What? They are asking you to calculate profit or loss of the business. Sir, what is the profit or loss of the business? He started business na with how much rupee? 1 lakh. What is the objective of starting any business? You people know very well. To earn money, profits. That's what they are asking you to calculate. Will you able to calculate? Pause the video and try to calculate whether the business earn profit or not with your knowledge. Anybody can calculate this. I hope every student will calculate this. Take 2 minutes time and try to calculate the profit or loss of the business. Okay. I hope you have calculated. Now let me calculate. Let me calculate whether this business earns profit or loss. Look at, students. Simple logic. What? How much of sales he made? Look at sales 1,25,000. Sales 1,25,000. Fine. From sales, what we have to deduct? Expenses, na? Because how do we get profit? Whatever the revenue we generated, from that we should deduct the expenses, na? This everybody knows. Less. How much of expenses you have incurred? Means I have purchased goods worth 90,000. Super. And what are the other expenses you have incurred? I have paid rent, sir. How much rent you have paid? 2,000. Super. Next, sir, I have also paid salary to my worker, sir. Okay. How much salary you have paid? 5,000. Add total expenses. How much? 92 plus 5. 97,000 rupees expenses we have incurred. So, this much of revenue we generated and this much of expenses we incurred. Simply deduct. So, I hope every student is ready with their materials, notebooks, and stationery items. Stationery items are very important for us. They are like weapons for us. See, when a person is going for a battle now, so he need weapons. We are also going to battle. What is that? Exam. Have to go. We have to go. So there, what are the weapons we have? Pen, pencil, eraser, sharpener, scale. More than that, calculator. Calculator. Yes, sir, no, student. Yes. Now look at. Do calculate 1,25,000. And in the exam, na, don't forget. Don't try to calculate these calculations. The air. Don't this much, this much. No, 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 no. Use your calculator. Use your calculator. Okay. Sometimes when you calculate like that, you may commit some mistake. That's why use calculators. We have weapon na. Use this weapon. Okay, fine, sir. 1,25,000 minus 97,000. What is the difference here? We have 28,000, sir. Super, oh, super. What is this? Sir, he earns profit, sir. Now, you people tell me, is it easy for any person to calculate profit like this or not? Even a simple layman also can calculate this. A layman also can calculate this. Yes or no? Okay, sir. Okay. Okay, fine. This is our example 1. Okay, do remember. Next, come to example 2. Next, come to example 2. Observe carefully. I hope this example you understood very well. Fine. Sir, how it is related to our subject, sir? Wait for some time. You can get that. You can link that. Okay, now look at example 2. Observe example 2. An individual invests 2 lakh to run a stationery business. Earlier, which business? Grocery store. Now, which business? Stationery store. Stationery business. Can you tell me stationery business means what? Shopkeeper, the owner of the business, they will purchase stationery items and they will sell stationery items. Okay. How much investment he made? 2 lakhs. Right. Next one. On 1st January, he purchases goods worth 1,15,000. Goods are nothing but what? Stationery items. His business is what? Stationery business, na? So just visualize stationery business in your locality. See, in your lifetime, you went to the stationery store at least one time. Yes, we went so many times now. From our childhood, we went to stationery store so many times. Some stationery stores are just in front of our schools, nearby our schools. So we have visited so many times to purchase pencil, eraser, sharpener, notebooks, pens. Here, students, stickers. Okay, next step. So stationery business. How much amount he invested? 1,15,000 and sells for 1,47,000. We purchased for 1,15,000, whereas we sold for 1,47,000 during January. Super. He pays shop rent for the month 5,000. This time shop rent he paid 5,000 and finds that he still has some goods worth 15,000 in hand. Means what? Actually, he purchased goods for 1,15,000, na? But out of that, he did not sell all the goods. Still, how much goods left in the business? 15,000. These are like unsold goods. These are nothing but unsold goods. Yes or no, students? Unsold goods. Fine. Now, what they are asking, will you calculate whether the business earns profit or loss? Oh my god. Again, they are asking us whether the business calculation for whether the business earns profit or loss. Okay, try to calculate, students, because you know already, no? So try to calculate. Pause the video and try to calculate. Pause the video and try to calculate. Okay, I hope everybody calculated. Okay, be ready with your answers. Let us check. Let me calculate also. Okay, now look at. Let me calculate. So I am taking the same calculation. Yes. Look at everybody. This is example 2. Right. Now, this time sales how much? 1,47,000, sir. 1,47,000 sales. So, for to make this much of sale, how much expenses you have incurred? Okay, sir. I have purchased goods for 1,15,000, sir. Okay. Sir, I have also paid rent of 5,000, sir. Okay. So, total 1,20,000, sir. Total 1,20,000 I have incurred expenses, sir. Super. Then what is the difference here? 27,000, sir. This is my profit, sir. Sales are 1,47,000 as given in the problem. So we have purchased goods for 1,15,000. It is given in the problem. Rent we have paid 5,000. It is also given in the problem. Total expenses incurred 1,20,000. Now what is the difference here? 27,000. Sir, this is the profit, sir. How many of you done like this? Me also. So this is wrong. This is wrong. Why, sir? Why? Because you have purchased total goods for you have purchased total goods for 1,15,000, but out of them 15,000 worth of goods still you only they are unsold. In that case, what you have to do? In that case, what you have to do? Simple. Total goods purchased for 1,15,000. Total goods purchased for 1,15,000 minus how much goods unsold still now? 15,000. So what is your expense on purchase of goods? 1 lakh only. Now what is your total expense? 1,05,000, sir. Very good. Now what is your profit? Okay, let me do this one. Just a minute. So I will show you the difference here. Earlier I have taken here 1,15,000. So that my total expense is 1,20,000, profit is 27,000. Now what I am doing, look at. I am calculating the same thing. Okay. Here 1,47,000 rupees sales. Okay. But this time how much purchases? This time total purchase 1 lakh only. Purchase 1 lakh. Because 15,000 worth of goods unsold, na? Yes. Now, how much rent we have paid? 5,000, sir. Very good. Now tell me what is your profit. Simple, sir. 1,47,000 minus 1 lakh minus 5,000. Sir, 42,000 rupees my profit, sir. Students, you people tell me what is the difference between, sir, here also I have a profit, here also I have a profit. But under first calculation, the profit is only 27,000. But under second calculation, the profit is 42,000. Where is the difference? Both are profits, na? Both are profits. But what is the difference here? From purchases, we have deducted 15,000 rupees unsold goods. Unsold goods, we have deducted 15,000. Second calculation. But first calculation, directly we have taken 1,15,000. Yes or no? So which profit is correct, sir? This profit is correct. Understood this example? I will relate example 1, example 2, next example 3. I will relate 3 examples. Just look at. Just look at and understand. That's it. Example 1, profit. Example 2, profit. So which profit is correct? Second profit is correct. This profit is wrong. So second profit is correct. Clear? Now look at example 3. Look at example 3. Ah, read one by one. Read one by one. 2022, December 1st. Ajit started a business with a capital of 4 lakhs. Sir, what is this, sir? Capital. What is this, sir? So, Ajit is a person who started business. See, to start business, we need a initial funds, na? So, that initial fund is called capital. Technically, it is called capital, right? Now, look at how much amount he invested. 4 lakhs. Fine. December 3rd, he opened an account with Axis Bank. Generally, nowadays, every businessman is opening account na. Individual is having 2 to 3 accounts because nowadays everybody is doing UPIs. Even for single rupee also they are doing UPI payment. Yes or no, phone pay, Google Pay, whatever it may be. Right. He opened account. Okay. Fifth, he purchased goods by making a payment through bank. 15,000. He purchased goods and paid through bank. Next, he sold goods and received the payment through bank. We are selling goods and we are receiving amount through check. He purchased furniture and paid by check. Fine. He sold goods to Aravind 2400. We sold goods to Aravind. Okay. He purchased goods from Amrit 10,000. He returned goods to Amrit 500. Okay. He received from Aravind in a full settlement 2300. Fine. He withdrew goods for personal use 1000. He withdrew cash from the business for personal use 2000. He paid telephone charges of 110. Amount paid to Amrit in full settlement 9450. Paid for stationery, rent, salaries to staff from the bank. Okay. Goods distributed by way of free samples 2000. Okay. Will you calculate whether the business earns profit or loss? To calculate. Make it fast. Make it fast. To calculate. Why are you seeing like that? Now, what is the question in your mind? Sir, how can we calculate profit, sir, from this year? First of all, what is this? This is information relating to what? Business. Whose business? Ajit business. Whose business? Ajit business. Ajit started business and he has done some transactions here. Some transactions here. New word. Suppose if you have a business, just go and sit in your business and just observe what is happening. What is happening there? We buy some goods from suppliers and we sell the same goods to our customers. We pay electricity charges, we pay salaries, and we also pay rent of the shop. Okay, so we incur so many amounts on bringing some goods or some assets. We buy furniture, we buy ACs, we buy lights, tube lights, some machineries. What is happening here? What is happening here? So we are incurring so many expenses to do our business. What are the expenses you are incurring? For how much amount of goods you purchased? For how much amount you sold goods? How much salary you paid? How much rent you have paid? How much telephone charges you have paid? They are giving all these things. Observe. Sometimes we sell goods to our customers on credit basis. Na? Did you remember? Suppose just visualize you have a grocery store in your nearby home and you went to that grocery store and purchased goods. You just say, Uncle, please write in our account. Did you remember like this? Shopkeeper will maintain a book. Shopkeeper will maintain a book. He will record the amount of goods which you have purchased. After completion of month, after completion of month, your parents, your father will settle the account. Will settle the account to the shopkeeper. Again, for the next month, we start buying the goods on credit. That means we first purchase the goods, we pay the amount later. Yes or no? This will happen. Just visualize. So they are giving this much of information. Now tell me, students, will you calculate profit from this information? And if you observe, everything they are giving in terms of what? Everything they are giving in terms of what? In terms of money. Everything they are giving in terms of money. Try to observe. Now you people tell me, how do you calculate profit or loss? Is it possible to calculate profit or loss from this information like this? No, it is not possible. Why? Because in example 1 and example 2, they have given all information. With this information, anybody can calculate profit. From example 1 and example 2, anybody can calculate the profit or loss of the business. But what about example 3? From this information, it is not possible to calculate profit or loss immediately. We have to do some work on this information. Then only we can easily calculate the profit or loss of the business. Try to observe, students, first. Now come to accounting part. Our accounting will give a solution to this problem. Our accounting will give you a solution for this problem. Our accounting says you follow some steps, sequence of steps, so that you can calculate profit or loss of the business easily. So students, observe carefully. Is it clear? Right. Now look at. Now look at. I will show you uh, Reliance Industries Limited. Everybody knows Reliance Industries Limited. Yes, sir. Reliance Industries Limited. I will show you the Reliance Industries Limited financial statements, annual report. Simple, nothing but how much profit Reliance Industries Limited earned the last year. See, as a chartered accountant, you should know all these things, right? Look at. Don't get scared. I am not showing anything else. I am showing everything in monetary terms. Yes or no? How much? 20 lakh crore. What is this? Forget about this. 20 lakh crore, sir. Ah, super, sir, super. 20 lakh crores. Marvelous. Okay, fine. Now, we jump into, if you want, you can download this from Reliance Industries Limited website, or simply type annual report of Reliance Industries Limited. Simply type in the Google annual report of Reliance Industries Limited. You get it. Okay. And after that, you just go through this. You just go through this. Ambani, sir. Okay. Dhirubhai Ambani. How? Aurek Ambani. Right. Sir, what is this, sir? Everything in crores, crores, crores. You just go through. Just go through. But I am jumping into page number 68. I am jumping into page number 68. Observe, students. Statement of profit and loss for the year ended 31st March 2024. Observe. Statement of profit and loss for the year ended 31st March 2024. Okay. Now observe. I will show you how much profit they have showed. 42 crore, sorry, 42,042 crore. 42,042 crore rupee profit they have shown. That means Reliance Industries Limited earned a profit of 42,000 42 crore. In which year? 2023-24. 2022-23, here they said rupees in crore. 44,190 crore profit they have earned in the previous year. So how Reliance Industries saying that we have earned this much of profit in the year 23-24, 22-23? How is it possible? How they are showing all these numbers first? See, they said value of sales 5,33,566 crore, income from services 41,390 crore, GST recovered 27,014 crore. How they are able to provide these numbers? All this is possible through accounting. Through accounting. That is what we are learning here. That is what we are learning here. And they said other income. Observe this slowly. Slowly. You just observe one by one, even though you don't understand anything. Even though you don't understand anything, observe one by one. Invest some time. In the student age, you have only thing to invest your time, not money. Time. You are investing your time. Your parents are investing their money. Is it clear, students? Yes. Invest your time and go through all these things. Even though you don't understand. Initially, you don't understand anything, man. Just go through. That's it. Next one, we go to the previous page. They are saying here balance sheet as at 31st March 2024. Okay. Now observe, they are giving you the information of assets. I don't need to explain what is asset. You know very well. You know very well asset. But even though I will explain later. Wait. They said property plant. This much of assets they are having. See, don't forget these are not in thousands. These are in crores. Not in lakhs. Crores. Do you know how much of assets Reliance Industries Limited is having? 9,59,643 crore of assets Reliance Industries Limited reported. They reported 9,59,643 crore assets. Students, they have also reported liabilities. They have also reported liabilities 9,59,640. Sir, what are you saying, sir? On the other hand, what you are saying assets, sir? But on one hand, you are saying assets, on the other hand, you are saying liabilities, na, sir? Why we are doing like this? Why assets this much, liabilities also this much? That also we try to understand. Observe first. I already told you, even though you don't understand, but observe. Just download annual report. Annual report of Reliance Industries Limited 2023-24. If you want any other company report also, you can download annual report. And if you want, you can download my annual report also. Annual report of Purna sir. You don't get. Okay. Just annual report of any company name. Give company name like Infosys, Wipro, any other company name, Coca-Cola, whatever it may be. And I will show you another company annual report also, that is Infosys. I am showing you Infosys annual report. See, these are all available in Google, no problem. No copyrights. Okay, you can download easily. Look at. Just a minute. Yeah. So here also you can find various information given by Infosys company. But as an accountant, we directly jump into our two things: profit or loss and balance sheet. Statement of profit and loss, balance sheet. That's we need. Okay. Page number 192. Go to page number 192. Observe here. How much profit reported by Infosys? See, do remember, look at statement of profit and loss. You can write 10 times, 20 times. Statement of profit and loss, balance sheet. Okay. Here also they are giving information in crore. Crore. Year ended 31st March 2024. You just observe 2024. You may ask, sir, why they are giving 2023 also? Just for comparison purpose. Compared to 2023, what is our performance? 2024. Is there any improvement in the sales, profit, expenses? Is there any control in the expenses? All those things. Okay. Now look at, they reported revenue. They said, Infosys said, we have 1,28,933 crore rupees revenue in the financial year 2023-24. Last year, 1,24,014 crore. Okay, forget about that, all the information. Finally, come to profit for the year. 27,234 crore of profit Infosys reported. Previous year, 23,260. Compared to previous year, there is some improvement, na? Yes. Now, this is the profit they reported, na? Now, do you want to see the financial position? That means how much of assets they are owning. Assets may be in various forms of students. You can just go through the headings. Balance sheet, observe. Balance sheet. As at 31st, rupees in crore. They have reported, Infosys reported 1,14,950 crore of assets they reported. These many assets they are owning. On the other hand, they also reported, balance sheet continue, they also reported 1,14,950 crore of liabilities. Sir, how assets are exactly equal to liabilities? I will explain. Our accounting depends on this. How assets are equal to, exactly equal to liabilities? I will give you explanation. Wait. After becoming chartered accountant, what is your duty? Your duty is this. Have to report these financial statements. These are called financial statements. Have to audit whether this profit is correct or not, whether the assets are correct or not, whether the liabilities are correct or not. You have to audit. Do you know who is the auditor of this Infosys company? Look at Deloitte Huskinson Sales LLP. These are the auditor. Observe. Chartered accountants, firm's registration number, yes, partners, membership number. Once you also qualify CA, you get membership number. Okay, now look at it. Observe this. They are the auditors of Infosys. And for Reliance Industries also, they will mention, just a minute. You will find a auditor firm name also. Okay, you just go through that, you can find their name. Okay, you can find the later students. Will get some firm name only. Otherwise, if I find, I will show you. Yeah, yeah, here itself. Okay, you will get here. This is auditor report. Yes, this is also for Reliance. Also, the auditor company is Deloitte. Okay, we have a concept of big four. Big four audit firms. Deloitte is one of the big four audit firms. Yes or no? Right. Observe. Just go through these two annual reports to students. So you have to invest your time. There is no other scope for this. Is it clear? Right. Now come back to our concept. I hope till here you got the answer why we should learn accounting. Okay. And where we can apply this accounting? You can apply this accounting anywhere where you have numbers. Where you find numbers, there you can apply accounting concept of accounting. Okay, students. Now look at, we enter into the subject now. Activities performed by human being. In our day-to-day life, human beings will perform various activities. We can classify those activities into economic activities and non-economic activities. Observe, students. The activities of human being we can classify into economic activities and non-economic activities. So what is the meaning of economic activities? Any activity performed to earn money. See, as a human being, we need money, na? In a day, we do so many activities, we do so many things. Out of them, from some activities, from some work, we generate money, and for other work, we don't generate money. And the work which we have done to earn money, that activity is specifically called economic activity. And the activity which we have done but we didn't receive any money is just to satisfy our wants, that is non-economic activity. Simple question. Observe, students. Economic, non-economic. Don't expect any question from this chapter, na? Sir, will we get economic activity, non-economic activity question? Will we get human beings activity? Write down the activities of human being. Don't expect all these type of questions. Okay. It refers to activities undertaken to earn money. Right? What are the examples? Look at teaching and training students. Now, I am teaching to you. What I will get is, so that by doing this activity, I am earning money. Next one, producing goods like cars, electronics, and clothing in factories. What I'll do, I am producing cars and I will sell them. For what purpose I am doing this? To earn money. Building infrastructure such as roads, bridges, and buildings. Is it clear, students? So these are our economic activities. Next, non-economic activities. Rest of the activities are categorized into non-economic. It refers to activities performed by human beings for not earning money. For not earning money. What are the examples here? The mother cooks food for her family. So in our house, mother cooks food. She will not get any money out of that activity. But the same person, if the same person cooks food in the restaurant or in the hotel or in the uh, in any place, so they will get money, na? They will get money. Same activity she has done in the restaurant or hotel, she received money. So that from that point of view, it is economic activity. But from here, the intention is not to earn money. The restaurant we are working, we are cooking. The intention is to earn money. In the home, we are doing the same activity, but the intention is not to earn money. Non-economic activity. A father teaches children at home. Suppose if I teach to my child, I don't get any money, na? But if I am teaching to you people, I will get money. What is the intention here? I am teaching here to generate some income. When I teach to my children, I don't generate any income, na? Yes. So these are economic activities and non-economic activities. After completion of each concept, just pause the video and try to revise itself. So here you are doing two activities. One, you are watching, you are listening the videos, you are watching and listening the videos, and you are revising the same concept. So two things simultaneously we are doing. Okay, that is the beauty of video lectures. You can pause the video. If you want, you can rewind the video. Yes or no? Yes. So pause the video and try to revise the concept of human being activities performed by human being. Yes, I hope you have completed. Now come to the concept of business, students. Come to the concept of business. See, there are so many activities, there are so many things we can do to generate money. Suppose I'm a salaried person. I'm a salaried person. I am providing my services so that I will generate money. Okay, suppose the same person, I am individual. If I manufacture something and sell the goods to the some other person, I will generate money. So here we have so much of scope to generate money by doing economic activities. Out of them, one of the most important aspect is doing business. Out of the most important aspect is doing business. So what is the concept of business first of all? A business is an economic activity undertaken to earn profits and maximize the wealth of the owners. Observe students, you just observe the businessman, not businessman movie, businessman. You just observe the businessman, business people around you. Just close your eyes and observe how many businesses you can visualize. As many businesses as you visualize, just visualize. And ask them, if you get a chance, just ask them how much of profit you are earning. What is your objective of doing this business? Are you doing this business at free of cost? That means no profit? No, they generate some revenue. Out of that, they get some profit. Okay, the first and foremost objective of any business is to earn profits, students. To earn profits. Okay, next important element is to maximize the wealth of the owners. By doing the business, how much of assets the business is generated. Like that, we have seen in our Reliance Industries Limited annual report and Infosys annual report. How much of wealth they generated, assets they generated, 1,14,950 lakh of assets they generated. Two, now you can observe the value of the business. You have any idea in the stock market? This is the value of the business. Observe students. So the Infosys, Reliance Industries Limited, Wipro, they created so much of wealth by doing the business. Or no, these are the main objectives of the business. Here, next one. So it's a business. See, nobody can do business in isolation. Na? See, I cannot sell any product to me. I have to sell the products to other persons. Yes or no, students? Yes. In simple words, it means the repeated buying and selling of goods and services. Simple words, it is a repeated buying and selling of goods and services. Now, let's imagine you want to do some business. It is just a simple activity. You want to do some business. Now, you people tell me which type of business you want to do. You have only three options. You have only three options. Sir, what are those three options, sir? Is it manufacturing? Means what? I will purchase raw materials, sir. I will convert the raw material into finished goods and I will sell those goods to customers. This is manufacturing. See, nowadays, you observe just Maruti Suzuki. What they do, they manufacture or they produce the cars and they sell to the customers. This activity is called manufacturing activity. Is it clear, students? Yes. Second one, trading, buying and selling. Now you can observe Maruti Suzuki dealerships. What they do, they will simply buy the cars manufactured by Maruti Suzuki, buying, and they will sell the same cars. So here they are not going to change the product. Yes or no? The product, whatever they purchased, as it is, they are selling. This is called trading. Next one, service provider. Suppose same Maruti dealer showroom, they have separately started a business that is service. The car, if you get any repair to the car, what we do? We go to the repair shop. Yes or no? Service stations. That is what service provider. Now I am teaching now. What I am doing? Tell me. Am I manufacturing anything? Or am I trading anything? Or am I providing my service? Service. If you want to do any economic activity, na, if you want to earn money, na, then you have to do either one thing out of these three. Either you have to manufacture the product and sell it, or you have to buy the ready-made product and sell it, or you have to provide this service. Through these three things, we generate money. This is the simple concept of business. Tell me, students, what is the objective of business? Main objective of the business is profit. After that, wealth maximization. There are some organizations whose main motive is not to earn profit also. There are some organization whose main motive is not to earn profit. Their main motive is to just serve the society. That type of organizations we call it as not for profit organizations. Not for profit. Their main motto is not to earn profit, students. Not for profit organization. Observe carefully. Yes or no? So this is the concept of business. Now we discuss the next concept. Hello students, how are you all? I hope you are doing well. In the previous video, we have discussed some basic examples to understand the concept of accounting, at the same time human activities and the concept of business. And we have also seen the financial statements. We call these balance sheet and statement of profit and loss. Put together financial statements of Reliance Industries Limited as well as Infosys also. Just go through these two financial statements, students. Next concept of profit and wealth maximization. This we have already discussed. Now come to the next important area, that is terminology used in the accounting. See, accounting is a language of business, students. Accounting is termed as language of business. Why, sir? You observe here, who can understand these financial statements? A layman or normal people, they cannot understand. They cannot understand these financial statements. Maybe they understand the numbers, but they cannot understand the real financial statements. Yes or no, students? So that's why this can be understood by the people who knows this language. To put it simple, speaking is different from reading and understanding. Yes or no, students? Suppose I know how to speak English, but I don't know how to write English or how to read English. Yes or no, students? Yes. So speaking is different and writing and reading is different. If I want to learn, if I want to learn English, just a minute. Yes, look at. See, if I want to learn English, English is a language. First, what I have to learn? So first I have to learn the letters. English letters. Not only English, not only English, any language. First you should learn the letters. After that, words and its meaning. After that, with the words, we slowly frame the sentences. Yes or no, students? After that, with the sentences, we frame paragraphs. Paragraphs becomes books, pages, books. Yes or no, students? Yes. So, what I mean to say is, if you want to know the language of business, that is accounting. Accounting is termed as language of business. So, first of all, you should understand what are the various terminology that we use in our accounting. Yes or no, students? Most of the terminology already you know very well because you heard, I think you heard these words in your day to day life. Now, let us start understanding one by one word with some examples also. Look at, students. The first and foremost word is entity. Entity is nothing but business organization. Business organization which performs economic activity. Yes or no, students? To put it simple. Look at, an entity means economic unit that performs economic activities. Business organization in our simple words. For example, sole proprietary concern. See, just visualize some businesses which you come across in your life. There are some businesses which is owned by one person. In your nearby shops, if you observe, the excuse me, the business is owned by one person. If the business is owned by one person, then it is called sole proprietorship. If the same business is owned by two or more persons, then that business is called partnership firm. Nowadays we heard so many times companies. In our example, Reliance Industries Limited, Infosys Limited, Wipro, Coca-Cola, okay, whatnot. All these are company form of organization and a not-for-profit organization. These are the various entities. Is it clear, students? Next one, capital. In our first example, we have seen example 1, an individual started business with a capital of 1 lakh. How much? With how much amount he started business? 1 lakh. This 1 lakh is called capital. This 1 lakh is called capital. Clear? Next one. Example 2. Example 2, they started business with 2 lakhs. In this case, 2 lakhs is called capital of the business. Example 3, Ajit started business with a capital of 4 lakhs. Here 4 lakhs is called capital of the business. Yes or no, students? So, capital is nothing but amount invested by the owner in the business. And do remember, capital may be invested, capital may be brought, capital may be brought by the owner either in the form of cash or in the form of kind. Kind means any asset. Suppose I have a building. Now, this building from today onwards, I will use it for my business purpose. That means what? I am bringing my building into the business. Now, this building, whatever the value of building it is, that is my capital. And I am also investing some cash. Suppose I have furniture in my home. This furniture from now onwards I am using in the business. Now, as on today, whatever the value of furniture I have, that becomes my capital in the business. Understood, students? So, the capital may be brought by the proprietor in cash or maybe in kind. Is it clear? Next one. The word capital can also be termed with the other synonyms, nothing but owner's equity. The other name for capital is nothing but what? Technical name owner's equity or proprietor's funds or net worth or net assets. These are the other alternatives, students. Next one, goods. Goods are nothing but the things or articles which the business deals. See, I am a furniture dealer. Let us say I am a furniture dealer. I have started a business, furniture dealer. Furniture dealer. So, understanding the difference between goods and asset is very, very important in our accounting, students. See, furniture dealer. For a furniture dealer, generally, furniture becomes goods. Furniture becomes goods. Why? Because he is dealing with furniture. Furniture may be tables, benches, chairs, okay, sofa set, whatever it may be. Whatever it may be, study tables, study chairs, whatever it may be, almara, all these are comes under furniture. Now, what is my business? I am purchasing furniture and I am selling the furniture. This is my main activity. Now, furniture becomes goods for me. Furniture becomes goods for me. Suppose, suppose I am dealing with cars. So, I am a car dealer. I am a car dealer. Okay. For a car dealer, car is nothing but goods. Cars are nothing but goods. Why? Because what is his main activity of business? Buying cars, selling cars. It is his main activity. Yes or no, students? Yes. Next, suppose I am dealing with some electronic items. Let us say computer dealer. I am a computer dealer. I am a computer dealer. Now, computer becomes asset for me. Computer becomes goods for me. What is my business? Purchasing computer, selling computer. Purchasing computer and selling computers. Computer becomes goods for me. Yes or no, students? Yes. Like this, you can visualize any type of business. Grocery store. For a grocery store business, grocery items purchased becomes goods. Various, see, let us for example assume DMart. Whatever the items there in the DMart for sale, I repeat, whatever the items there in the DMart for sale, they will be called as goods. What is the purpose of their purchase? Goods. Understood, students? Yes. Suppose I am running an electronic showroom. All the electronic items which I have kept in my showroom for sale purpose, they become goods for me. Is it clear? Yes. Next, look at next one. See some examples. Are furniture. For a furniture business, furniture is goods. Computer business, computers are goods. Clear, students? Next, drawings. Next important word is drawings. The amount invested or amount brought by the proprietor will be called as capital. Sometimes the proprietor or partner of the business may withdraw some amount from the business because he is the owner of business. Now, in case of sole proprietor, who is the business? Proprietor, single person. In case of partnership business, who are the partners? Who are the owners? Partners of the business. Yes or no, students? Yes, they may withdraw some amount from the business. When they withdraw any amount, or sometimes they may withdraw goods from the business. Suppose I am running a stationary item. Suppose I have taken one geometry box for my kid. What I am doing? Actually, geometry box or all stationary items I have purchased for what purpose? For sale purpose. Here, what I am doing? I am with taking one of the stationary item for my kid personal use. These are also called drawings. So, the amount withdrawn by the proprietor, by the owner from the business is called drawings. The drawings may be in the form of cash. I may withdraw cash, or I may take some goods, or sometimes I may take any asset from the business also. So, this is drawings, students. Because of these drawings, the capital, whatever the capital invested by the proprietor, reduces. How, sir? Look at. Suppose a proprietor brought capital. Capital brought by him 1 lakh. How much of capital he invested in the business? 1 lakh. But he has withdrawn. He has withdrawn out of this some 2000 rupees. He has given to the business 1 lakh na. But now he is taking from business 2000 na. Now what is his capital? Capital is nothing but 98,000 in the business. How much effective amount he has given to the business? He has invested in the business 98,000. He has given 1 lakh but withdrawn 2000. Understood, students? Okay. Next one. Next important word, asset. See, if you observe DMart showroom, we'll take DMart showroom because most of the students they may have visited DMart showroom. Whatever the items you find in the DMart showroom, except for sale, just visualize, except for sale, they will be called as assets. Let us take for example. See, when you go to DMart, first what we do, we take that trolley now to put the grocery items. This trolley becomes asset for them. Next, air conditioning, asset for them. Billing counter. In the billing counter, you find computers, printing machines, swiping machines. All these becomes asset for them. At the same time, to keep the grocery items, they maintain one racks, store racks. These store racks becomes asset for them, and they maintain lift na asset for them. Tube lights, fixers, furniture, all these things are asset for them. They are not meant for sale, but they are meant for use in the business. Yes or no, students? See, suppose let us take for example um, one sweet shop, one sweet shop. So okay, so most of the students they like pani puri, na pani puri, golgappa, whatever you call. So there they use these pani puri and all remaining items, they are goods for them. But apart from them, whatever they use, like the stove, cylinder, and some other equipment they use, these equipments becomes asset for them. What they are doing with the asset? Okay, let us say I am running a um, online education providers. Now, whatever we are having, these laptops and lighting set, TVs and keyboard, mouse, all these things, what mic, these are asset for us. These are asset for us. Why? Because we are utilizing these items and we are running the business. We are utilizing these items and we are running the business. We are generating revenue. Next, if you take some example, for example, car manufacturing unit. Just visualize car manufacturing unit. So to manufacture the car, we need huge equipment, na? Plant and machinery. Na? We need huge plant, machinery, so many tools, and these all items are nothing but asset for the business. And these assets are owned by the business. These assets are owned by the business. By utilizing these assets, we generate some revenue. Yes or no, students? So these are called assets. Now look at, assets are the properties owned by an entity or enterprise. Okay, by using which we can carry the business. By using these assets, we carry the business and we generate some revenue. Example, look at plant and machinery, land and buildings, furniture, cars used in the business, computers used in the business, all those things. Now here the concept comes. Yeah. Now I'm a furniture dealer. What is my business? Buying furniture, selling furniture. Some of the furniture, I have purchased furniture for sale, but some furniture, I am using one office table. I have purchased office table. This office table is used in the business. Or some sofa. Sofa also comes under furniture. Sofa is used in the business. Now you people tell me, is this sofa and office table goods or assets? Goods or assets? Assets. Goods means for resale purpose. Goods means anything purchased for resale. They are called goods. But here, sofa and table, we have purchased for usage in the business. So here intention is very important. Is your intention for resale purpose or for usage purpose? And I will give you one more example, real estate. For a real estate people, for real estate business, land, buildings or goods. Land, buildings or goods. Yes or no, students? But for me, I'm an individual. I'm an individual. I have purchased a building that becomes asset for me. That is not my goods. That is not my goods. Yes or no, students? That is my asset. That is my asset. Why? Why the land and building for a real estate person is goods? For me, it is asset. Why? Because the intention is what? Real estate person, he will buy the land and building for resale. That's why they become goods for them. But for me, my intention is not for sale, for usage. That becomes asset for me. For a car dealer, generally he purchase cars for sale purpose. Suppose out of the cars purchased, if any car is utilized in the business, that becomes asset for them. Now computer dealer, generally computers are purchased for resale. Suppose if I have used one computer out of them, then that becomes for billing purpose. Excuse me, for billing purpose or for any other purpose, if I use it, they become asset for me. So why I am saying here itself is, in our accounting, whenever we are recording the transactions in the books of accounts, we have to differentiate between goods and assets. Goods and assets, we have to differentiate. Very, very important thing. Is it clear, students? Next one. Next one, look at purchases. Whenever we purchase goods, then we use the word purchases. Generally, business will purchase goods and assets. No? Business will purchase goods and assets. Purchase of goods, purchase of goods, purchase of assets. These two are two different things. Purchase of goods and purchase of asset. These two are two different things. We purchase goods for sale purpose. We purchase goods for sale purpose. Whereas we purchase assets for usage purpose. Usage purpose. Yes or no, students? Yes. Whenever you purchase goods, in our accounting, we generally use the term purchases. The term purchases. Purchases. Generally, we use the term purchases. Purchases means purchase of goods, unless specifically mentioned. Sometimes they mention purchase of asset. They give you the asset name. Sometimes they give you just purchases. Just purchases. Yeah, I will show you here. Just a minute. Yes. Observe here. Example 3. Example 3. Observe, students. Purchased goods. Purchased goods. Yes or no? Next. Here, purchased furniture. Purchased goods. Purchased furniture. Purchased goods. Purchased furniture. Asset. Both are purchases. But here, there we purchased goods. Here we are purchasing asset. Is it clear? Next one. Observe. So goods may be purchased and assets also purchased. When goods are purchased for resale, then we generally use the term what? Purchases. When the same item is purchased to use in the business to earn profit, it is called an asset. Is it clear? See, for a furniture dealer, furniture is goods. But if the same furniture is utilized in the business for earning profits, generating revenue, earning profit, then it is called asset. Is it clear? So we have to identify which item is asset for us and which item is goods for us. Here, next one. Purchase returns. Sometimes after purchase of goods, if the goods are defective, best example, the online, Amazon, Flipkart, whatever it may be, Mintra, whatever it may be, we purchase goods. Many of the times we return goods. Yes or no, students? Yes or no? Many of the time we return also. First we are purchasing, after that we are returning. So this is called purchase returns. Purchase returns. You people tell me why you return the goods. Generally, if the goods which you have ordered maybe received wrong product, then we return. Or the received product is damaged, then we return. Or because of any other reason also, we return the goods. Here also same. Purchase returns. The other name for purchase returns is purchase returns or returns outward. These are the technical terms, students. Purchase returns, returns outward. Generally, what we return? Goods only, not asset. Suppose I have purchased a building from a person. Is it possible to return it to them? I have purchased a land from a person. Is it possible to return this land? I have purchased furniture unless it is defective. Otherwise, we use it in the business. Yes or no? Generally, purchase returns means goods returned to the suppliers. Clear, students? Next one. Sales. Now, I have purchased furniture. Na? I have purchased furniture. For what purpose? Sale purpose. Sale purpose. Here, for purchases, there are two things, na? Purchase of goods, purchase of asset. Here also, sale of goods, sale of goods. At the same time, sale of asset, sale of goods and sale of assets. Observe carefully. Generally, in the business, sale of goods is a regular activity. Sale of goods is a regular activity because we are doing business now. We purchase goods and we sell goods. It's a regular activity. It is a regular activity. But sale of asset is not regular. Not regular activity. Not regular activity. Do remember, students. It is not a regular activity. Why, sir? Generally, what is the purpose of purchase of asset? Tell me. What is the purpose of purchase of asset? For usage in the business. What is the purpose of purchase of goods? For sale in the business. Yes or no? That's why sale of goods is regular activity and sale of asset is not regular. Suppose I have purchased a furniture. It is damaged or it became old. Then what I will do? I will sell it and I will purchase new furniture. I have purchased a computer for my recordings purpose. Suppose if it is outdated after 1 year or 2 years, what I do? I will sell that laptop or computer, whatever it may be, and I will purchase new one. Na? Yes. So sale of asset is not regular in nature, but sale of goods is regular in nature. Generally, in the business, sales means generally in the business, sales means sale of goods. Generally in the business, sales means sale of goods. Sale of goods, not sale of asset. Now, I will show you here. Go to example 3 once. Go to example 3 once. See, why I am explaining slowly means you need to understand the basic concepts. Once you are strong in basics now, then the remaining can be easily in solve easily. Observe. Sold goods. Sold goods. Next, yeah. Here also sold goods. That's it. Only sale of goods, not sale of asset. Clear, everybody? Yes. Next, look at next concept. You want, you can pause the video and revise one by one. Okay. Now, next, look at sales returns. See, we have seen in purchase returns, we have purchased goods and we returned them to the suppliers. Now, think from customer point of view. Think from customer point of view. Observe here. Okay. Mr. Appu and Mr. Pappu. Appu and Pappu. Okay. Now observe. Appu sold goods. Appu sold goods to Pappu. Follow the arrow. Sold goods. Rupees 1 lakh. Now you people tell me, for Appu point of view, think from Appu point of view, this becomes sales, na? This becomes sales. But from Pappu point of view, now you think from Pappu point of view, it becomes purchases. It becomes purchases. Observe carefully. Yes or no, students? Yes, sir. Next one. Pappu returned some of the goods. Oh, goods returned. Follow the arrow symbol, students. Goods returned 1000. Observe. Pappu has returned goods to Appu. Now tell me, from Pappu point of view, what it is? From Pappu point of view, what it is? They are nothing but purchase returns. They are nothing but purchase returns or returns outward. Now think from Appu point of view, because do remember, students, in accounting we have to think sometimes from Appu point of view, sometimes from Pappu point of view. From Appu point of view, the first one is sales. Pappu point of view, purchases. Now this one, sales returns. This we call it as sales returns. Sales returns or returns inward. Sales returns or returns inward. Now you people tell me. Understood this simple logic? Simple logic. Is it clear, students? Sales, purchase. Purchase returns, sales returns. Clear, everybody? For one person it is receipt. For other person it is payment. Suppose if I am giving 100 rupees to you, this becomes payment from my point of view. From your point of view, it is receipt. Is it clear? Yes. Accounting, we have to think like this. Now, next one. This is sales returns, students. Next, very important concept, transaction. Transaction. Now, observe the same example. Sold. Appu sold goods rupees 1 lakh to Pappu for cash. Let us say for cash. What happened here? Appu has given goods to Pappu and Pappu has paid 1 lakh rupee to Appu. What is happened here? There happened something exchange. Yes or no? Some exchange is happened. Exchange of money or money's worth. I repeat, exchange of money or money's worth. Appu has given 1 lakh worth of goods. Pappu has given 1 lakh rupee cash. Money's exchange of money or money's worth. And this is happened between two persons. No? This is happened between two persons. A transaction means it is an economic event. It is an economic event or economic activity between two persons. Between two persons. Yes or no, students? So there is exchange of money or money's worth. So this is called a transaction. This is called a transaction. Now look at these type of transactions. These type of transactions we have to record in the books of accounts. If you observe in illustration 3, that means example 3, here whatever you find, in example 3, whatever you find, all these are transactions. Now try to understand. Slowly we are entering into the accounting concept. Observe carefully. Whatever you find here, all these are transactions. Means the business entered with, the business deals with outsiders. The business deals with outsiders. Sometimes insider. Insider nothing but proprietor or owner. So this is transaction. Observe carefully. And if you observe, all these transactions are given in monetary terms. 4 lakh, 2 lakh, 15 lakh, 16 lakh, sorry, 15,000, 16,000, 2,500. All these are Measured in terms of money. Observe carefully. Measured in terms of money. See, we purchased goods. We purchased goods. Yes. How much of how much quantity you purchase, that is on one hand, but ultimately what we need is how much of amount, or how much amount you have purchased goods. Tell me. For how much amount you purchased goods, tell me, because money is the medium of exchange. Money is the medium of exchange. Understood or not? So that's why each and every transaction we have to measure in terms of money. To record this transaction in our books of accounts, first of all, we have to measure each transaction in terms of money. Have to measure each transaction in terms of money. So here you can understand, on the back side of coin means the transactions which are not measured in terms of money are not recorded in the books of accounts. I repeat. So we have to first identify the transactions. After identifying the transaction, we have to measure them in terms of money. And the things which is not possible to measure in terms of money, they are not recorded in our accounting books. We don't deal with them in our accounting. Now I am talking from accounting point of view. When you are learning accounts, you think from accounts point of view. In our accounting, only the things which we measure in terms of money we record, which we cannot measure in terms of money we don't record. Important. Next one. Okay, see, look at, a transaction is a type of event which is generally external in nature and can be determined in terms of money. I have given one example for this. Appu sold goods to Pappu for 1 lakh. Here, what is the transaction? What is the exchange? Appu is giving 1 lakh worth of goods. Pappu is giving 1 lakh cash. Okay, I will give you one simple example. Let us say you went to a stationery shop. You have purchased a calculator. What happened there? Is it a transaction or not? Yes, it is a transaction. What has happened there? There exchange happened now between two persons. You have given cash and you received calculator. The transaction. In our day-to-day life, we do so many transactions. We do so many transactions. Yes or no? All these are nothing but actions. Transaction contains action, students. Observe. Transaction contains action. We do some actions. Yes or no, students? Yes. Next one. Observe. Next one. So transactions and events are to be measured in terms of money. Then only we can write them in the books of accounts. And these transactions we measure in terms of money. Yes. Which currency? Ruling currency of the country. Now, I am in India, so that whatever I write in the books of accounts, I measure in terms of rupees. I measure in terms of rupees. Suppose if I am in America, then whatever the transactions I identify and measure in terms of money, I measure in dollars, US dollars. Understood? So we measure the money in terms of the country currency, local currency. Is it clear? Yes. Next one. Next important thing, these transactions are of two types of students. Two types. Observe. Here I will show you. Transactions. All these things we know in our day-to-day life, we are doing the same. Na? We are purchasing so many things. You observe the business people. Okay. See, transactions are of two types. One is cash transaction. One is cash transaction. Another one is credit transaction. Another one is credit transaction. Observe carefully. Sir, what is the meaning of this, sir? Simple, students. I have went to a shop. I went to a shop and purchased some items. Immediately I have paid. Received items, goods, and immediately paid cash. This is nothing but cash transaction. I have purchased goods now, but I said I will give you money after 1 month, is a credit transaction. Understood or not? So in a transaction, if cash is given immediately, cash is given and received immediately, then this transaction is called cash transaction. In the transaction, if the cash is not given immediately, not given or received immediately, is postponed to the future time, means I said I will give you money after 1 month, then these transactions are called credit transactions. Understood? In the books of accounts, in the books of accounts, we record we record both in the books of accounts. Sir, what is the meaning of books of accounts? I will let you know. Wait for some time. So both cash transaction and credit transaction, we record them in the books of accounts. Now observe. So in cash transaction, what happens? We pay or receive cash immediately. In the credit transaction, what happens? First we give or receive the item. Later we pay or receive the money. Is it clear? Yes. Now look at. Observe cash transaction. A business transaction in which cash is paid or received immediately at the time of transaction is called a cash transaction. Simple. The cash transaction is of two types: cash receipts and cash payment. We receive cash or we pay cash. Examples: sold for cash, furniture purchased for cash, cash received from Gopal, whatever it may be. Okay? These are cash transactions. Next one, credit transactions. In a credit transaction, there is no immediate payment or receipt of cash. Immediately, there is no flow of cash. After some time, we either receive or pay the cash. The payment or receipt is postponed to a future date. Yes, simple. Example, goods purchased from Kumar for 3 months credit. We have purchased goods from Kumar for how many months? 3 months credit. And old furniture sold to Pawan for 1 month credit. These are the examples for credit transaction. Next one. Next concept is very, very important, student. So please listen and watch carefully. If you want, you can write a running notes also. See, as a professional student, so always maintain running notes. Okay, it is better to you, and keep this running notes till the completion of your exams, because this will help you to revise the concepts quickly at the time of exams. And don't forget to make your own notes also. Try to make your own notes also. Is it clear, students? Next one. Now come to credit transaction. Credit transaction. What happens in case of credit transaction? Tell me. The flow of cash will not happen immediately at the time of transaction. That means, suppose I am selling goods. Okay, I am taking here the example, same example I am taking. Observe carefully. Yeah, look at. You people also try to draw this. Then you can remember the concept, na? Okay. Now observe. Okay, fine. Now look at. Okay. Observe carefully. Now this time we change names. Okay. Mr. Tom and Mr. Jerry. Tom and Jerry. Okay. Now look at. Mr. Tom sold goods rupees 1 lakh to Jerry. Now tell me. From Tom point of view, it is what? Sales. From Jerry point of view, it is what? Purchases. On credit. What is the meaning of this? Today we are selling goods. That means today we are giving goods to Jerry. After some time on, okay, what I will do is 2 months credit. 2 months credit means today I am giving goods. Let us say 1/1/2024. On 1/1/2024, don't say sir January 1st holiday. Don't say all these things. Okay. On 1/1/2024, Tom sold goods to Jerry for 1 lakh on 2 months credit. 2 months credit means today on 1/1/2024, we are selling goods to Jerry, but we receive amount only on 1/3/2024. Yes or no, students? We receive amount on 1/3/2024. It's a credit transaction. It's a credit transaction. Fine. Okay. Observe. Now, initially, there is no relationship between Tom and Jerry. Initially, there is no relationship between Tom and Jerry. Now there is a relationship. If 1 lakh is paid by Jerry to Tom, then the relation between Tom and Jerry is nothing but seller and buyer. Seller, buyer. Yes or no? Tom is selling goods. Jerry is purchasing goods. What is the relationship here? Seller and buyer. But now observe carefully. This transaction is on credit. Now there is a relationship exists between Tom and Jerry. This relationship is called debtor and creditor relationship. This relationship is called debtor and creditor relationship. Now Tom becomes debtor. Tom will be called, sorry, Tom will be called creditor. Creditor. Tom will be called as Tom will be called as creditor. Jerry will be called as debtor. Jerry will be called as debtor. Observe, students. Jerry will be called as debtor. Now there is a relationship. Which relationship? Debtor and creditor relationship. Now try to understand these points. Very, very important. Look at. From Tom point of view, from Tom point of view, Jerry is debtor. From Tom point of view, Jerry is debtor. From Jerry point of view, you people also write, it is better. Point of view, Tom is creditor. Observe carefully. Is it clear? From Tom point of view, Jerry is debtor. But from Jerry point of view, Tom is creditor. Now the relationship between Tom and Jerry is debtor and creditor relationship. Sir, till what time this relationship exists between these two parties? Till the payment, till the making of payment. Once Jerry pays 1 lakh to Tom, now the relationship closed, ceased. Yes or no? Till 2 months, the relationship between these two parties are creditor, debtor, or debtor, creditor. Now, you people tell me from these two words, what is the meaning of debtor and what is the meaning of creditor? Debtor is a person. Debtor is a person to whom to whom we sold goods on credit. We sold goods on credit and he has to pay amount to us. Creditor. Creditor is also a person who sold goods on credit. Who sold goods on credit. Debtor to whom goods were sold on credit. Yes or no? So don't get any confusion. If you want, you can pause the video and observe this example once again. Is it clear, students? So debtor and creditor. These are the words which we come across in our accounting frequently. Debtor and creditor. Now, I will show you some examples here. Observe example 3. Observe example 3. Yeah. On 12th date, he sold goods to Aravind, 2400. They did not mention whether this is sold for cash or credit. The transaction is given like this. We assume that this is a credit transaction. This is a credit transaction. This is a credit transaction. Do remember. Yes or no? Next. Next one observe. He purchased goods from Amrit. So we have purchased goods from Amrit for 10,000 rupees. It didn't mention whether we have paid cash or not. In this case, it is also considered as credit transaction. Now, the relationship between Ajit, from Ajit point of view, Amrit is creditor. From Ajit point of view, Amrit is creditor. Now, from Ajit point of view, Aravind is debtor, na? Aravind. So, from Ajit point of view, now we are Ajit, na? We have started business now. From Ajit point of view, Aravind is debtor because we sold goods on credit. From Ajit point of view, Amrit is creditor. Why? Because we have purchased goods from Amrit on credit. Yes or no, students? Yes. So try to understand the relationship between debtor and creditor. Here you can find the details of debtor and creditor. Is it clear? The next important word is liability. Liability is nothing but the obligation which we have to pay. The obligation which we have to pay to the outsider. It's a liability for us. Suppose I have taken a loan from bank. I have taken a loan from bank. My liability, na? My liability. After some period of time, I have to pay. There is an obligation on me to pay this liability. So it's a liability for me. At the same time, in our example, Jerry purchased goods from Tom 1 lakh, na? So it's a liability for Jerry because Jerry has an obligation. Jerry has an obligation to pay 1 lakh to Tom. Yes or no, students? So this is a liability. Observe. The financial obligation of an enterprise other than owner's funds. Owner's funds means capital. Capital. Except capital. Remaining whatever the amount we have to pay to the outsiders. That is liability. In simple terms, if you owe someone money or have an obligation to pay for something in the future, that is considered as a liability. Is it clear, students? Next one, investments. This is also another important aspect. Generally, business invest money on assets. That is different. Investing money on assets which are used in the business, that is different. And what about these investments, sir? Suppose in the business, if we have surplus money, this surplus money we invest outside the business. Suppose I have some surplus money of 5 lakhs. I'm doing my business. Already I have purchased some assets in my business. Excess amount I have, that amount I invested in the share market, stocks of Reliance Industries Limited, or in the shares of Reliance Industries Limited. This becomes investment. Or I have invested some money in the fixed deposit, or I have purchased some debentures of the company. These are called investments. Investments. Or I have invested some money on land, real estate, or I have invested some money on building which is used outside, not for the business. Yes, you have purchased a building. Yes, sir. But this building I have given for rental purpose to somebody. Then only it will be called as investment. For what purpose we invest money? To get returns. See, the moment I have invested money in stock market or share market means I will expect some returns. Na? Suppose I have lent some money to my friend or somebody. What I expect? Interest. I have purchased a building and I have given this building for rental purpose. What is my expectation from this building? Rental income. So, from the investment, we expect some returns. That returns may be in the form of interest, dividend, or rentals, whatever it may be. So, this is the meaning of investment. Next, come to another important term is books of accounts. Now, we found the transactions of a business. Look at, where do you record these transactions? The books. Suppose I am teaching, you are writing. Where you are writing? Books only. Here also, all these transactions we write in the books of accounts. Now, suppose I'm thinking that you are maintaining one notebook for accounts class. This book is called accounts book. You are maintaining another book for law subject. That book is meant for law subject, and another book for mathematics or reasoning or statistics, whatever it may be. That means you are maintaining a separate book for a separate subject. Here also same. We maintain separate books for separate transactions. All these are collectively called as books of accounts. Books of accounts. Is it clear, students? Books of accounts. Next one. Now, after this, we come to another important aspect. Now, the meaning of accounting. After understanding, see, we have so many terms to understand, but not now. Slowly, we try to understand one by one. Now, come to the meaning of accounting. Accounting. See, so many people they have given meaning for accounting, but generally accepted meaning of accounting is given by AICPA, American Institute of Certified Public Accountants. In India, we have ICAI, the Institute of Chartered Accountants of India. At the same time, in the US, we have American Institute of Certified Public Accountants. This institute has given Committee on Terminology set up by AICPA formulated the meaning of accounting in which year? 1961. Since then, we are the definition of accounting is same. There is no change. Look at our accounting definition contains various steps. Our whole accounting process they have given in three simple lines. Whole accounting process they have given in three simple lines. That's it. Look at accounting is the art of recording. This is the first phase, recording. After that, classifying. Don't get any confusion. You will not understand this now. Slowly you try to understand. Slowly in this phase wise, step by step, you understand. Don't worry. Just this is the meaning. That's it. Recording. Yes, recording. What is recording? We try to understand later. Classifying. Yes, classifying. What is classifying? We try to understand the next chapter. Next, summarizing. Yes. What is the meaning of summarizing? That also we try to understand. So accounting is the art of recording, classifying, and summarizing in a significant manner, in a proper manner order, and in terms of money. Whatever you record in the books of accounts, you should measure them in terms of money. What you record, transactions and events. What we record, transactions and events which are in part at least of a financial character, nothing but measured in terms of money. Transactions and events must be measured in terms of money, and interpreting the result thereof, nothing but profit or loss, and financial position, nothing but how much of assets, how much of liabilities. The whole accounting process they kept in 3 lines. That's it. At present, you will not understand the meaning of accounting, students, but just this is the meaning of accounting. Slowly, stage by stage. Next chapter, next chapter is journal entries. After that, another chapter is ledgers. After that, subsidiary books. Slowly, you can understand trial balance. Slowly. Now, tell me, possible? Pause the video and write down, read the accounting meaning and write the accounting meaning. Practice. So, accounting is the art of recording, classifying, summarizing in a significant manner and in terms of money. What we record, transactions and events which are in part at least of a financial character, which includes financial character, nothing but measured in terms of money, and interpreting the result thereof, because accounting is a language of business. All the people cannot understand the result of the business. What's the result of the business? Whether your business is earning profit or loss. Next one, what is your financial position? That means how much of assets you are owning, and how much of liabilities you are owing. That's it. This is the meaning of accounting, student. I repeat, you will not understand the exact meaning of accounting at present because it is the starting stage. Slowly you will understand. Now, the meaning of these 3 lines we have presented in a cycling process. That is nothing but, observe, accounting cycle. Accounting cycle. If you listen, if you observe, see, I am showing again Reliance Industries Limited statement of profit and loss. How they arrived this? 42,000 rupees, 42 rupees. How they arrived? It is the result. 42,042 rupees is the crore is the result. At the same time, 9,59,643 crore is the result of the business. How they arrived this? This is not possible in a one step. This is not possible in one step. It is not one step activity. It is a continuous process. It involves some process. See, for everything there is a process. Suppose if I want to eat biryani, to cook biryani, see, I have two options. One, I have to cook biryani in my home. Second, I have to go to a nice restaurant and I have to simply buy it. Suppose if I have chosen first option, I have to cook. For that, there is a process, na? Immediately, if I keep all the items, ingredients which are used in the biryani, and I am keeping here abracadabra, khul biryani, is it possible? No, there is a process, na? There is a process. Here also same. What is your result of business, profit or loss? At the same time, what is your financial position? These two are very, very important financial statements. To get this, to achieve this, we have to follow some steps, sequence of steps, sequence of steps. That two one by one, step 1, step 2, step 3. And all this process is called accounting cycle. It's a cyclic process. Okay, that accounting cycle we are going to understand. Look at first step, identify transactions and events. We discuss again what about transactions and events in the next chapter. Don't worry. Okay, identify the first transactions and events happened in the business. That too, don't forget, which are measured in terms of money. Next one, recording in journal. Immediately after identifying the transaction, record them, write them in a book. That is journal. Why should we write? Otherwise we forget, na? That's why we write. Now look at example 3. All these are what? Transactions which are measured in terms of money. Immediately we have to record them in the journal. That is our next chapter. That is our next chapter. How to record, sir? How do we record these transactions in the journal, sir? That is our next chapter. Okay. Next one. That's why they said accounting is an art of recording. We show our total art in recording. Art means not drawing something. Okay. Next step. Posting to ledger. That is our third chapter. That is our third chapter. There we understand what is this posting. I mean to say here the sequence of steps you have to follow to get the final result. Next step. Drafting unadjusted trial balance. Try to understand this terminology. Just do remember, once we get that chapter now, once we get into that chapter, then you can understand. Okay. First, identify the transaction. Next one, recording in journal. Next one, posting to ledger. Next one, drafting unadjusted trial balance. This is our fourth chapter. Next one, adjustments. This is our look at, this is our we get those things in our 13th chapter. We get those adjustments in our 13th chapter. Okay. Next one, drafting adjusted trial balance. This also we get in 13th chapter. Next one, closing the books. 13th chapter. Drafting financial statements. 13th chapter. Okay. So from 5th to 8th steps now we get 13th chapter. All these things we can understand in 13th chapter. Here students, once financial statements are completed now, again for 1 year these financial statements are completed. Now we have seen the financial statement of Reliance Industries Limited at the end of 31st March 2024. 31st March 2024. This I will discuss. Financial year, the concept of financial year I will discuss soon. Wait for some time, I will discuss. Yeah, they said 2023 to 24. What is this, sir? 23 to 24, 22 to 23. These are financial years. I will let you know. And they are using the word for the year ended 31st March 2024, sir. What is this? Wait, I will let you know. Now only. Now only. Okay. Is it clear, everybody? Yes. Now look at. So this is our accounting cycle. Pause the video and try to read this and try to write each step. Identifying transactions, recording in journal, posting to ledger, preparing unadjusted trial balance, adjustments, drafting adjusted trial balance, closing the books, drafting financials. Financials are nothing but financial statements. Financial statements. That's it. Here, everybody. Next year, we follow the same sequence again. So, this is a cycling process. So, when it gets stopped, when you stop your business, then it gets stopped. So, when it gets started, when you start business, it is also started. When you stop your business, it is also stopped. Yes or no, students? Yes, sir. Now look at next one. Yeah, this is our accounting cycle, students. Next concept, procedural aspects of accounting. What we do accounting, first we gather financial information, like by following these steps. We gather financial information, generate financial information, gather or generate financial information. Second step, we utilize this financial information. We utilize, there are two steps involved. First one, generating financial information. Second one, utilization of this financial information by the decision maker. Simple. See, now I am producing the product, I am manufacturing the product. For whom? There are some people who utilizes this product. Now I have manufactured a mobile phone. I have manufactured a mobile phone. For what purpose I have manufactured? To use it. Who will use it? Somebody will use it. Somebody will use it, yes or no? So nowadays you find so many products. First manufacture it, let them use. Here also same. In accounting, first we generate financial information. We generate financial information. Yes, I have generated this financial information. Next step, I will give these financial statements information to the users, management. Okay, we'll discuss another concept is who will use these financial information. Who are the users of financial information? See, who will use mobile phones? Human beings, sir. Animals will not use mobile phones. No? Who will utilize these financial statements? There are some users. There are some users who utilize this information. That's why we are preparing, man. Otherwise, why we prepare? Logic simple. Yes, sir. Fine. Now move on to next concept. So procedural aspects of accounting. Tell me procedural aspects of accounting. First one, we generate the financial information. Next one, we utilize the financial information. These are the procedural aspects of accounting. Sir, how do we generate financial information, sir? Through this accounting cycle. Through this accounting cycle, we generate financial information. Next step, who will use this financial information, sir? That we will discuss later. That we discuss later, not now. Not now. First, we generate financial information. Later on, I will discuss who will utilize it. Who will utilize it? Is it clear, students? Next one. Next one. Here is an important note point. Observe and read. The growth of the accounting discipline. See, our accounting has increased slowly. It is associated with the development of business. Earlier, there is no this much of business, this much of trade conditions are not there. Uh, Now, by sitting in one place, we can sell our goods, we can provide our services, we purchase goods from various places throughout the world. Throughout the world. That's why our accounting also became complex. See, if you observe here, the financial, this is all annual report. How much of complexity we have in the preparation plus understanding this financial information. Very carefully. Why this complexity increased? Because there is a development in the business. So our accounting is closely associated with the development of accounting. Clear? That to understand accounting as a field of study for universal application, it is best identified with the recording of business transactions and communication of financial information about business enterprises to facilitate decision making. Nothing but these two steps. Clear? So, accounting aims to meet the information needs of rational and sound decision makers and thus is called the language of business. I already said there are so many people who utilize this financial information. When it comes to the second step, now using the financial information, then you can understand the second point and third point. Time being, just do remember because in the first class or second class itself it is not possible to understand the whole concept of accounting student. The only thing you can understand is this accounting cycle. So here you should understand, oh, means the to get the result of the business profit or loss or financial position, I have to follow these many steps. This much you can understand now as per my knowledge. See, when I am a student now, so even I don't get the overall idea of this accounting immediately because the terminology which we use and what is the purpose of preparing these financial statements, all these things now slowly you understand. Once you involve in the subject by passage of time, class by class, chapter by chapter, subject by subject, slowly na, so you get the knowledge. I hope you understood, students. So that's it for today's class. We meet again in the next video with the next chapter, that is journal entries. So here you can do one thing, just go through the first chapter basics once again from examples and the activities, all these things, and don't forget to read this terminology once again because this will help you in the next chapter for recording transactions in the journal, book, and accounting cycle. Don't forget this accounting cycle. We follow each step in the accounting cycle separately. Separate chapter, journal, separate chapter, ledger, separate chapter, trial balance, separate chapter, adjustments to preparation of financial statement, separate chapter. So please keep this in your mind. Clear, students? So that's it. We meet again in the next class. Till then, bye bye, everybody. Hello, students. How are you all? I hope you are doing well. In the previous videos, we have discussed about basics of accounting. We have discussed these three examples now. So in the first two examples, we have calculated profit easily. But for the third example, see, for the third example also, we can calculate profit, but it takes some time. But if you follow the procedure given in the accounting cycle, then it becomes easy for us. So here the concept of accounting comes. Thereafter, we discussed the human being activities, economic and non-economic activities. After that, concept of business. It's a repeated process. See, business is not one-time activity, student. Business is not one-time activity. Do remember. Suppose I have a car and I sold this car to somebody. Is it a business activity? No, it is not a business activity because I am selling car only for one time. Suppose if you take second hand car dealer, what is his business? He will buy second hand cars and he sells second hand cars. It is a repeated process. So then only we call it as business. So we can do business in three ways. One, manufacturing. We can manufacture the product and sell it. Second, we purchase the product from a manufacturer or wholesaler, distributor, whoever it may be, and we sell it. Third one, we provide services like us. Yes or no? Next one, we have discussed profit and wealth maximization. After that, we have discussed some terminology, that is entity, capital, goods, drawings, assets, purchases, purchase returns, sales returns. What is the meaning of transaction? This is very, very important, student. In our entire accounting journey, we talk about the transactions only. Whatever happened in the business, all those are called events, happenings. In the business, from morning to evening, there are so many things will happen, but each and everything we will not enter into our books of accounts. We enter into our books of accounts only those things which are measured in terms of money. Let us say, for example, an employee is recruited in the organization. It is a happening, it's an event. Will you record this in the books of accounts? No, we don't. Why? Because it is not possible to measure in terms of money. But if you pay salary to the same employee, then we record it in the books of accounts. Why? Because we have paid salary, na? So it is measured in terms of money. Yes or no, students? Yes. So in the business, there are so many things will happen, but we don't record all of those things in the books of accounts. We record only those which are measured in terms of money, which changes our financial position. Yes or no, students? Yes. So first we have to identify those things which are to be recorded in the books of accounts, and we don't record except transactions and some events. I'll discuss about events. Wait for some time. Except these two things, we don't record anything in our books of accounts. Is this clear, first of all? Okay. Next, we have discussed cash transaction. Means the cash is immediately paid or received at the time of transaction itself. Credit transaction, the payment is postponed to the future date after 1 month. Depends on the credit period granted by our seller. Next one, we discussed the debtor creditor relationship. When we sell goods on credit, then the debtor and creditor relationship exist. That also we have discussed. So you people try to remember this example, students. Don't forget. The example is very important. Is it clear, students? From Tom point of view, Jerry is debtor. From Jerry point of view, Tom is creditor. Don't forget this relationship. Next one. And liability, investments, books of accounts. After that, we have discussed the meaning of accounting. So meaning of accounting you can understand after completion of some chapters. After completion of some chapters, maybe till the completion of final accounts of sole proprietor, then you can understand the meaning of accounting. Next, here we have provided some space for your note making, so you can write important points. Next, we have discussed accounting cycle. So in example 3, we can calculate profit, but if you follow this accounting cycle, then it is easy for us to calculate profit. These are the various steps involved in the accounting cycle. So our next chapter, second step is nothing but our next chapter, journal. Third step, ledger. Fourth step, trial balance. Next four steps, final accounts. Is it clear, students? After that, we have discussed procedural aspects. One is generating financial information. What we are doing now, we are generating financial information. After that, we provide this information to the users. Means users of accounting information. We can call them as users of accounting information. There are some people who will utilize our accounting information. That's why we are generating the financial information. If you observe, in the previous class, I have shown you annual report of Reliance Industries Limited and annual report of Infosys. So they have prepared this annual report. This is useful. This is used by somebody. Who will use this information? We discuss slowly. Is it clear, students? Yes. Now we go to our next chapter, that is journal entries. Do remember, students, this chapter I will discuss slowly, step by step, one by one concept, because I will spend some time. I will invest, not spend. I will invest some time on making this to understand this chapter to you, to make you understand this chapter. Is it clear? You people also have some patience and try to understand this chapter, because this chapter forms basic basis for other chapters. The whole accounting depends on journal entries. The whole accounting depends on journal entries. Do remember, students. Is it clear? And that too, this is our first step in the accounting process. Is it clear? Yes. Now look at. So here I have given some learning objectives of this chapter. You can go through this. Okay. So in this chapter, we discuss the first concept, that is objective of business. See, if you ask me, sir, what is your objective of business? I have so many objectives in my mind. Means, so I have to become number one in the market. So I have to grab more number of customers in the market. So I have to run my business in the next 50 years. I will be the number one. Like this, we have so many objectives. But so different businesses will have different objectives. But the common objective for any business is to earn profit. To earn profit. So here the question comes, how much profit I am earning? Every common objective of any business is to earn profit. So here the business question itself, how much profit I am earning? Yes or no? Every businessman will question how much profit I have earned, because I am doing business now. How much profit I have earned, and what is my financial position after doing this business? How much of assets I have owned, and how much of liabilities I have to pay? So these two questions will be asked. Look at, the basic questions would have been to be answered is, what is the result of business? I have done with, see, you have taken coaching for 6 months and you have written your CA foundation exam. Everybody is interested. You interested, and your parents and your faculty member and your friends, relatives, so many people are interested in knowing the result. Here also same business. If my one of, see, I am doing business. One of my friend is asking, you are doing business now. How much profit you are earning? What is your result of business? There are no students. Yes. So this will be answered by determining whether it has made profit or loss. Okay. Next one. What is the position of resources acquired and used for business purposes? To start business, we have invested some amount now, capital, or sometimes we borrow money from banks or money lenders, or credit is granted by suppliers. Yes, these are called resources. How these resources are utilized in the business? Understood, students? So how are these resources financed? Means I have purchased asset. I have purchased asset. To purchase this asset, from where you got the amount? I have purchased an asset now. So to purchase this asset, from where you got the funds? Is it from capital or from loan? Suppose I have purchased a car worth of rupees 10 lakhs. Now my family members or my friends or even my mother will ask, how did you get that 10 lakhs rupees? Sir, no students. Are you able to follow this? I have purchased a car of 10 lakhs. Car purchased. For how much? 10 lakhs. What is the cost of car? 10 lakhs. Now everybody will ask, where did you get this 10 lakhs rupees? Now what is my question? I have my savings. That's why I have purchased 10 lakhs rupees I have paid for purchase of car. My own funds. My own funds. Own funds are borrowed funds. Borrowed funds. Yes or no, students? If the total 10 lakhs is out of my savings, then total amount is my own funds. Yes or no? Or if the total amount is borrowed amount, then total becomes borrowed funds. Or like this, I have 2 lakhs rupees. I have 2 lakhs rupees my savings, and remaining 8 lakhs rupees is borrowed from bank. Borrowed from bank. Is it clear, students? This is nothing but financed. This is nothing but financed. How you have financed to purchase car? 2 lakhs rupees own funds and 8 lakhs rupees borrowed funds. Is it clear, students? Yes. Next one. Where do we funds come from? Where do the funds come from? Means here finance means I have purchased a car 10 lakhs rupees. Yes or no? Now next question, where do the funds come from? 2 lakh rupee own funds. Nothing but capital. The business we talk about capital. 8 lakhs rupees borrowed funds. Or no, students? Now you people tell me 10 lakhs is equal to 2 lakhs capital less 8 lakhs borrowed funds. Observe, the worth of car 10 lakhs, the worth of car 10 lakhs is equal to my capital. To finance this, I have invested 2 lakhs capital plus liability, because I have an obligation to pay this 8 lakhs now. I have an obligation to pay this 8 lakhs rupees later. Now you people tell me, car value of 10 lakhs is equal to exactly capital 2 lakhs financed plus liability 8 lakhs. Now if you observe, we have seen the annual report of Reliance Industries Limited. Assets, total assets are equal to liabilities. Equity plus liabilities or capital plus liabilities. How? Like this only. Like this only. If you can understand this now, you can understand whole accounting. Very carefully. This is called accounting equation. This is called accounting equation. Is it clear, students? Next one. Get the next concept. The next concept is double entry system. Sir, what is the meaning of double entry system? Here we have transactions. No? Here we have various transactions. Now all these transactions we have to record first. All these transactions we have to record in the books first. Sir, can I record these transactions as per my opinion or as per my wish? No, students. And how do we record these transactions in the books? Can I write like this as it is? No, students. We have to record the transactions in such a manner that by following a systematic approach, by following a systematic approach, that systematic approach is nothing but double entry system. Double entry system means, to put it simple, to record all these transactions in the books of accounts, you have to follow a systematic approach. That systematic approach is nothing but double entry system of accounting. That systematic approach is nothing but double entry system of accounting. Yes or no, students? So understanding this double entry system is very important. Sir, what this system says? This system says as, see, simple, students. Everything we know. Look at purchased furniture. Purchased furniture rupees 10 lakhs. Purchased furniture of rupees 10 lakhs. Yes or no? Yes. So it is a transaction or not, first of all? Yes, sir. It is a transaction. Why? Because some amount is involved, no, sir. Some amount is involved, no, sir. Super. Now tell me what happened here. Can you tell me what happened here? Sir, what happened, sir? We have given 10 lakhs rupees cash and we have received furniture. And is this furniture worth of 10 lakhs or not? Yes, sir. The furniture worth it is 10 lakhs, sir. The same thing is said in the double entry system. I will give you one more example. Suppose you have went to your nearby shop, grocery shop. You have asked 10 rupees Kit Kat chocolate. 10 rupees, okay, 20 rupees or 25 rupees. 25 rupees Kit Kat chocolate. First of all, is it a transaction? Purchase of Kit Kat chocolate rupees 25. Is it a transaction? Yes, sir, it is a transaction. Why? Because you are giving cash 25 and you are receiving 25 rupees worth of chocolate. Will you get 50 rupees worth of chocolate? No, sir, only 25 rupees worth of chocolate, sir. Okay, what is happening here? You are receiving 25 rupees worth of chocolate. You are giving 25 rupees cash. Yes or no? Yes. Okay. So we went to the same grocery store. We have purchased grocery items. Suppose total bill is 10,000 rupees. What is happened here? We have paid 10,000 rupees and we received 10,000 worth of groceries. Yes or no, students? Yes, sir. Is it a transaction or not? Yes, sir, it is a transaction. And we went to a car showroom and we have purchased a car of rupees 10 lakhs. Is it a transaction? Yes, sir, it is a transaction. What happened here? I have paid 10 lakhs rupees cash and I received 10 lakhs worth of car, sir. Yes. Now you people tell me, by observing this, by observing these transaction, what is happening? Each transaction, there are two aspects. Each transaction, there are two aspects. Is first aspect is receiving aspect. First aspect is receiving aspect. Next aspect is giving aspect. This is what happening in any transaction. Every transaction, this is what happening. We are receiving something and in return we are giving something. What we are receiving here? We are receiving furniture, students. What we are receiving? Furniture. And what we are giving? Cash we are giving, sir. Or suppose if the same transaction is on credit, will you pay cash as on now? As of now? No, sir. We have to pay cash. We have to pay cash. But initially, what we do, we write to whom the cash is payable. Initially, we write to whom the cash is payable. Observe carefully. This is what said in the double entry system. So, as per double entry system, they said every transaction has two aspects. One is receiving, another one is giving. Another one is giving. The same they said in a different manner. They said debit aspect and credit aspect. Debit aspect and credit aspect. The same I have discussed in this manner. Receiving, giving. Sir, what is debit credit? Wait for some time. Wait, we discuss. Now tell me what double entry system. The summary of double entry system is nothing but what? Every transaction has two aspects. Every transaction has two aspects. One is receiving, another one is giving. See, we know very well now. Double entry system they are saying, but we know that if I pay 10 rupees, 10 rupees, I will get 10 rupees worth of chocolate. If I pay 10 rupees, I will get 10 rupees worth of pen. If I pay 500 rupees, I will get 500 rupees worth of calculator. If I pay 10,000 rupees, I will get 10,000 worth of mobile phone. If I pay 1 lakh, I will get 1 lakh worth of mobile phone. Yes or no, students? Yes, this is what double entry system says. Understood? Yes. So double entry system recognizes these transactions and records the transaction in the form of debit and credit. In the form of debit and credit. So what is this debit? I will discuss. Wait. So I hope everybody knows this language, binary language. Everybody knows binary language. Nothing but what? Computer language. Computer recognize whatever the data you give to the computer recognize with the 0 1 binary language. Yes or no, students? So it recognizes it with two letters, that is numbers 0 1 binary language. Yes or no, students? Is it clear, students? So computer recognize anything, whatever the input you give to the computer, it takes the input into in the form of 0 1. The same manner, whatever the input you give to the accounting system, whatever the input you give to the accounting system, it takes the input as debit and credit. Input as debit and credit. This is the language of business, debit credit language. This is binary language na 0 1. Now this is debit credit language. Debit and credit, these are the two words which we use in the accounting only to classify the receiving aspect and giving aspect. There is no specific meaning for this the words debit and credit. But so many people will give different meanings for debit and credit. Those are different. In our the whole purpose of debit and credit in the accounting system is to classify the two aspects into debit and credit. One aspect debit, another aspect credit. That's it. Receiving aspect, giving aspect. Yes or no, students? So every transaction has two aspects. One is receiving, another one is giving of equal amount. So I get 10,000 worth of, sorry, 10 lakhs worth of furniture and I will pay 10 lakhs worth of cash. Yes or no, students? Yes. So debit is equal to credit. Debit is always equal to credit. Why? Because we receive the same worth exactly what we are giving. Observe here, 10 lakhs worth of furniture received, 10 lakhs rupees cash paid. Understood this concept? That's why debit is always equal to credit. That means receiving aspect is always equal to giving aspect. The amount involved is always equal to receiving aspect is always equal to giving aspect. Observe, students. If you can understand this transaction, every transaction is like this. Now observe. First, what we have to do now, after identifying the transaction, purchased furniture rupees 1 lakh. It's a transaction. Immediately what we did, we have identified what is receiving aspect and what is giving aspect. Furniture received, cash paid. Now, to the furniture, just suffix the word account. Suffix the word account. Cash also suffix the word account. That's it. So what is the meaning of account? Wait, I will discuss. Just now tell me, first step is what? Identify the transactions. After identifying the transaction, now observe, identify receiving aspect and giving aspect. Receiving aspect what? Furniture received. Now furniture account. Giving aspect is what? Cash paid. So cash account. So in our accounts na all are accounts only. Accounts, furniture account, cash account, machinery account, building account, capital account, drawings account, expense account, income account, sales account, purchase returns account, sales returns account. All we use account. Suffix is account. Sir, what is this account? Next topic is account only. Is it clear? This is what double entry system says. Sir, what is the age of this double entry system? It is almost 500 years old. 500 years old. double entry system. Whatever the double entry system we are using now, 500 years old. Sir, accounting also 500 years old? No. Accounting is so many years old. But this accounting is presented in a systematic manner by person. His name is Luca Pacioli. His name is Luca Pacioli. He presented double entry system in a systematic manner. That means accounting in a systematic manner. He is not invented accounting. He is presented accounting in a systematic manner. Now, whatever the techniques that he has discussed, all those techniques we are following now. And in the previous classes, we have also discussed accounting is very complex. Accounting has become very complex now. Why? Because there is a stringent development in the business, tremendous development in the business. When the business, the accounting is simply associated with the business students. If there is no business, there is no need of any accounting. Is it clear? Now look at. So this is the concept of double entry system, students. So you can just go through this. Look at Luca Pacioli, an Italian friar and mathematician. He published the first book of double entry system. Okay, the first book that it describes double entry counting system. What is that book? Everything about arithmetic, geometry, and proportions. Sir, you are saying the mathematics name, sir. In that book only he mentioned a double entry system. About a double entry system. If you have time, just refer that book. If you can understand, it is okay. Otherwise, you listen the classes. Next step. So double entry system we can define as a system which recognizes and records both aspects. Both aspects means receiving, giving. In technical terms, debit aspect, credit aspect of a transaction. The double entry system has proved to be a scientific and complete system of accounting. Even our Companies Act 2013 prescribes that every business should follow double entry system. That's it. Is it clear? This is regarding double entry system. Next one, concept of account. I said now we discussed the concept of account. To understand the concept of account, I will give you a simple example. I will give you a simple example. Observe, students. Yes. Now he is a family man. We give a name to him. He is Mr. Family Man. Mr. Family Man. Okay. He is earning a salary of rupees, let us say 1 lakh. He is earning salary 1 lakh. This is his income now. So cash received 1 lakh at the end of month. Now out of this 1 lakh, he has to incur so many payments. You people know very well. Now look at one by one. Look at one by one. First, he paid rent. Let us say rent paid 10,000. Rent paid 10,000. After making payment of rent, how much amount left? Remaining amount left 90,000. Next, he paid for groceries. Let us say some 15,000 rupees groceries he paid. After making payment of rent and groceries, how much amount left with him? 75,000 left. Next, he is paying all miscellaneous expenses like power bill, recharges, TV recharge, all those things we put together, miscellaneous expenses put together 10,000 rupees. After making this, what is the amount left? 65,000 rupees. Yes or no? Check it once again. 75 minus 10, 65 balance. After making payment of all these things, what is the balance left finally? 65. Very important thing, he paid school or college fees of his children. Okay. Let us say that is something 20,000 rupees. What is the balance left, sir? 45,000 rupees. Yes or no? So now his next payment is some savings, LIC, like LIC, Provident Fund, or any in like any other savings. So total are 20,000 rupees. Remaining amount left 25,000 rupees balance. Observe this example, student. So he is a family man. He has earned a 1 lakh rupee salary and he made all these payments. Finally, how much balance he has? 25,000 rupees. It's a layman language. It's a layman language. Now, what we do? In our accounting, the same information is presented in a different manner. Same information, but we present in a different manner. Now, look at how do we present this information. Very simple, students. Observe carefully. First, what we do in our accounting, what we do is the page is divided into two columns. The page is divided into two columns. This is what our presentation. And this looks like English letter T, na? English letter T. Now we give a name. Generally, in our English, what we do, how we divide this left hand side, right hand side. This is left hand side, and this is right hand side. But in our accounting, in our accounting, we say the left hand side as debit side. Left hand side as debit side. Right hand side as credit side. Observe carefully. Left hand side in our accounting we are calling technically debit side. Right hand side technically we are calling credit side. To indicate it is debit side or credit side, we use two simple words DR, not doctor. DR means debit. And credit side we indicate simply CR. CR means credit side. Understood? In our accounting, what we do, we present every information in this T-shape format. Left hand side, right hand side. Left hand side is called debit side. Right hand side is called credit side. To indicate it is debit side, we write DR, the word DR. To indicate it is credit side, sorry, debit side, DR, credit side, CR. Observe, students. Is it clear? Now, on left hand side, first we write how much salary he received. He received salary 1 lakh. This is on one side. He received salary 1 lakh, one side. So what we do is we write various payments that he has made on another side. Look at. So what are the various payments made? 10,000 he paid. Next 15,000 also paid. Next he paid more 10,000 rupees. Next 20,000 rupees he paid. Next another 20,000 rupees he paid. These are his payments, na? Yes. Now, if anybody asks, how do you get this 1 lakh rupee? How do you get this 1 lakh rupee? Or how did you get this 1 lakh rupee? We say, yeah, I received 1 lakh rupee from salary. I received 1 lakh rupee as salary. Yes or no, students? Yes. That's why I have written salary 1 lakh. Suppose if you receive rent 10,000 rupees, then I will write rent also. Suppose if you receive any amount as interest, then I will write interest 10,000. If anybody asks, how did you get this amount? Have to say the source. Now, in my pocket, I have some 1 lakh rupee. At present, nothing, but I say 1 lakh. So, if anybody asks, how did you get this 1 lakh, man? Then I have to say source also. Yeah, Today is first, na? So I got salary. Yes or no, students? Yes. Now, on the other hand, I have paid various amounts. I have paid various amounts. If anybody asks, hey, why are you paying 10,000, man? Why did you pay 10,000 rupees? Wait. Rent purpose. For what purpose? Rent purpose. Uh, okay. What about 15,000 rupees? I have paid for groceries. I have paid for groceries. Super. Then what is the next payment of 10,000 rupees? Means miscellaneous expenses. I have paid for miscellaneous expenses. Next, what about 20,000 rupees? I have paid for school fees or college fees. Acha. Whatever remaining 20,000 rupees, yes, I have paid for LIC, all provident fund or any other savings. Acha. So all these are your payments, na? Yes, sir. So you received 1 lakh and you have made payments of these many. Now how much of balance left? In our calculation, balance left is 25,000. In our calculation, in our calculation, the balance left is 25,000 rupees. Now, sir, how do we calculate balance in this format? Simple, students. Very simple. Left hand side, that is debit side. What is the total amount? 1 lakh. Total. Credit side also you total. Credit side also you total. 10,000, 15,000, 10,000, 20,000, more 20,000. So this much total is 75,000. To get 75,000 total. Salary received how much? 1 lakh. Payments made how much? 75,000. What is the balance left? 25,000 rupees balance. Now both sides. Well, the same information. I did not change any information. Same information, but I have presented in a different manner. This is called count. Yes. This is called account student. We give a name for this account. This account shows which information? Cash information. This account shows which information? Cash information. I received cash 1 lakh. I have paid cash for various payments and balance left is 25,000 rupees. Now both sides equal. This is nothing but account. In our accounting, we create like this so many accounts. Cash account, furniture account, purchases account, land and building account, plant and machinery account, sales account, rent account, salary account, grocery account, miscellaneous expenses account, school fees account. Everything is account only. Now, you people tell me this account shows which information? Cash information. And finally, this account shows what? Balance. 25,000 rupees balance of this cash account. What is the meaning of this 25,000 rupees? We have finally 25,000 rupees left as cash. This indicates 25,000 rupees cash left with me. Yes or no? Yes. This is the concept of account. More than this, nothing. So, first of all, it is a T-shaped format. contains two sides, left hand side, right hand side. Left hand side is called debit side, right hand side is called credit side. To indicate it is debit side, we write the word dr. To indicate it is credit side, we write the word cr. And debit side, see, writing anything on the debit side of account is called debiting, and writing on the credit side of the account is called crediting. That's it. Debit, credit. That's it. In our accounting, debit credit means that's it. Simple. No other concept of debit and credit. Here, everybody, look at now. So, if you want, you can write the information here. Right. Next. See, concept of account. Observe. An account is expressed as a statement in the English letter T. Yes or no? One horizontal line, one vertical line. It has two sides. Yes. So, all those things very clear. Now, this is, in other words, the account is defined as a summarized record of transactions at one place. Means here I have recorded various transactions. See, salary received, one transaction. Rent paid, another transaction. Groceries, amount paid for groceries, another transaction. All these are individual transactions. So what I am doing, all transactions I am placing in one place relating to cash. Relating to cash. Yes or no? Now observe. Summarized record of transactions at one place relating to a person or an asset or anything. In this example, this account is relating to what? Cash. This account is relating to what? Cash. Yes or no? Like this, we create so many accounts in the accounting subject. Here, everybody, now look at. See the format of account. And here it is an important point. When a business transaction occurs, first what we have to do? We have to identify how many accounts are affected. How many accounts are affected? One has to identify the account that will be affected by it. See, I have given previously one example, that is purchase of furniture. Purchase of furniture rupees 10 lakhs. It is a transaction. First, what we do, we identify how many accounts affected. Means furniture received, one account affected. Cash paid, another account affected. So two accounts affected now. Means each transaction minimum two accounts will be affected. This is fundamental rule, blind symbol. In each transaction minimum two accounts will be affected. Sir, more than two accounts affected na sir? Yes. When sir? We discuss slowly. Is this clear? So what is the important point here? In each transaction there is minimum two accounts. So here you can write as a note point. In each transaction in each transaction minimum two accounts will be affected. Minimum two accounts. Yes or no? Receiving one, giving one. Sometimes more than two accounts also affected. That we discuss slowly. Clear, everybody? Yes. Now come to the concept of debit and credit. Already we have discussed. There are no specific meanings for debit and credit. These are the two words which we use in our accounting just to classify this aspect is debit and this aspect is credit. That's it, students. More than that, there is no meaning. Formally, accountants use the term debit to denote an entry on the left side of an account. Okay, salary I have written left side. It is called debit. Remaining I have written on the credit side. It is called credit. That's it. There is no other meanings of any debit and credit. Next, to denote an entry on the credit side, we use the word credit. Is it clear? Right. Now, what we did, tell me. First, we have identified. You can write this in a separate page. Identified transactions and events to record in the books. Purchased furniture. Okay. Second step, identified accounts involved in each transaction. Accounts involved in the each transaction. So minimum how many accounts will get affected? Two. Have to identify what are those two accounts. Second step. Next one. Now observe source document. Source document means what, sir? See, you are saying you are a businessman. You are a businessman. You are saying that I have paid 10,000 rupees. Observe here. So it is individual case. It is in individual case. When it comes to business now, when it comes to business, for every single rupee, we need a document, evidence. Now I am saying, I'm a businessman. I am saying to you, you are an accountant. Sir, I have paid a rent of rupees 1 lakh, sir. Where is the evidence that you have paid 1 lakh rupee rent? Sir, I have paid 10,000 rupees power bill, sir. Uh, where is the evidence that you have paid 10,000 rupees power bill? Sir, I have paid some telephone bill 1,000, sir. Acha, super. Where is the evidence that you have paid 1,000 rupees telephone charges? Tell me. So, when it comes to business, for even single rupee, for each rupee, we need an evidence. For receipt also we need evidence. For payment also we need evidence. Cash comes in. What is the evidence that you received this cash? Cash goes out. What is the evidence that you have paid cash? This is what we do in accounting. Source document. For every receipt, for every payment, for every transaction, we need source document. Source document. What is the evidence? Nothing but evidence for the transaction. Okay, you purchased furniture. For how much amount you paid? You paid 10 lakhs. Yes. Where is the evidence? Sir, we receive purchase invoice, na sir. Bill we receive, na sir. Yes. That is nothing but evidence. That is nothing but evidence for purchase of furniture. Yes, sir. No, students. Yes, sir. So, if you want to record any transaction in the books of accounts, first you need evidence, source document. Is it clear? Yes. Look at. Now our next concept comes source document or source documents. So in a business, there are so many transactions will happen. For all transactions, we have to generate one source document. By utilizing this source document, we make record in the books of accounts. Is it clear? Yes. Now look at. Transactions are recorded in the books of account based on evidence, that is source document. Here I have given some examples. I have given some examples of transactions and what is the source document for it. Observe. Purchase of goods. You said you purchased goods. What is the source document for these? Nothing but inward invoice. Inward invoice. You people write down. I have given space to write. You have to write with your own handwriting. Okay. Inward invoice. Nothing but purchase invoice. See, if you go to DMart and if you purchase goods, they issue invoice. Na? Small shops they don't give you, but reasonable shopping malls they give you compulsorily bill. Now here I have given a format of purchase invoice. Observe invoice. Here we enter date, invoice number, bill to. Even you purchase any goods from online, Amazon, Flipkart, you receive invoice, na? Yes, that's nothing but evidence for the transaction. Bill to, shipping to, and here you find description of goods. How many various items you have purchased and quantity of items purchased. What is the price of each unit and what is the total amount. After that, if any applicable tax rate is tax rate, sales tax, now it is GST, and subtotal, shipping charges, total amount. At the end, generally they put their signature, digital signature or nothing, whatever it may be. The same invoice is for purchaser, it is purchase invoice. For seller, it is sales invoice. I am selling goods now, so I am issuing this invoice to you. I'm a seller. I am issuing invoice to you. This becomes sales invoice for me. You are a buyer. You are receiving the invoice now. It is purchase invoice for you. Same invoice, two roles. One invoice, two positions. From seller point of view, it is sales invoice. From buyer point of view, it is what? Purchase invoice. Yes or no, students? Yes. Now look at, from seller point of view, it is outward invoice or sales invoice. Purchase invoice, sales invoice. Okay. Next, purchase returns. We return goods now. At the time of returning goods, we have to prepare an document. That document is called debit note. That document is called debit note. So what is this debit note? We discuss slowly. But at the time of purchase of at the time of returning goods which we have purchased earlier, we prepare a document, that is debit note. Get debit note format. This is just format, student. Organization to organization, the format may be different. So debit note. Debit note number, date, okay, your company name, and to whom we are returning goods, and what are the various items you are returning, their HSN code. See, when you get a bill from DMart, there you find for every item, most of the items you get a code number, harmonization code number. Yes or no? So HSN code, nomenclature. N means nomenclature. Okay, quantity, how much quantity we have purchased, and rate, tax, and final amount. See, terms and conditions. All these details contains in the debit note. We are returning goods to the supplier now. We are returning goods to the supplier. So we have to mention what are the various items you are mentioning and what is the reason for returning goods, and their quantity, rate, amount, tax amount. All these details we have to mention. This is our debit note. Is it clear, note, students? So who prepares debit note? Tell me. Buyer. Buyer prepares debit note. Next one, sales returns. We sold goods now. We sold goods and customers are returning goods. Then immediately we prepare credit note. Immediately we prepare credit note. The credit note format is get. This is a credit note format. Is it clear? So credit note form, credit note number, to whom this credit note is sent. Credit note details, observe. Nothing but buyer is returning goods now. Buyer is returning goods. Now, as a seller, we have to inform to the buyer. Okay, buyer, we have received goods. We have received goods, and we have to mention the date of receipt. Okay, on this date we received goods, and these are the details of receipt of goods. The buyer returned 100 units, but seller received only 90. Now you people tell me what we do. We mention 90 units, 10 units we don't know. Ultimately we received how many units? 90. So all these details we have to mention in this note, credit note. Is this clear, students? Next one, cash receipt. Suppose you have paid fees. You have paid fees in your school. Immediately what you get? You receipt. You receive one receipt, that is cash receipt. This is the evidence for payment of. For us it is payment. For school it is receipt now. So this is the evidence for receipt. Look at cash memo, cash receipt. So this form is different from organization to organization, purpose to purpose. Yes or no, students? Yes. Next one, cash payment. So this is cash memo, cash receipt memo. And here we prepare vouchers. In case of cash payment, we are making payment, we prepare vouchers, payment vouchers. They looks like this. Look at payment voucher, the voucher number, on what date we paid the amount. Because I already told you, for every transaction in the business we need source document. How much amount paid, payment method, whether paid cash, UPI, or check, or any other mode, internet banking. Okay, next, to whom the amount is paid, and amount in words, for what purpose the amount is paid. Suppose the amount is paid towards salary, or amount is paid towards rent, or any other purpose. That purpose we have to mention, and authorized by, and received by. So received by the person who received the amount, authorized the person who paid the amount. Yes or no, students? Yes. So this is vouchers. Here, next one. Next transaction. Cash deposited in bank. Cash deposited in banks. Nowadays, see, whatever the at the end of the day, whatever the amount collected in the business, that is deposited in the bank. If you remember, when you went to the bank to deposit money, you fill a slip now, that is called pay in slip. You are filling the form, that means you write the date of deposit, your name, account number, denomination of the amount, all these details we fill, and we deposit money along with this. We give money along with the pay in slip to the teller. Okay, count whatever who are the person who sit in the cash counter. That is nothing but evidence for cash deposit in the bank, but pay in slip. So the pay in slip looks like this. We may call it as deposit slip or pay in slip, and this becomes the evidence for the transaction cash deposit. This part is given to you. Left side part is given to you. Right side part is held by the bank. Right side part is evidence for bank that customer deposited money. Left side part is the evidence for customer that he deposited money into bank. Clear, student? Yes. So these are the various source document. Without source document, it is not possible to record any transaction in the next concept. To get, so we have identified the transaction, and we also identified how many accounts involved in the transaction. Each transaction minimum 2 accounts gets affected. Next one, we also ready with the source document. We also ready with the source document. Our next step is what? Now this transaction we record in the books. Before that, we have to do so much of work. What is that, sir? Before that, I have given a simple example to make you understand how to identify the accounts in the transaction, each transaction. To get identifying accounts involved in each transaction. Observe. Now you just pause the video, and identify what is receiving aspect and what is giving aspect. So here I have given 6 transactions. Just pause the video first, do this activity. Then after, I will discuss. Make it fast. Okay. I hope you have completed this activity. Now check. Now check whether the things which you have written is correct or not. Look at first one. Ajit started a business with a capital of 4 lakhs. Okay. What is receiving aspect? Cash. What is receiving aspect? Cash. So we suffix the word cash account. Okay. Now giving aspect. The organization is not giving. We are not giving anything. When you are not giving anything, then immediately think who is the giver. Either business has to give or somebody will give the business. So who is the giver? Ajit. Who is Ajit? Proprietor, owner. So in the place of Ajit, we use the word capital. In the place of Ajit, we use the word capital. So when you write capital account, it is nothing but it is representing owner, proprietor. So directly we will not write Ajit account. So we write capital account. This capital account represent Ajit, owner. To remember. So in this transaction, 2 accounts involved. Receiving cash, we are receiving cash. And in return, what you are giving? You are not giving anything. But to whom the amount is payable? The same 4 lakhs we have to pay to Ajit, capital, after some period of time. When? After closing the business. Who is the giver? Tell me. Then you are not giving anything, then identify who is the giver. Who is the giver? Ajit. In the place of Ajit, what we write? Capital. Capital account. Capital account represents whom? Ajit, proprietor. Is it clear? Next one. He purchased goods for cash. Purchased goods for cash. Tell me, what is receiving aspect? Goods, sir. So, goods account. What is giving aspect? Cash, sir. So, cash. Yes or no? But here what we do is, in the place of goods, in the place of goods, we use the word purchases. In the previous classes, I have discussed already. Whenever you purchase the goods, utilize the word purchases. Whenever you purchase the goods, utilize the word purchases. Now tell me, purchases account nothing but purchase of goods. Indicates goods purchase. Now tell me, what is receiving aspect? Aspect goods. But in the place of goods, which account we use? Purchases account. What is giving aspect? Cash. So how many accounts involved? Two accounts. Super. Next one. He sold goods for cash 80,000. He sold goods for cash 80,000. What is receiving aspect? Cash, sir. So cash account. What is giving aspect? We are giving goods now, sir. Yes. So goods account. But in the place of goods, what we use? Simply sales. We use sales account. Is it clear? Sales account nothing but sale of goods. So when you purchase goods, purchase account. When you sell goods, sales account. Sir, why don't we use goods account? We get confusion. Why, sir? At the time of purchase also, we are using goods account. At the time of sale also, we are using goods account. Why? To differentiate purchases and sales. We use separate accounts. When you purchase goods, purchases. When you sell goods, sales. Next one, he purchased furniture 25,000. What is receiving aspect? Furniture, sir. What is receiving aspect? Furniture, sir. What is giving aspect? Cash, sir. Cash account. Yes or no, student? Yes. Sir, here why we are using furniture in the place of we can, why don't we use purchases, sir? Purchase, the word purchase is used only for goods. But here furniture is asset. Furniture is asset. Do remember. Here everybody. Next step. He sold goods to Aravind 24,000. Sorry, 2,400. He sold goods to Aravind 2,400. Yes or no? Yes. What is receiving aspect, sir? Kasha, are you receiving anything? First of all, tell me, is it cash transaction or credit transaction? Is credit transaction. What about this sales? Is cash transaction. We have already discussed in case of cash transaction. In case of cash transaction, we receive cash immediately. But in case of credit transaction, we will not receive cash immediately. Like this, we have to analyze students. The whole accounting depends on this chapter only. The moment you give which account debit, which account credit, the remaining work becomes easy. The biggest task for accountant is this: analyzing, identifying which account involved and which account is debited, which account is credited. That is important. So it is a credit transaction. In case of credit transaction, what happens? We will not receive cash immediately. Yes or no? Then what is the receiving aspect? When you are not receiving anything, identify who is receiving. I repeat, when the business is not receiving anything, identify then who is receiving. Who is receiving? Aravind is receiving. Aravind is receiving. Yes or no? Aravind is receiving, sir. So Aravind account. Aravind account. Next, giving. Giving. Are you giving anything? Yes, sir. We are giving sales, sir. That means goods. So sales account. Is it clear, students? So Aravind account, sales account. Aravind account, sales account. Is it clear? Is it clear? Sixth one, he purchased goods from Amrit. He purchased goods from Amrit. First of all, identify whether it is cash transaction or credit transaction. Sir, there is no specific indication that we have paid cash. The second transaction is cash transaction because they specifically mentioned for cash. But last transaction, there is no specific indication that we have paid cash. Means here the supplier name is given. How to identify then? Observe, the supplier name is given. So identify this is a credit transaction. In case of credit transaction, what happens? We will not pay cash or receive cash at the time of transaction, but payment or receipt is postponed to the future date. Okay, fine. Identify. What is receiving aspect? Goods, sir. We are receiving goods now. So purchases account. In the place of goods, what we use? Purchases. Then what you are giving? Actually, we have to give cash. But at present, we are not giving any cash. Okay. Then who is the giver? Amrit. Who is the giver? Amrit is giving credit to us. Amrit is giving credit to us. Yes or no? We have to pay amount to Amrit after some period of time. That's why we are recognizing his account. At present, we are not paying any amount to Amrit. In the future, we have to pay amount to Amrit. Till that time, we recognize Amrit account. Is this clear? Like this, in each transaction, we have to identify first what are the accounts affected. What are the accounts affected? Observe. Yeah. Here, in the important point, we discussed each transaction will affect two accounts. That's what we are identifying here. That's what we are identifying here. Yes or no, students? Get identified accounts involved in each transaction. Okay. Now, what are the accounts involved? Cash account, capital account. Purchase. In the first transaction, how many accounts involved? Two. What are those two accounts? Cash and capital. Second transaction, how many accounts involved? Two. Purchases account, cash account. Third transaction, cash account, sales account. Fourth transaction, furniture account, cash account. Fifth transaction, Arvind account, sales account. Sixth transaction, purchases account, Amrit account. Like this, each transaction, you people should identify the transaction accounts involved. After identifying the accounts, now we have to analyze. Fourth step is very, very important, students. Analyze which account debit and which account is credit. Very, very important. Very, very important. As we discussed already, under double entry system, we record the transaction as debit and credit. We record the transaction as debit and credit. Now, out of the identified accounts, which account is debit, which account is credit? Is cash account debit or capital account debit? Is cash account credit or capital account credit? Account is debited or credited? Here the question comes. To answer this question, or this question will be answered in the next class. Is it clear, students? So what you have to do for this class is, now observe whatever we discussed in this class. Try to relate these concepts with the previous classes. So try to relate the previous classes with the current class, or current class with the previous classes. Then only we get continuous knowledge. And don't forget these steps. We are following these steps. Is it clear, students? So in the next class, we try to understand how we analyze the transaction, means accounts, which account debit, which account credit, that we discuss in the next class. Till then, bye bye, students. Hello, students. How are you all? I hope you are doing well. In the previous video, we have discussed how to identify the accounts involved in the transaction, plus some other content also, that is the objective of business and double entry system and concept of account. So for understanding concept of account, here I have given an example also. So don't forget this example, right? Next, we are trying to identify the accounts involved in the transaction. We have also discussed about source documents. Okay, now look at. Already here we have discussed the 6 transactions now. Now below that write down one more transaction. Write down 7th one. Paid cash. Paid cash to Amrit. Paid cash to Amrit. 10,000. Actually, how much amount we have to pay to Amrit? 10,000. Now we are paying that 10,000 rupees to Amrit. This is also a transaction. Earlier credit purchase it is. Now we are making payment to Amrit. What is the entry we record? First of all, identify accounts involved. What is receiving aspect? Actually, we are not receiving anything, but earlier we received goods, na? Yes. So at that time, we have identified that amount to be payable to Amrit. Yes or no, students? Now this time, earlier Amrit is the giver of goods. This time, Amrit is the receiver of cash. Amrit is the receiver of cash. So Amrit account. Who is receiving? Business is not receiving. Who is receiving? Amrit is receiving. Then what business is giving? Cash. We are giving cash. Observe carefully. Clear, students? Next one. Also write the 8th transaction here. You people, you can write in the notebook. Received cash from Aravind. 8th one. Received cash from Aravind. Why should we receive cash from Aravind? Why? Because earlier we sold goods to Aravind on credit. Earlier we sold goods to Aravind on credit. How much? 2,400. Now we receive the same 2,400. Tell me, what is receiving aspect? What is receiving aspect? Tell me, students. Cash. So cash account. What is receiving aspect? Cash. So cash account. Next one, what is giving aspect? At present we are not giving anything, but already we have given goods. Now this time who is the giver? This time who is the giver? Aravind. So Aravind account. Observe, students. Aravind account. Is it clear? So, earlier we sold goods to Aravind. Then how many accounts created? 2. Aravind account and sales account. Now this time Aravind is paying cash. So how many accounts created? 2 accounts again. One is what we are receiving, cash we are receiving. What we are receiving, cash we are receiving. And what we are giving, we are not giving anything now. Then immediately what you have to think, then who is the giver? I repeat, we have to check what we are giving first. If we are not giving anything, then immediately we have to think that who is the giver. Now Aravind is the giver of this cash, 2,400. So cash account and Aravind account. Like this, we have to identify accounts involved in the transaction. Accounts involved in the transaction. Now, after identifying accounts involved in the transaction, next step is what? Out of these 2 accounts, one account is debited and another account is credited. I repeat, out of these 2 accounts, one account is debited and another account is credited. Now the question comes, which account we debit and which account we credit? Yes or no, students? For that, what we have to do is, we have to follow some approach. That concept is nothing but analysis of a transaction. Analysis of a transaction is nothing but identifying which account is debit and which account is credit. I repeat, analysis of transaction is nothing but identifying which account is debit and which account is credit. If you can identify which account is debit and credit, that's it. Now we start recording that transaction. Tell me here what are the steps we have followed. First one, we identified transactions and events to record in the books. First we should think, we should identify that which transaction I will record in the books. Second, out of the transaction, in the transaction, how many accounts involved? Minimum to minimum two accounts. One is receiving, another one is giving. After that, do you have any source document for this transaction? Identify. Yes, sir. I have source document, sir. Super. Next one, analysis. Analysis. That means out of the identified accounts, which account is debit and which account is credit. That is the important aspect. Once this aspect is completed, next immediately what we do is we record the transaction. We record the transaction in the books. Record the transaction. Record the transaction in the books. Record the transaction in the books. This is nothing but journal. This is nothing but journal. So to go to fifth step, first we have to complete fourth step. Fourth step is very, very important, student. Okay, now look at. Yes. To analyze the transaction, we have two approaches. One is accounting equation approach. Another one is traditional approach. Whatever the approach you follow, you get the right answer. To put it simple, to go to our home, we have so many roads, na. So we can go to this side, or we can come from that side. Yes or no? But whatever the route you come to your home. This is also same. Whatever the approach you follow, the ultimate answer is same. What is the ultimate answer? Which account debit and which account credit? You may ask, sir, then why we have to follow two approaches, sir? Why don't we follow only one approach? Yes, you can follow. Sir, which approach we are following nowadays? Means accounting equation approach. Because it becomes easy for us to identify and to make this account. So this approach is very easy, and this approach we are following nowadays. So then what about traditional approach? The name itself is indicating that traditional approach. And the other name for accounting equation approach is nothing but modern approach. We may also call it as modern approach. Modern approach. Yes or no, students? Yes. So first we discuss traditional approach, then we come to modern approach. Now, classification of a transaction. Traditional approach. Under which approach? Traditional approach. Here what the classification says is, first, yeah, here we have different accounts, no? Observe carefully. Here we have different accounts like cash account, capital account, purchases account, cash account, sales account, furniture account, cash account, Aravind sales, purchases, Amrit cash. Like this we have different accounts, now different transaction, so many transaction. Out of them we identify different accounts. Now under this classification, what they are saying is, first, do one thing, classify or categorize all the accounts into two broad categories. Categorization of accounts. Observe carefully, students. All the accounts we are categorizing into two broad categories. That is, first one, personal account. First one, personal account. Next one, impersonal account. Next one, impersonal account. Personal accounts and impersonal accounts. All the accounts. See, to put it simple, When we take admission into intermediate, I will give you this example. When we take admission into intermediate, so intermediate we have various groups now: MPC, BPC, CEC, okay, MEC, HEC. Like this, we have different groups. So all the intermediate students, they are grouped into various categories. All students who are studying MPC, one group; CEC, one group; BPC, one group; MEC, one group. So we are classifying, we are categorizing all the intermediate students into different groups now. Here also same. What we are doing? We are classifying or we are categorizing all accounts into two broad categories. One is personal accounts, another one is impersonal account. Again, impersonal accounts we classify into real accounts, real accounts and nominal accounts. Observe carefully, students. Real accounts and nominal accounts. Sir, how we are classifying these? To put it simple, see, we are doing a business. Just visualize a business in your mind. A business will deal every day. Business will deal with persons. Na? So many customers will come to our business, and so many suppliers. We purchase goods from so many suppliers. Okay, generally business deals with the customers. That means persons. At the same time, business will purchase assets. That means business will purchase assets. Next one, in our regular basis, business will pay some expenses. Business will incur some expenses. Business will generate some revenue, and business may incur some losses, and business may get some gains. I repeat, in everyday business, what we do is we deal with so many people. Ultimately, business deals with the persons only, peoples. Out of them, some are credit transaction and some are cash transaction. When it is a credit transaction, ultimately we recognize persons in our books. In our example, we have seen when we sold goods to Arvind, what we did, we have recognized Arvind account in the books. It is nothing but business is dealing with persons. Next, when we purchase goods from Amrit, we recognized Amrit account in the books. Sorry, when we pay, na? Okay, sixth one. Amrit account in the books. Is it clear? Like that, business deals with persons. It is credit basis. And business will purchase assets. And business will incur some expenses, gains, losses, and some incomes also. Based on this, we are classifying all the accounts into two broad categories. First one is personal accounts. Next one is impersonal accounts. The name itself is indicating personal accounts. Means accounts relating to persons. Accounts relating to persons. Again, these personal accounts we classify into three broad categories, students. Natural person. This classification you should understand. Natural persons and artificial persons. Artificial persons and representative person. Representative personal accounts. Observe carefully. I repeat, personal accounts we can again classify into natural persons, artificial persons, and representative persons. Sir, natural persons means what? Persons who are created by God. These are natural persons. All individuals, irrespective of gender, they are called natural persons. Next one, artificial persons. Nothing but all business names, firms, firms, and business organizations. And business organizations. These are, suppose, let us take for example, State Bank of India. State Bank of India is an artificial person. APSRTC. APSRTC. APSRTC is SBI. APSRTC or TSRTC. These are artificial persons created by God. Sorry, created by law. Artificial companies, all companies and proprietorship firms, all are created by law. Yes or no? So these are called artificial persons. Next one, representative person. Actually, we have seen in one example, that is Ajit started a business with a capital. What we did here, instead of writing Ajit name, what we have written? Capital. Instead of writing Ajit name, what we have written? Capital. And this capital account represents Ajit, na? Ajit is person. Ajit is person. But which account we are writing? Capital. So this capital account represents Ajit. That's why this capital account is called representative personal account. At the same time, anything is withdrawn by Ajit from the business. Ajit is proprietor. Anything is withdrawn by Ajit from the business, then we create drawings account. Then we create drawings account. And that drawings account also nothing but representative personal account. Representative personal account means what? We create one account. This represent a person. This represent a person. That a person may be natural person or artificial person. That a person may be natural person or artificial person. Observe carefully. So, for example, capital account and drawings account, etc. Slowly you can understand. First, look at the classification. All accounts we can classify into personal accounts and impersonal accounts. Personal, impersonal. Personal accounts we can classify. Persons may be natural person, artificial person, and representative personal accounts. Natural persons means like Ram, Ravi, Sham, Sita, Geeta. All these are personal, natural persons. Artificial person means created by law. Created by law. Representative personal accounts means we create one account. We create one instead of person name. I repeat, instead of creating person name, we create another account, but it represent that person. In our example, Ajit is proprietor. Instead of creating Ajit account, what we did, we created capital account. And Ajit has withdrawn some goods from business. Then we create a drawings account. Who is the receiver? Ajit is the receiver. But instead of writing Ajit name, what we do, we write drawings. So drawings account represent Ajit. Capital and drawings both are representative of Ajit. That's why these accounts are called representative personal accounts. Don't worry students, slowly you can understand. Okay. Next one, impersonal accounts. Impersonal accounts means, to put it simple, the accounts which are not personal accounts. Means it is not natural person. If the account is not natural person or artificial person or representative, then all the remaining accounts are impersonal accounts. Means not natural, not personal accounts. So this we can classify into real accounts and nominal accounts. The real account means what, sir? Accounts relating to assets. Accounts relating to assets. Suppose we have purchased a building. We have purchased a building. Receiving aspect is what? Building. Building is what? Asset. Then that account comes under real account category. Next, purchase of furniture. Purchase of furniture. Furniture is what? Asset. Receiving aspect, furniture purchased. Then furniture account is real account. Next, Ajit started business with 4 lakhs. What is receiving aspect? Cash. Cash is asset, na? So this comes under real account category. Like this, what we have to do is, after identifying the accounts, cash account, capital account, purchases account, cash account, now your next step is identify this account comes under which category. Now cash, first we take cash. Cash comes under which category? Persona, impersona, imperson sir, impersonal sir. Again under impersonal account, which category? Reala, nominala. Real means what? Relating to asset na. So cash is asset na, so it is real account sir. Now come to capital. Come to capital. Tell me, capital is person or imperson? Person sir. Under person again natural, artificial or representative sir. Whatever it may be, what we write is personal account. This comes under personal account. Like this, after identifying the account, you have to next identify this account comes under which category. This account comes under which category? Is it real, person or nominal? Real, person or nominal. Okay. Now come to nominal accounts. Nominal accounts relating to expenses. Nominal accounts relating to expenses, losses, incomes and gains. I will give you one example. Salary paid. Salary paid. Rupees 10,000. Salary paid rupees 10,000. Can you tell me how many accounts involved in the transaction? First of all, try to understand. What is receiving aspect? We have received services from the employee. We have received services from the employee. For their services, we have paid. We are paying cash now. So receiving is services. For these services, we are giving a name salary. For these services, we are giving a name salary. So salary account. You have paid 10,000 to the employees? Yes, sir, I have paid. For what purpose you have paid? We received services and I am paying cash, sir. So we are giving a name for this salary. Next, what is giving aspect? Cash, sir. Cash. Now, next step is what? Classify which type of account it is. Means, is it a personal account or real account or nominal account? Sir, salary is expense for us. Salary is expense. It is not personal account. It is not real account. Salary is expense, sir. So, it comes under nominal account. It comes under nominal account, student. Classify like this. Sir, cash. Cash is not person. Cash is asset. So all assets comes under real account category. All assets comes under real account category. So this is what you have to classify. This is what transaction. This is transaction. This is what, how many accounts involved or accounts involved. Accounts involved. Next one, this is what? Type of account or nature of account. Nature of account. Yes or no, students? Yes. Once you identify whether it is nominal account or real account, next we follow some rules. Rules of accounts. Rules of accounts. Sir, what is this rules of accounts, sir? That we try to understand. Here, 4-step process. First one, identify the transaction. Second one, identify how many accounts involved. Third one, source document anyway we identified. See, when you are writing entries in the exam, now at present we don't need any source document, but practically we need source document. Third step, nature of account. After that, rules. After that, rules. These rules we try to understand now. Is it clear, students? Yes. Now look at. So try to observe this analysis once again. Categorization of accounts or classification of accounts. Personal accounts, impersonal accounts. Personal accounts again we can classify into natural, artificial, representative. Next, impersonal account, real accounts relating to assets. Nominal accounts relating to expenses, losses. Suppose goods destroyed by fire. Goods destroyed by fire. This is loss for us. So comes under nominal account. Yes or no, students? We sold goods. We sold goods. It is income na. Next, interest received. It is income na. Dividend received from companies. It is income na. Discount received. It's a gain for us. So after identifying the account, next identify it comes under which category? Nature of account, either personal or real or nominal. Now observe. Just pause the video once and look at this flow chart. Clear everybody? Now look at it. Observe here. For recording, these transactions are classified into three groups. First one, transactions relating to persons. Majorly these are credit transaction. Credit transactions. Okay. Next one, transactions related to properties and assets. Nothing but real accounts. Yes or no? Real accounts. These are personal accounts. These are personal accounts. Next, transactions relating to expenses, losses, incomes and gains. These are nothing but nominal accounts. So based on the above category, now we are classifying the accounts. Observe, personal accounts, real accounts, nominal accounts. That's it. Only three classifications: personal, real, nominal. Any account you create, that should be comes under either one account: personal, real, nominal. Okay. Next concept. Look at the personal accounts concept. Personal accounts relate to persons, means maybe natural persons, individuals or firms, business names, companies, trade receivable and trade payables. Nothing but debtors and creditors. Look at the example, Ram and Co. It is business name. Okay, customer. The account of Javeri and Co. is business name. Okay, supplier account. Next, personal account is further classified into three categories. Observe. First one, natural person. Next one, artificial person. Next one, representative personal account. These things now you keep on revising. A personal account, real account, nominal account. Personal account again comes under personal account, again classified into natural person, artificial person and representative person. Like this you keep on revising, student. Next one, first come to natural person. The term natural person means persons who are creation of God. Okay, natural persons. Examples, look at Ram account, Asha account, Sham account, Kumar account, okay, Kirti account, whatever it may be. Suppose I have purchased goods from Shobhan. I have purchased goods from Shobhan. It's a credit transaction now. So we recognize Shobhan account in our books. We recognize Shobhan account in our books. Clear everybody? Next one. Artificial persons all comes under creation of law. For business purposes, business entities are treated as separate entities. Okay. They are recognized. Suppose now Reliance Industries Limited. Reliance Industries Limited is a artificial person. Infosys, we have seen annual report of Infosys. Infosys is artificial person. Like that, you just visualize various businesses. DMart is artificial person. Okay, so like this you just visualize as many business names as possible and identify whether they are natural persons or artificial persons. Examples, look at government, companies, whether private or public. Again, we discuss in company accounts, clubs, cooperative societies, association of persons, All these are artificial persons. Clear everybody? Next, representative personal accounts. Already I have discussed this. So we create an account which represent a person, that may be natural person or artificial person. They are not in the name of any person or organization, but they are represented as personal account, like capital account, drawings account. These two examples now you will understand later. Means outstanding liability account or prepaid account. To put it simple, outstanding liability means what? Suppose 1st April to 30th April, 1 month completed. 1 month completed. For this month, I have to pay salary to my staff. Salary to my staff. If I pay salary exactly on 30th April, then what entry I will record? Salary account debit to cash or bank account. Suppose if I pay any amount, salary on next month, let us say I am paying 5th May. 5th May, what I am doing is I am paying salary. But you people tell me month is completed on 30th April. So here there is an obligation on the business. There is an obligation on the business that they have to pay salary on 30th April. But actually they paid salary on 5th May. So as on 30th April, what I do is if I pay salary, na, what is the entry? Which account I create? Salary account and cash account. But here salary is not paid on 30th April. So that what I'll do is I will create a new account called outstanding salary. Means as on 30th April I have to pay salary but not paid. So it's a liability for me. So that liability account is nothing but what? Outstanding salary. This outstanding salary represent employees, na? This outstanding salary represent whom? Employees. The moment I create outstanding salary account, it is representative. It represents employees. Na? So slowly you can understand, students. So just pause the video and try to read all these things once again. It's classification and personal accounts. Next, come to impersonal accounts. Accounts that are not personal are classified as impersonal account. These we can classify into real accounts and nominal accounts. Real accounts means accounts relating to all assets. Accounts that relate to assets of the firm but not debt. Debt means liability. Only assets, not liabilities. Is it clear? For example, accounts regarding land, building, investments, fixed deposits, cash in hand, cash at bank, etc. are real accounts. Nominal accounts, accounts that relate to expenses, losses, gains, and revenue, etc. are called nominal accounts. If the identified account is expense for business, or if the identified account is loss for the business, or if the identified account is gain or income for the business, then that account comes under which category? Nominal account category. Is it clear, students? Example, salary, interest paid, commission received, etc. See, the net result of nominal account is nothing but profit or loss of the business. I repeat, all the nominal accounts means expenses accounts. See, revenue less gains. Nominal account only? Yes, sir. Minus expenses plus losses. Observe. Revenue plus gains minus expenses plus losses will give you profit or loss. So the net result of these expenses, incomes, gains, losses, nothing but profit. And this profit we give to the proprietor. That means simply we add to the capital account of proprietor. Who will enjoy the profit or loss? Who will enjoy the profit? Owner. And who will bear the loss? Owner. So that's why nominal accounts are temporary. Nominal accounts are temporary. Temporary means these accounts will be closed at the end of the year. These accounts will be closed at the end of the year to know the profit or loss of the business. Is it clear, students? Now, just go through all these things once again. Then we enter into the rules of accounting. Rules of accounting. Make it fast. Yes, I hope you have revised these concepts, students. Next, we try to understand the concept of golden rules of accounting. Golden rules of accounting. See, whether an account is debited, whether an account is debited or credited, that depends on these golden rules of accounting. You may ask, sir, who have framed these rules? We only framed these rules. We means accountants. Sir, how these rules have been framed, sir? I will give you one simple example which you can understand. Now look at. I hope everybody, most of the people, they played cricket. They played cricket. That too gully cricket. Gully cricket. Observe. Yes. This is our playground. This is our playground. Right. Here, team A and team B are going to play. Now, as the space is very limited, here we put some rules. What is the first rule? First rule, if the ball directly hits the wall, then it is 6. First rule, if the ball directly hits the wall, then it is considered as 6 runs. Okay. Second, if the ball hits the wall with one step, then that is considered as 4 runs. Third condition, if the ball directly goes outside the wall, then it is considered as out. Sir, no. Who will bring that ball? Okay, by going outside the wall. Yes, sir, no, students. Next, if ball hits the ground with 2 to 3 steps, then it is considered 2D. 2D na 2 runs. I hope most of the students, they have played this type of gully cricket. I have played. Next one, if you can take single runs na, you can take. If it is possible, okay, single run. These are the rules. Now you people tell me, who have framed these rules? These two teams only. These two teams only have framed these rules. And if any new player comes into the team, we instruct the same rules to the other players. Yes or no, students? That's what we are doing. These rules have been already framed. The same rules we are following generations together. Generations together. Do remember? And the same rules will be followed in the next generations also. And even in the World Cups or international cricket also, they have framed the rules. Yes or no, students? If ball goes beyond the boundary line, then it may be considered as 6 or 4. Yes or no? Within the ground. Within the ground. If you want, you can. If you take runs, then you can. Yes or no, students? If ball hits the wickets, then it is considered as out. Out. If the ball goes directly to the that boundary line, then it is considered as 6 or 4. Who have framed these rules? We have framed all these rules. and we are following the same. Here also we have framed these golden rules of accounting. We have framed these golden rules of accounting just to mention or just to classify which account is debit and which account is credit. Just to classify which account is debit and which account is credit. Yes or no, students? You can understand these golden rules of accounting concept now. Over. Okay. So we have three types of accounts. One is personal account, real account, nominal account. Sir, when a personal account is debited and when a personal account is credited. Okay, to this, I will give you two examples. Golden rules of accounting. Here observe, look at the material ones. Take this example. In this example, observe the fifth entry, the transaction. He sold goods to Aravind. Here, Aravind account is created, na? Aravind account is created. Look at Aravind account. Now, first, you people tell me, is this Aravind account comes under personal account or real account or nominal account? Personal account or real account or nominal account? Sir, Aravind is person, sir, so that it is personal account, sir. Is personal account. Means either Aravind is a receiver, some benefit from the business, or Aravind is a giver of benefit to the business. So immediately what you have to see, check whether Aravind is receiver of any benefit, receiver of benefit from business. You have to check, or Aravind is giving any benefit to the business. Like this, you have to classify immediately. We have identified Aravind account. Now, Aravind account is what? Personal account. Now, think that, is this Aravind receiver of any benefit from business or giver of any benefit to the business? Now, look at the transaction. He means Ajit. Ajit sold goods to Aravind. That means Aravind is the receiver of benefit. He is receiving benefit from the business without paying any cash. He will pay cash after some time. He will pay cash after some time. So that here Aravind, the receiver of benefit. Aravind is receiver. Aravind is receiver of benefit. If any particular person is receiver of benefit from the business, then his account is debited. His account is debited simply. Observe carefully. His account is simply debited. His account is debited. That's it. If Aravind is receiver of any giver of any benefit, if Aravind is giver of any benefit to the business, then his account is credited. His account is credit. That's it. Over. These are the simple rules. Aravind, your personal account, na? Yes. Say, are you receiver or giver? Sir, I am receiving some benefit from the business, sir. Okay, your account is debit. Go. Aravind, next question. Aravind, which account you are? Sir, I am personal account, sir. Okay, tell me, are you receiver or giver? Sir, I am giving benefit to the business, sir. You can check the source document, sir. Acha, then okay, your account is credit. Go, that's it. Simple logic. Next step. We take Amrit account here now. Amrit account. Amrit account also personal account na. Amrit account also personal account na. Now immediately we check whether the Amrit is receiver of benefit or giver of benefit. Receiver of benefit or giver of benefit. Here we see from benefit point of view. Something he is giving benefit to the business, or something he is receiving benefit from the business. Now, in our example, Amrit is giving benefit to the business. Na, he purchased goods from Amrit. He purchased goods from Amrit. Here, Amrit is giving credit period to the business. Immediately, we are not paying any cash. Here, Amrit is giving benefit to the business. So, his account. Now, tell me, is he receiver or giver? Sir, he is giver, sir. He is giver. So, his account credit. His account credit. That's it. Over. Here our duty is what? The identified account, whether it is we have, after identifying the account, now next step, classify whether this account is debited or credited. Whether this account is debit or credit. Observe, here Aravind account we have debited, but Amrit account credit. Why? Because Aravind is the receiver of benefit from business. Amrit is the giver of benefit to the business. That's why Aravind account debit, Amrit account credit. I hope you got some clarity here. Next one. Next one. This is regarding personal account, student. This is regarding personal account. Now this rule you can apply to any personal account. Only thing you which require is, yes, the identified account is personal account, sir. Super. Now think, see that whether he is the receiver or giver. Receiver, sir, so debit. Giver, sir, credit. Yes, sir, no, students. Next one. Now come to real account. Come to real account. In our example, we have created some cash account here. We have created cash account. Now you people tell me, is this cash account real account or not? Yes, sir, real account, sir. Immediately check whether asset, cash is asset now. Asset comes in or goes out. Comes in means cash is coming into our business from outside. Goes out means cash is going from the business. Cash is going from the business. Yes or no? Yes. So asset comes in or asset goes out. Simple rules. Very simple rules. Na? If any asset comes in, debit. If any asset goes out, credit. Yes or no, students? If any asset comes in, debit. If any asset goes out, credit. Over. Now you people tell me, cash comes in or goes out? Sir, cash comes in, sir. Debit. When cash comes in, debit. When cash goes out, credit. In the place of cash, you may write any other asset. Building comes in, yes, sir, debit. Building goes out, yes, credit. Furniture comes in, debit. Furniture goes out, credit. Machinery comes in, debit. Machinery goes out, credit. Like this, you just practice. Any asset comes into your business, that is debited. Any asset goes from your business, that is credited. This is regarding real account, student. Now come to nominal account. Come to nominal account. Nominal account means we have four different types of accounts now: expenses, losses, incomes, gains. Nominal account comes, Nominal accounts means there are four types of accounts: expenses, losses, incomes, gains. Now look at, if the identified account is expense or loss, then simply that is debit. That account is debit. If the identified account is income or gain, simply that account is credit. Yes or no? Now observe once. Suppose I have identified salary account. I have identified salary account. Now you people tell me, salary account is expense, loss, income or gain. Sir, salary account is expense for us, sir. Expense for us. Now, expense now. Expense means nominal account. Expense means nominal account. Yes, sir. Then nominal account rule is what? All expenses debit. All incomes and gains credit. Observe carefully. So these are the rules, golden rules of accounting. These are the golden rules of accounting. Any accountant, you or me, any accountant, previous generations, next generations, all they have to follow, all of them should follow these rules only. These rules only. Yes or no, students? Yes, sir. So go through this concept once again. Repeat: golden rules of accounting. It is personal account. Now check whether the person is receiver or giver. If he is receiver of benefit from the business, his account debit. If he is the giver of any benefit to the business, his account is credit. Next, real account. Real account means all accounts of properties, assets. If any asset comes in, debit. If any asset goes out, credit. Nominal account. Here we have four different types of accounts: expenses, losses, one category; incomes, gains, another category. If the identified account is expense or loss, then debit. If the identified account is income or gain, then credit. Simple. Now go through these ones. We solve some examples. We solve some examples. Look at students. Over. Now come look at steps we try to understand once again. Steps to be followed. Possible? Please make a note of it. Steps to be followed before recording the transactions, before recording the transactions in journal book. Steps to be followed before recording the transactions in journal book. Clear? Now first step is what? Identify the transactions. Identify the transactions to be recorded. Okay, with proper source document. With proper source document. Yes or no, students? Yes. This is the first step we have to do. Second step. Second step. Identify accounts involved. Accounts involved in the transaction. Accounts involved in the transaction. Transaction. In the brackets, write down minimum two accounts. Minimum two accounts. Yes or no, students? Already we have completed second step. Third step, identify the nature of account. Identify the nature of account involved. That is how, whether it is personal account, whether it is personal account or real account or nominal account. Yes or no, students? Identify the nature of account involved, that is personal or real or nominal. Next step, recall the golden rules of accounting. The golden rules of accounting. The golden rules of accounting. So the same we can call it as debit credit rules. Debit credit rules. We also call the rules as debit credit rules. That means whether the account is debit or credit. For this we have two approaches now. Accounting equation approach and second one is what? Traditional approach. Which approach we are following now? Traditional approach. Don't forget. Under traditional approach, all the accounts are categorized into three broad categories. One is personal account. Next one is real accounts. Next one is nominal accounts. Golden rules. If it is personal account, check whether it is receiver or giver. Receiver debit, giver credit. Next one, real account. What you have to check whether asset comes in or goes out. Asset comes in, debit. Asset goes out, credit. Next one, nominal account. Check whether the account is expense or loss. If it is expense or loss, then debit. If it is income or gain, then credit. Over. Recall the rules. Next step. Record the debit account and credit account in journal. Yes. After identifying which account debit and which account credit, our next step starts with the journal, and this is our important step. Fifth one. So we have completed in our journey these 4 hours or 5 hours of journey. That is first 4 steps. Source documents, identifying the transaction with source document, and how many accounts involved. After that, nature of account. After that, we understood the golden rules of accounting. Next step is to record in the journal. So what you do is, so first let us revise. That means you people revise till first point to eighth point. Ninth point. First point to ninth point. After, sorry, 10th point. After that we come to concept of journal. After that we come to concept of journal. Now what is your duty? Tell me. Refer first point to 10th point. Then we come to concept of journal. Is it clear, students? Look at the golden rules of accounting and don't forget to write the examples which I have provided. These will help you to understand the concept later on, right? So that's it for this video, and we meet in the next video. Till then, bye bye everyone. Happy learning. Hello students, how are you all? I hope you are doing well. The previous lectures we have started a new chapter, that is journal entries. In this chapter we have discussed about the objective of business, double entry system, and concept of an account, Okay, with some example. Don't forget that family man example and source document. I have seen the images of source document also. Next, right, we have also understood how the accounts are identified. The accounts involved in the transaction are identified. This is also we have discussed. And after that, whether the identified account is debited or credited, for that we have to first analyze the transaction. For that we have two approaches: accounting equation approach and traditional approach. We are discussing about traditional approach. Under the traditional approach, all the accounts are classified into or categorized into personal account, real account, and nominal account. After that, we discussed personal account again classified into natural person, artificial person, and representative personal account. Next, impersonal accounts are classified into real account and nominal account. Now, after that, we have discussed their rules. So, rules of account is nothing but what? Whether the identified account is a personal account, then account is debited or credited. For that, what you have to see, whether the particular person is receiver of any benefit from the business or giver of any benefit to the business. If he is a receiver, then his account is debit. If he is the giver, his account is credit. Next one, real account. In when if the identified account is a real account, then we have to check whether any asset comes into the business or any asset goes out from the business. If any asset comes into business, then that account is debited. If any asset goes out from the business, then that account is credited. After that, we have discussed nominal account. Nominal account, if the identified account is expense or loss, then that account is debit. If the identified account is income or gain, then that account is credit. Okay, students. After that, we have discussed the we steps we have to check before recording any transaction in the books of accounts, that is journal. First, we have to identify whether which transactions we have to record in the books of accounts. After that, each transaction each transaction has two aspects. No? One aspect debit and another aspect credit. So for that, we have to first identify accounts involved in the transaction. After identifying with how many accounts involved in the transaction, next step is identify the nature of account. Nature of account. After that, recall the golden rules of accounting. Recall the golden rules of accounting. Once we classify which account debit and which account credit, the next immediate step is recording them in the journal. Recording them in the journal. Yes or no, students? Yes. Now we start our new concept, that is journal concept. Journal concept. In this concept, what we learn is how the transaction is recorded in the book. How the transaction is recorded in the book in a systematic order, not as you like or as I like. Everybody should record in the same manner. That's what we learn here. Now look at, for that I'm taking one example. Look at. First take one example. You people also, it is better to write. Purchased goods for cash. Purchased goods for cash rupees 10,000. Purchased goods for cash rupees 10,000. First of all, tell me, is it transaction or not? Yes, sir, it is a transaction. Now, next step is what? Identify the accounts involved in the transaction. Identify the accounts involved in the transaction. Tell me, what is the receiving aspect? Goods. Whenever we receive goods, then what is the account name we use? Purchases. What is the account name we use? Purchases account. Purchases account. Immediately, next account name, that means what is the giving aspect? Receiving aspect, goods. Then what is the giving aspect? We are giving cash, sir. We are giving cash. Yes or no, students? Yes, sir. Simple. Next step is what? Identifying the nature of account. Identifying the nature of account. Nature of account. Nature of account means whether it is personal account, real account, or nominal account. Now tell me, purchases means goods purchased. For what purpose these goods are purchased? For resale purpose. For what purpose these goods are purchased? For resale purpose. So this purchase of goods becomes expense for us. This purchase of goods becomes expense for us. So all expenses comes under which category of account? That is nominal account. Which category of account? Nominal account. Yes or no, students? Nominal account. Next, cash means asset. Cash is asset. Asset comes under which category of account? Real account. Real account. Is it clear, students? So we have identified the accounts involved plus nature of its account. Nature of account. Next step, recall the debit credit rules. Recall the debit credit rules. Nominal account rule is what? Debit all expenses and losses. Credit all incomes and gains. Now come to real account. What is the rule of real account? Debit what asset comes in. Credit what asset goes out. This is the rules. Okay now. Now based on these rules, now you people tell me whether purchase account is debit or credit. Debit. Purchase account is debit. Why? Because it is expense na, debit. Cash account is credit. Why it is credit? Because it is asset. Because it is asset, cash goes out. How much amount of goods purchased? 10,000, sir. And how much cash you are paying? 10,000, sir. So these two must be equal at any point of time. These two must be equal at any point of time. That's why we say it, debit is always equal to credit. Receiving aspect is always equal to giving aspect. Receiving aspect is always equal to giving aspect. Yes or no, students? Yes, sir. Fine. Understood this. Now, how this information is recorded in the journal? How this information is recorded in the journal, that we need to understand. Till here, is it clear, students? Yes. Now look at next. Now we are going to record this transaction in a book called journal. A book called journal. So in this book, we record all the transactions first. That means first, whatever the transaction happened in the business, we make a record of it. Sir, how do we record it? For that, first we try to understand the format of journal. We try to understand the format of journal. Look at the format of journal, students. Look at the format of journal first. It has 5 columns. Has 5 columns. So journal format is nothing but 5 column format. 5 column format. Do remember. You people also try to draw. Yeah. First and foremost column is date. We write the date in the first column. Next one. Last 2 columns are meant for writing amount. Next, we draw a small column which is meant for ledger folio that we discuss later. Ledger folio that we discuss later. Right? Now look at, these are the 5 columns. Student. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. These are the 5 columns. First we have to draw. First column, we should mention the date of transaction. On which date this transaction happened, that we need to write. Second column, we need to write about the particulars about the transaction, nothing but which account debit, which account credit. Next one, here we write LF, means ledger folio. This I will discuss at the time of ledger chapter, not now. Ledger folio. Is it clear, students? Fourth one, we should write the debit amount. Next one, credit amount. Debit amount, credit amount. This is the format of journal. Now you people just pause the video and try to draw the format. Tell me, journal is a book in which we record the transactions. We record the transactions. Now, what is the journal format? 5-column format. First column, date column. Next, particulars column. Next one, ledger folio column. Regarding this ledger folio, I will discuss later. Next one, debit column, debit amount column, credit amount column. Is it clear, students? Right. Now, let us say this transaction is happened on 2024 January 1st. Transaction happened on 2024 January 1st. Is it clear? Now, first we have to write the date. Do remember, the date may be written as first date, January month, 2025. Here we will take 2025. Okay, 2025 January 1st. The date may be written like this also, or the date may be written like this also, 1/1/2025, or the date may be written like this. First we write the year. After that we write the month. Next we write the date. Observe carefully. Sir, which one is preferable, sir? Generally we prefer the third one. First we write the year. After that we write the month. Next to that we write the date. Third one we prefer. Is it clear, students? Now look at. Observe. 2025 January 1st. On this date the transaction happened. Okay. So I have written the date of transaction in the date column. Next, immediately go to particulars column. Okay, sir. Start writing with the account which is debited first. In our transaction, which account is debit? Purchases account is debit. Now you also go to journal. First write down purchases account like this. Purchases account. To indicate that this purchase account is debited, to the extreme edge of the same line, we just write the two words DR, debit. Now how do we read this? Purchases account debit. Now purchases account debit, how much? 10,000 rupees. Now go to the debit column and immediately write down 10,000 debit. Purchase account debit 10,000. Over. Next, come to the next line. Write down what is the next account credit? Cash account. Look at cash account. Cash account credited now. To indicate this, we have to write CR. Cash account credit. How much amount? Same amount. So write down in the immediate next column, credit column. Is it clear? But observe the entry. Observe the entry. Purchase account debit, cash account credit. So this type of presentation will get some confusions. Why? Sometimes in the place of DR, we may write CR. Observe students. So to avoid this confusion, what we do now is instead of writing like this, what we do is in the next column, leave just some space and start with the word TO2. Start with the word TO2. Next, write down the account which is credited, cash account. Observe now. Now, how to read this entry? How to read this entry? 2025. Start from the date. 2025 January 1st. Purchases account debit 10,000 to cash account 10,000. This is how we record the entry. Is it clear, students? If you can understand this one, remaining transactions are easy. Now, next. This is the entry. See, accounting is a language of business. Accounting is a language of business. Now, now to explain this entry, why we have written this entry? Because of this transaction. Now, what we do is in the journal format itself, we simply write a brief explanation about the transaction. A brief explanation about the transaction. Now, this is the transaction purchased goods for cash 10,000. For this, we have written the entry. What I'll do is simply I will explain the entry in a brief manner. Means goods purchased. So here first I will start with the word being goods purchased. That's it. Why did you write this entry? Why did you write this entry? Because we have purchased goods. That's why I have written entry. To indicate that here we are giving a brief explanation. Here you may use the word being or you may ignore the word being also. Simply you can write goods purchased. Earlier we used to write the word being. Nowadays modern accountants they are not using the word being. But in the examination it is preferable to write the word being. This is how we record the entry. After completion of the entry, try to draw a line in the particulars column. Try to draw a line in the particulars column. Sir, why should we draw the line? Why? Because this is one transaction. After completion of one transaction, we record the other transaction. Yes or no? To differentiate between two transactions, we are drawing a line. Look at this. So this is how we record the transaction in the books of accounts. Tell me, first we write the date of transaction. Next one we come to particulars column. Start with debit account, purchases account. To indicate purchase account is debited, to go to the extreme edge, same line, extreme edge, write down the word DR. And in the debit column, write down 10,000. Next one, come to below the line, leave some space and start with the word TO2. See, the moment you leave some space and you are starting with the word TO2, it is nothing but this account is credited. Is impliedly it is credited. So cash account in the credit column write down 10,000. The credit column write down 10,000. That's it. Now, to explain this entry, we are giving a brief explanation that is called narration. Brief explanation about the entry is nothing but narration. 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 After writing the narration, just draw a line within the particulars column. Within the particulars column, draw a line. Why we are drawing this line? To differentiate between two entries. Is this clear, students? I hope you understood this. Yes or no? So, after completion of this, now come to the concept of journal once. Look at. Now look at. As we discussed, journal is a book. Journal is a book in which we record the transactions as and when they happened in the business or occurred in the business. So for the first time we are recording the transaction in this book journal now. That's why this book is called book of original entry, of original entry or book of prime entry. Yes or no, students? Yes. Now look at, the journal is a primary book. The journal is a primary book in which all business transactions are recorded in chronological order. See, what is the meaning of chronological order? Means here transactions we record in the journal on daily basis, timely basis. Suppose today is 1st January 2025. Assume today whatever the transactions happened in the business, first I have to make a record. Tomorrow 2nd January 2025. Tomorrow whatever the transactions happened in the business, we have to make a record. So in the journal we record the transaction on daily basis. So why should we record like this, sir? Otherwise we forget. Otherwise we forget. That's why we record the transactions in the journal by following chronological order. Is it clear, students? Yes. Now transactions are first entered in this book to show which account should be debited and which accounts are credited. Already we have mentioned here. So purchase account to debit, cash account to credit. Next one. It is called a book of original entry because transactions are entered in chronological order daily basis. Okay. So it is also called subsidiary book. Other name for this is subsidiary book. Next important, the word journal is derived from the French word jour. French word jour. What it means? It means a day. Jour means a day. So in the journal, we record the transactions on daily basis. That's why this we have given a name for this book, that is journal book. Is it clear, students? Yes. Next one, chronological order. Already we discussed. Now journalizing. Journalizing is the word which we use for process. See, in the journal, we have followed the process now. What is that process? We have written heading and we have drawn 5 columns, date, particulars, ledger folio, debit amount, credit amount, and we have started recording the transaction from the date column onwards. First we have written date, next we have written debit account, debit amount, credit amount, after that narration. This is a process, step by step process, and this process is technically called as journalizing process. This process is technically called as journalizing, but we are recording the transactions in the books. Is it clear, students? Next one, types of journal. We have different types of journals, students. This concept now we discuss at the time of subsidiary books. We have fourth chapter subsidiary books. There we discuss the concept types of journal. At present, do remember there are two types of journal. One is general journal, another one is specialized journal. This concept we discuss at the time of subsidiary books. Is it clear, students? Look at the next concept, journalizing and its process. Already we have discussed what is journalizing and what is its process. Next, come to format of journal. Already we understood the format of journal na, date, particulars, LF, debit column and credit column. So here I have given explanation to each column numbered. So each column is numbered na, the same numbers we have followed here. So you can just go through this process once again. Is it clear, students? Now just pause the video and go through this journal format. Read one by one step and look at this example. Read one by one step and look at this example. You can understand the journalizing process. Is it clear, students? So once you understand how the transactions are recorded in the journal, next step is what? Whatever the transaction happened in the business. Do remember, students, this step is very, very important. Recording the transaction in journal is very, very important. Why? Because our accounting work, our preparation of profit and loss account balance sheet depends on how great you have recorded the transaction, how good you maintain the books of accounts. That is very, very important. Yes or no, students? Yes. Now look at. So now pause the video. Try to read this example, these points, and relate these points to that example. Make it fast. I hope you have completed, students. Yes. Now come to the next concept, simple entry versus compound entry. Before discussion of this concept, let us try to solve a simple problem. Let us try to solve a simple problem first. Now, for that, you people come to your practice book. Come to your practice book once. Practice book or question bank, whatever the name you call. Okay. Now here, see, as I have already discussed in our practice book, we will cover all ICAI sources. All ICAI sources means study material problems, RTP problems, MTP problems, and the previous exam question papers. So here what we discuss initially in the class, in the regular classes, we discuss study material problems. Study material consists of illustration problems. Here I have mentioned to look at illustration. All the illustrations of ICAI we try to solve. After that, practice questions. After that, practice questions. ICAI also gives practice questions to you to solve on your own first. Anyway, you get the answer. Okay. Now, after that, I have given some more problems for additional practice. Some more problems for additional practice to remember, students. Is it clear? Now, two people just come to problem number 13. Problem number 13. Because ICAI has given initial problems now based on the accounting equation approach problems. Accounting equation approach problems. And in some problems, they have mixed two concepts, accounting equation approach plus traditional approach. They have mixed these two concepts. So that's why I have kept those problems pending. Now, first, to understand the basic concept of journal, look at problem number 13. Problem number 13. Observe. First, you people just go through the problems. Take a pass and go through the transaction once. Here, make it fast. Yes, I hope you have completed the reading the problem. Now look at one by one transaction first. Pass journal entries for the following transactions. So identify how many transactions we have. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 transactions we have. First, identify whether all these transactions are recorded in the books of accounts. Yes, sir, we record all these transactions in the books of accounts as these are measured in terms of money. And left side first column is nothing but date of transaction. Now, what is our step? As this is the first problem, what I do is we read the transaction first. Next step, we identify the accounts. We identify the accounts. Next, we identify the nature of account on written. First, we write each and everything. After that, which account is debit and which account is credit, amount also. Once this classification, this analysis is completed, after completion of this analysis, what we do is we record the transactions in journal. I hope you understood. After completion of the analysis part, then we go to journal. Is it clear, students? So be ready for this. First one, read. Amar started business with a capital 4 lakhs. So for each transaction, identify what is receiving aspect and what is giving aspect. If we are not receiving anything, then immediately think that who is the receiver. Next, we are not giving anything, then next question, who is the giver? If we are not giving anything, then the immediate next question is what? Who is the giver? Yes or no, students? Yes, sir. Now tell me here. Now tell me here. First one. First one. Tell me. How many accounts involved? Identify. Receiving aspect is what? Cash. Receiving aspect is what? Cash. So that cash account. Receiving aspect is cash. So that we write a cash account first. We write cash account first. This is the receiving aspect. Cash. And what is the giving aspect? At present, we are not giving anything. Then who is the giver? Amar. Who is Amar? Owner of the business. Who is Amar? Owner of the business. Yes or no? So, owner, whatever the owner gives to the business, we record it as capital. Whatever the owner gives anything to the business, we record it as capital. Do remember, students. Now, capital. Next one, immediate capital. Yes or no, students? Yes. Next question is what? Next question is what? Nature of account. Next question is what? Nature of account. Nature of account. Tell me, cash account nature is what? Nature of account means whether it is real, nominal, or personal. Okay. Now, tell me cash account nature. Real account, sir. Very good. Cash account nature is real account. Real account. What about capital? Capital represents proprietor na. So who is proprietor? Person. So capital account is representative personal account. So personal account. Personal account. Now next step is what? Whether it is debited or credited. Whether it is debit or credit. Tell me students, whether it is debit or credit. Whether it is debit or credit. Now, for this, first recall the rules of real account. What is the rule of real account? Debit what asset comes in and credit what asset goes out. Here, cash comes in or goes out, cash comes in. So that cash account is debited. Cash account is debit. How much cash comes in? 4 lakhs. How much cash comes in? 4 lakhs. And what about capital account, personal account? Na? So when it comes to personal account, identify whether this person is receiver of any benefit or giver of any benefit. Here proprietor is giving benefit to the business. So his account is credit. His account is credit. How much? Same 4 lakhs. How much? Same 4 lakhs. Yes or no, students? Yes. So this is one transaction analysis completed. Now, what is the entry we record? Cash account debit to capital account 4 lakhs over. Cash account debit to capital account 4 lakhs over. Entry completed. Here, the only problem is identifying accounts and which account is debited. Whether this account is debit or credit. Once you have analyzed like this now, recording entry is nothing. Recording entry is nothing. Is it clear, students? Yes. Now come to second one. Second one. He purchased furniture and paid by, it is not check student, paid by cash. And paid by cash. Not check, just strike off it and write down paid by cash. How much? 25,000. Now, tell me the analysis first. Second one. Second one analysis, tell me. First, what is receiving aspect? Sir, furniture is receiving aspect, sir. Furniture is receiving aspect. Very good. Then what is giving aspect? We are purchasing furniture by paying cash na. So cash account. We are giving cash, sir. We are giving cash. Now tell me what is the nature of account? What is the nature of account? Sir, furniture is asset, sir. So real account. Furniture is asset na. So real account. Then what about cash? Sir, cash also asset. So cash also comes under real account. After identifying the nature, next step is what? Identify whether it is debited or credited. Debited or credited. For that, you have to recall the rules of accounting. Tell me, what is the real account rule? Debit what asset comes in, credit what asset goes out. Now here furniture is debit or credit. Furniture comes in or goes out. Furniture comes in or goes out. Tell me. Furniture comes in or goes out. Furniture comes in, sir. So furniture account is debit. Furniture account is debit. Because furniture comes in na, how much? 25,000. How much? 25,000. Now what about cash? Sir, cash is goes out, sir. Cash goes out. So credit. Cash goes out, credit. Next time onwards, whenever we purchase cash, whenever we purchase furniture, now you need not to analyze because furniture account debit, cash account credit. How much? Same amount, sir. 25,000. Same amount 25,000. Is it clear, students? So this is what we analyze. Now look at the third one. Purchased goods 1,50,000. Purchased goods 1,50,000. Now you people tell me, first of all, whenever we purchase goods and sale of goods, first check whether this is cash transaction or credit transaction. Cash transaction or credit transaction. Now here they did not mention anything whether we paid cash or on credit. Here, if this transaction is on credit, compulsorily they should mention the supplier name. If this transaction is on credit, compulsorily they should mention the supplier name. Here they did not mention supplier name. At the same time, they did not mention whether cash is paid or not. In this type of situation, we assume this transaction as cash transaction. This transaction as cash transaction. Yes or no, students? Yes, sir. Now tell me, what is receiving aspect? What is receiving aspect? Tell me. Tell me, students. Third one. What is receiving aspect? So receiving aspect is goods, sir. So in that case, which account we use? Purchases account. That case, we use purchases account. And what is the nature of purchases account? Already we have discussed. It is an expense. It is an expense. So it comes under nominal account. It comes under nominal account. Now recall the rule of nominal account. Debit all expenses and losses, credit all incomes and gains. So accordingly, we simply debit it. How much debit? The same amount, 1,50,000. Hope you understood, students. Next one, immediately what is giving aspect? Cash. We are giving cash. Cash already we have discussed real account. Now tell me real account rule. Debit what asset comes in, credit what asset goes out. So accordingly, it is credited. How much amount? Same 1.5 lakh. Is it clear, students? Yes. This is how we analyze. Now, if you can understand this, you you can start doing your problem. You can analyze on your own and check whether it is correct or not later. Okay. Now, immediately next one. Freight paid to bring the purchased goods 1,000. See, we have purchased goods. Yes. To bring the goods from the place of purchase to our business, we have to pay some transportation charges. Freight is nothing but transportation charges. Freight or carriage or cartage, whatever it may be, all these are our transportation charges. These transportation charges are expense for us. So that's why next transaction, which account? Freight account. We create freight account. Because receiving aspect is what? We received goods. Already we received, but to bring those goods, we have paid freight. It is expense for us. So expense means comes under nominal account. Rule. Debit all expenses and credit all incomes and gains. Debit all expenses and losses, credit all incomes and gains. How much? 1,000 rupees. And what is giving aspect? Cash. We are giving cash. Yes or no, students? So cash is real account. Simply credit. Whenever cash goes out, simply credit. That's it. How much? See, whenever cash comes, debit. Whenever cash goes out, credit. Is it clear, students? Next one. Sold goods 1 lakh. Here also, I said already, whenever we purchase goods and sell goods, try to identify whether these are cash sales or credit sales, cash purchases or credit purchases. Is it clear, students? Now tell me, here also same. We sell goods, they have to give customer name. But here they did not mention any customer name. Same time, they did not mention whether we paid cash or not. In that case, the assumption is what? Simple. These are cash sales. These are cash sales. Now tell me, what is the analysis here? Simple analysis. What is receiving aspect? We are receiving cash. So cash account. Cash account is what? Real account. Now cash comes in or goes out? Cash comes in because we sold goods now. So debit. How much amount comes in? 1 lakh. Now what is giving aspect? We are giving goods. They are giving goods. That means sales, na? They are giving goods means it is sales. And sales is income for us. So income account, nominal account. Income account comes under nominal account. Yes or no, students? So nominal account rule, debit all expenses and losses, credit all incomes and gains. So it is credit. How much? 1 lakh. Is it clear, students? Like this we have to analyze. Next one. Purchased goods from Ankur 50,000. Now observe, is this cash purchase or credit purchase? They said purchased goods from Ankur. Ankur is nothing but our supplier, creditor. How much amount? 50,000. 50,000. Now it is a credit transaction. The credit transaction. Observe. One. What is receiving aspect? Tell me. Purchases. What is receiving aspect? Purchases. So purchases account is expense account. Expense comes under nominal account. Expense comes under nominal account. Yes or no, students? Nominal account. Nominal account rule, debit expense and loss, credit incomes and gains. So accordingly, debit. How much amount? 50,000. How much amount? 50,000. Next one, giving aspect. We are not giving anything at present. Then who is the giver? Who is the giver of benefit to the business? Ankur. So we create Ankur account. Ankur is person. Ankur is person. So personal account. Personal account rule. Debit the receiver, credit the giver. Here Ankur is the giver. So his account is simply credit. How much? Same 50%. Yes or no, students? Next one. Sold goods to Sukumar 25,000. Sold goods to Sukumar 25,000. Here also try to understand whether it is cash transaction or credit transaction. And we sold goods to Sukumar. Sukumar is our customer. Sukumar is our customer or debtor. And they did not mention whether this customer paid cash or not. So in this case, we have to assume this is a credit transaction. This is a credit transaction. This is a credit transaction. Now look at how do we analyze it. And what is receiving aspect? Tell me, students. We are not receiving anything. We are not receiving anything. Then who is the receiver? Sukumar is the receiver. Sukumar is the receiver because Sukumar is receiving cash now. Sorry, goods now. Now Sukumar account is personal account. Sukumar account is personal account. Personal account rule is what? Debit the receiver, credit the giver. So as he is the receiver, so his account is debit. Is it clear? How much? 25,000. How much? 25,000. And what is giving aspect? What is giving aspect? We are giving goods na. So sales. Sales are nothing but income. So means credit. Nominal account na. Nominal account rule. Debit the receiver, credit the giver. Debit the receiver, credit the giver. How much? Same. Is it clear, students? Next one. Goods returned to Ankur 1000. Earlier we purchased goods from Ankur na. Yes. Now this time we are returning goods to Ankur. So what we do is generally whatever we have identified accounts now, purchase account, Ankur account, now they become reverse. Earlier purchase account debit, Ankur account credit. Now the same becomes reverse. Observe, the same becomes reverse. Sir, why, sir? Why they become reverse, sir? Why? Because now what we are receiving, we are not receiving anything. Then who is the receiver? Ankur is the receiver, na? Ankur is receiver because we are returning goods to Ankur. Means Ankur is receiving goods. That's why Ankur account is created. Now goods are going out from the business. Goods are going out from the business. So purchase account gets reduced. Purchase account total gets reduced. But here what we do is instead of writing purchase, we write purchase returns. Purchase returns. Observe students. Purchase returns. Because our expense gets reduces now. Our expense gets reduces. So what we do is purchase returns. We use the word purchase returns account. Whenever you return the goods, don't forget to use the word purchase returns. Purchase returns. Yes or no, students? Simple remembering is earlier whatever the accounts you debit or credit, now they become reverse. Earlier Ankur account is credit, now Ankur account is debit. Ankur account is debit. Why, sir? Because he is personal, so personal account. Personal account. Rule debit the receiver, credit the giver. Here Ankur is receiver, debit. How much, sir? 1000. How much? 1000. Now actually purchase account earlier debit. Now this time we have to credit it. Have to cancel it now. But instead of using purchase account, which account we are using? Purchase returns account. Instead of using purchases account, which account we are using? Purchase returns account. So purchase returns account credit. Nominal account. Nominal account. So nominal account gets reduced. So credit. Here everybody 1000. Expense gets reduces. So nominal account credit. Is it clear, students? Yes. This is very important. That's why I have given these transactions one by one in sequence order. Right. Next one. Goods returned by Sukumar. Earlier, we returned goods to Ankur. This time, Sukumar is returning goods to us. Earlier, we sold goods to Sukumar. Now, this time, Sukumar is returning. So, sales returns. Sales returns. Previously, purchase returns. And purchase returns other name, returns inward. Purchase returns other name is returns inward. Returns inward. Sorry, returns outward. Returns outward. The other name for purchase returns is returns outward. Is it clear, students? Now look at the next one. Ninth one is sales returns. Now, so earlier, whatever the sales entry we have written, means Sukumar account debit, sales account credit. Now these becomes reverse. These becomes reverse. Simple. Look at. So instead of using sales, what we use? Sales returns. Sales returns account. Sales returns account. Sales returns account. Or we use returns inward account. Returns inward account. Yes or no? Sales returns account or returns inward account. Clear? Next, Sukumar account. Now this time Sukumar is the giver. Sukumar is the giver. Earlier Sukumar is received goods. This time Sukumar is giving goods. Sukumar is giving goods. Okay. Nature of account, tell me. Nature of account. Nature of account. Sales returns. See, income reduces. Income reduces. Sales earlier income now this time reduces. So nominal account debit. Income reduces debit. Expense reduce credit. Income reduce debit. Expense reduce credit. Now Sukumar account, personal account. Sukumar account, personal account. Debit the receiver, credit the giver. Credit. How much? 500. How much amount? 500. Is it clear, students? That's it. Next one. Paid rent 5000. We have paid rent. Rent is expense. Rent is expense. Rent is expense. So rent account we create. Rent is expense. So rent account we create. Rent paid means what? Cash paid. So what is giving aspect? Cash. What is giving aspect? Cash. Now rent is nominal account. Rent is nominal account. Cash is real account. Nominal account, expense debit or loss debit. Cash account. What asset? Asset comes in debit. Asset goes out credit. So accordingly, we debit rent account. How much rent paid? 5,000. Cash goes out credit. Cash goes out credit 5,000. Yes or no, students? Next one, 11th one. Paid salaries to staff 2,000. We have paid salaries to staff. Okay, now salary to the staff is expense for us. So we create salaries account. We create a new account called salaries account. Why you are paying amount to staff salary? That's why we are creating salary account. Salary is paid nothing but cash paid. Salary is paid nothing but cash paid. Salary is expense. Expense means nominal account. Salary is expense. So nominal account. Cash is asset real account. Cash is asset real account. Now rule nominal account debit all expenses and losses. Real account rule credit what asset goes out. Credit. At this point of time, you are in a position that whatever the entry they give you are in a position that you analyze like this. After analyzing, recording the entry is nothing. Simply drawing the format and writing entries. Is it clear, students? How much? 2,000. Now, all the transactions are we have analyzed. All the transactions we have analyzed like this. Yes or no, students? Is problem number in analysis of transaction. Which approach? By which approach? Traditional approach. By which approach? Traditional approach. Okay. Make a record of this. The next problems onwards, or from the next problems onwards, you need not to analyze like this. If you want for your practice, you can analyze like this. Otherwise, we simply start recording entries. Otherwise, we simply start recording entries. Now, go to journal format. Go to journal format. Quickly draw the journal format. Problem number. So try to maintain notes in a neat manner because this will help you in the time of exams. Now, how to write the heading? Writing heading is very important, students. Writing heading is very important. So, who is the owner of business? Mr. Amar. Mr. Amar is the owner of business. Now, how we write the heading is in the books of Amar. Because as a chartered accountant, we have so many clients. We have so many clients. So, in whose books you are writing the entries or whose books you are maintaining? Because we should not mix Amar transactions, we should not mix with Vimal, and Vimal transaction we should not mix with Varma. Yes or no, students? So, Amar business transactions we have to record in the Amar books only. Varma business transactions we should record in Varma books only. So, we have to maintain separate books for each client, each business. Here, that's why to differentiate this, you have to write the heading like this. In the books of Amar, what you are going to do? You are going to write journal entries, or simply you can write journal, or you may also write heading in a different manner. What is that? Journal entries in the books of Amar. You may also write journal entries in the books of Amar. Both gives same meaning. Now draw the format. Draw the format. Journal format. 5 column format na. Draw it. 5 column format. So use pencil, scale, erasers, all those things, and record the end or draw the format. And don't forget to write column names also. Tell me how many columns format it is? 5 column format. 5 column format. First column. What is the first column name? Date. Next column, particulars. Next column, particulars. Next column, just write down LF. Ledger folio. LF means ledger folio. We discuss this ledger folio in the next chapter, that is ledger chapter. Next one, debit amount. Next one, credit amount. Debit amount and credit amount. This is the heading and this is the format. Be careful while drawing the format. Here, now look at the first analysis, first transaction analysis. Which account debit, which account credit? Cash account debit, capital account credit. Write down the same. Date of transaction. What is the date of transaction? 2022 December 1st. Yes or no? Right. So cash account debit. How much? 4 lakhs to capital account. 4 lakhs. Yes or no, students? And don't forget to write the narration. For the narration, we write being started business. So, narration is nothing but brief explanation about the entry. Brief explanation about the entry so that you can write in your own words also. This narration may be written by person to person differently, no problem. Okay, but this narration should convey the above entry. Narration should convey the above entry. Don't forget. Next one. Next one. Second one. Second one. Observe. Get. Next transaction is December 5th. December 5th. Purchased furniture and paid by cash. Just make a correction. Paid by cash 25,000. So, how we record the entry? December 5th. Now, this time you need not to write the year again because already year we have written at the top. Month also we have written at the top. Now we change the year only when year is changed, and we change the month only when month is changed. But these transactions happened in the same month now. And don't forget, we should write the entries in a chronological order. That means date by date. Now tell me, furniture account debit. Account debit, furniture account debit. How much worth of furniture purchased? 25,000. 2. Credit is cash account. 25,000. And what is the narration we write? Being furniture purchased. Simple. Being furniture purchased. That's it. Over. Next transaction. 8th date. Purchased goods 1,50,000. What's the entry we record? Purchases account debit. Account debit. Purchases account debit. How much? 1 lakh. To cash account. 1,50,000 being goods purchased. Being goods purchased. Yes or no, students? Yes. So you do one thing. When you are while you are writing na, just read and write. Just read the entry and write so that it will become habituated. Okay, next one. 10th date. Freight paid to bring the goods 1,000 rupees. Freight paid to bring the goods. 10th date. This also write down 8th date, actually it has given by mistake. Is also 8th date. Make a correction. 8th date. Okay. Now, freight account debit. Freight account debit. Freight account debit. How much freight paid? 1,000 to cash account. To cash account 1,000. What is the narration we write? Simple. Being freight paid. That's it. Being freight paid. That's it. Over. Simple narration. Narration is nothing but brief explanation about the transaction or entry. Right. Next one, 10th date. Is sold goods for 1 lakh now. So entry cash account to debit. To just see the analysis, because analysis part already we have recorded na, we have written na, so you just observe. So cash account to debit to sales account. Cash account to debit to sales account. What is the narration we write? Being goods sold. Being goods sold. So if you want, you can write this also. Being goods sold for cash. This also you can write, or simply you can write being goods sold. No problem at all. Nothing. Next one. Next one. 12th date. Purchased goods from Ankur 50,000. 12th date. Purchased goods from Ankur 50,000. What is the entry we record? Here we simply write 12th date and purchases account debit na. So purchases account debit 50,000. Purchase account debit 50,000 to Ankur account. To Ankur account 50,000. Being goods purchased on credit. You can write like this also. Problem. Being goods purchased on credit. Being goods purchased on credit. Is it clear, students? Next one. Next, 14th date. Sold goods to Sukumar 25,000. Sold goods to Sukumar 25,000. What is the entry we record? 15th date. Sukumar account debit na. To just observe the analysis. Sukumar account debit 25,000 to sales account 25,000. Yes or no, students? What's the narration we can write? Being goods sold on credit. Being goods sold on credit. This is what we write. That's it. Next one. 15th date. Goods returned to Ankur 1,000 rupees. Goods returned to Ankur 1,000 rupees. Which account we debited? Ankur account. So 15th date. 14th date, this one is 14th date, and next one 15th date. So Ankur account debit, 1000 to which account we credited? Observe students, purchase returns account. And what is the other name for purchase returns? Returns outward account. Or no? 1000 being goods returned. Goods returned to Ankur. Yes or no, students? Understood why we are drawing a line? To differentiate between two entries. Otherwise, they become clumsy. Yes or no? Next one. Goods returned by Sukumar 500. In the date, goods returned by Sukumar 500. So earlier, what is the entry we have written? Sales returns account debit. In the analysis, which account is debited? Sales returns account debit. What is the other name for sales returns? Returns inward account. Returns inward means goods coming into business. Returns in the form of returns. Returns outward means goods are going out from the business in the form of returns. So Sukumar account. To Sukumar account 500 being goods returned by goods returned by Sukumar. Goods returned by Sukumar. Yes or no, students? Next one. 30th date, we have paid rent. So at that time, which account we have debited? Rent account debit. In our analysis, rent account debited now. So how much? 5,000. To which account credit? Cash account. So 5,000. So for this problem now, you just write the analysis part plus entries part. From the next problem onwards, we just write the entries part. Start writing directly from entries part. Okay, so that we can save some time. For your understanding, if you want, you can write analysis part for every problem. For every problem, you can write analysis part. No problem at all. Being rent paid. Being rent paid. Yes or no, students? Next one. Next one. Observe. Next one and last one. 31st. Paid salaries to staff 2000. So 31st. Which account we have debited? Salaries account. Salaries account debit. How much? 2000. To cash account 2000. Yes or no, students? So being salaries paid. That's it. This is our problem. Observe carefully. Yes or no, students? Yes. So try to make a note of it. After completion of that, please go through the problem once again, because this is the basic problem, and that to those students who are from MPC and BPC background, they need more one time practice. You just first step, read the problem. Next step, analysis part. Next step, this one, entries part. Is it clear, students? Yes. Anyway, you have the solutions. We provide solutions also, but it is better to write with handwriting practice, because it becomes practice for us. Yes or no, students? Yes. So that's it for this class. In the next class, we discuss more problems, and before that, We also discussed this concept of simple entry versus compound entry. After that, we discuss banking transaction. This concept is very, very important to students. Banking transactions. Yes or no, students? Yes. So, we meet again in the next class. Till then, bye bye, everybody. Hello, students. How are you all? I hope you are doing well. In the previous lecture, we have discussed about the concept of journal and journalizing and its process, at the same time the format of journal, along with one problem, that is problem number 13. Problem number 13. The problem number 13, we understood how the transaction is analyzed. Transaction analyzed means what? First, we have to identify how many accounts involved in the transaction. After that, we should identify what is the nature of the transaction, sorry, account involved. After that, we have to recall the debit credit rules of that particular account. Then we classify, okay, cash account debit and capital account credit, furniture account debit and cash account credit. Once we are ready with this analysis, the next immediate step is to record in the journal, to record the same in the journal. Yes or no, students? So, this we understood in problem number 13. And the same concept will apply for n number of transactions. But most of the transactions are repetitive. Here, there are almost some 20-25 transactions. You can learn all these type of transactions, then everything will be repetitive in nature. Now, in the month of December, if you keenly observe here, these transactions happened in the month of December. What happened? Started business. From the next problems onwards, if you get the same transaction, proprietor started business with capital, we record the same entry. But instead of cash, sometimes we use bank account, because sometimes we directly deposit amount into bank so that we start the business. Like that, small changes we get. From next time onwards, suppose if the same transaction is given, that purchase of furniture. Here, furniture purchased for cash. Next time, what you may get? Furniture purchased through check. In that case, what is the entry we record? Furniture account debit to bank account. Suppose if the same furniture is purchased on credit, in that case, what is the entry we record? Furniture account debit to some vendor account. Person who grants credit to us, we write their name. Yes or no, students? So these small changes you need to understand. In accounts now, it is not possible to discuss each and everything in detail. In some places, you need to apply your common sense. Yes or no, students? Because here we practice some hundreds of problems. When it come to exam, you may get slight modified problem. You don't know how to deal with that slight modification, then it becomes difficult, students. That's why don't expect the same copy paste style of problems in the exam. Sometimes they may mix one or two problems and they give you one new problem. They may frame one new problem. This will happen in CA courses. Whatever the problems we solve, exactly you may not get the same problems in the exams. Is it clear, students? Yes. Now come to the next important concept, that is simple entry versus compound entry. So what is the meaning of simple entry? It is nothing but any entry. In an entry, if it contains only one account debit and one account credit, then this type of entry we call it as simple entry. Like in our problem number 13, observe first entry, observe how many accounts you find. Two accounts, one debit, another credit. Next one, furniture account, cash account. One account debit, one account credit. Simple entry. This is called simple entry. Next one, purchase account debit, cash account credit. Simple entry. Next, freight account debit, cash account credit. Simple entry. 10th also simple entry. 12th date also simple entry. 14th, 15th, 16th, 30th, 31st. These are called simple entries. Means an entry contains only two accounts. Two accounts. One account debit, one account credit. These type of entries are called simple entry. On the other hand, we have another one, that is compound entry. What is the meaning of compound entry, sir? Instead of writing, sometimes what we do is, instead of writing two entries separately, we merge those two entries into one entry. So when do we write the same? Means, get one example. First, look at simple entry. See, example, purchased goods worth 22,000 from Amar. So tell me, is it cash transaction or credit transaction? It is credit transaction. It is credit transaction. So what is the entry we record here? Tell me. The date column, we write the date. So here, what is receiving aspect? Goods. So purchases account debit. You people also write down in the space provided here. Purchases account debit. How much, students? 22,000 to Amar account 22,000. This is simple entry, being goods purchased on credit. Now come to compound entry. Look at, it is an entry in which two or more accounts are debited and one or more account are credited, or vice versa. Means what? Okay, first look at this example, then you can understand the concept of compound entry. Goods worth 22,000 were purchased from Amar and paid cash 14,000 and balance on credit. Means total amount of goods purchased 22,000. Total purchases are 22,000. Out of that, 14,000 we have paid cash, and remaining 8,000 rupees on credit. Remaining 8,000 rupees on credit. Normally, how do we record the entry? Look at. Observe carefully. So here actually you have to write two entries, students. One, purchases account debit. Purchases account debit. How much amount we have paid? 14,000. So 14,000 here we write. Second, again we write the entry purchases account to debit. Purchases account to debit. 8,000 balance amount we are paying in 22,000 or anything else. Yeah, 22,000 only, 14,000 paid in cash. Right. Okay, remaining 8,000 bank. Sorry, credit. To whom amount is payable? Amar. So to Amar account 8,000. Understood? Actually, you have to write the entry like this. Purchases account debit 14,000 to cash account 14,000. Next, purchases account debit 8,000 to Amar account 8,000. Here what we do? We combine these two entries. We combine these two entries now. Instead of writing two entries separately, what we do is we combine the entry. How to write this combined entry? Very, very important. First one. First, observe debit account. Observe debit. The first entry, debit is purchases. In the second entry also, debit is what? Purchases. Why should we write two entries? That means two accounts. So add these two. So purchases account to debit. Purchases account to debit. Add. First entry, observe debit. Yeah, purchases 14,000. Second entry, observe debit. Purchases 8,000. Add both the amounts. Debit, add. Credit, add. Debit, credit, minus. Yes or no, students? Look at debit plus debit is equal to 2 debit. Debit plus debit is equal to 2 debit. Add. Credit plus credit is equal to 2 credit. Add. Not 2 CR, 2 credit. Add both the amounts. Debit minus credit is equal to minus. Whatever the excess amount we have, that we assign symbol. Suppose debit is more, plus debit. Credit is more, minus credit amount. Is it clear, students? So here total purchases are 14,000. Total purchases are 14,000. Yes or no? Yes. Now next observe first entry credit. First entry credit. Observe the second one. Do you have the same cash in the second entry? No, sir. So immediately write down to cash. To cash account. How much? Credit is 14,000. Your total is 22,000. Na? Total is 22,000. 22,000. First one, observe debit, debit. Debit purchases, second also debit purchases. Total at 22,000. Now observe credit. Credit side we have cash. In the second entry, we don't have cash to add. That's why write down cash separately. With this first entry completed. Now come to second entry. Second entry, credit what you have, Amar account. So write down directly Amar account. To Amar, 8,000. When you are writing or while you are writing combined entry, be careful that debit is always equal to credit or not. Debit is equal to credit or not, check it. 22,000 debit, credit 22,000. This should happen. Yes or no, students? Yes, sir. This is how we write combined entry. So what is the benefit of writing combined entry, sir? Instead of writing two entries separately, here we can write one entry, enough. Being goods purchased, 14,000 rupees cash and remaining balance amount on credit. Goods purchased for 22,000. Paid 14,000 rupees cash, balance amount on credit. Yes or no, students? And if you observe the last two entries of previous problem, observe 30th date we have paid rent, 31st date we have paid salaries. Here also what we can do is, suppose these two are called similar nature of transaction. What it is? Similar nature of transaction means what? Rent, salary is similar nature of transaction. These two transactions are similar but happened on different dates. No? Happened on different dates. Suppose if the same two transactions happened on single day, on a single day means 30th, either 30th December or 31st December, then we can write compound entry. That means look at, to record compound entry, two conditions must satisfy. To record compound entry, two conditions must satisfy. Look at, what is the first condition? What is the first condition, student? Similar nature transaction. Similar nature transaction. Next one, happened on same date. happened on same date, same date or same date. Suppose if rent and salaries paid on the same date, then how do we record the entry? Look at, first observe two entries. Observe debit and credit. Same or different? Different, sir. Previously, purchases, same. That's why added. Here, rent, salaries, different, different. That's why what we do is, first we write salaries account. First one rent, na? So rent account. Rent account debit. How much? 5,000. Rent account debit, 5,000. Next one, salaries account debit. Salaries account debit, 2,000. With this debit we have written. Now if you observe credit we have cash and cash. Both are cash account only. If both are cash account, then we can add. Yes or no, students? To cash. 5,000 plus 2,000, 7,000. Now check whether debit is equal to credit or not. Check whether a debit equal to credit or not. Yes, sir. Debit equal to credit. Yes. So like this, we record the compound. Next one, if you observe the same problem, observe eighth date. Observe eighth date. Purchases account debit 1.5 lakh, to cash account 1.5 lakh. Next, we have paid freight for this purchases on the same date. Here also you can write combined entry. How, sir? Simple. Purchase account debit 1.5 lakh, freight account debit 1,000, to cash account 1,51,000. To cash account 1,51,000. So wherever it is possible to write combined entry instead of writing two or three entries, wherever it is possible to write compound entry, it can be written compound entry or combined entry or composite entry, whatever the name you call. Is it clear, students? This is the concept of compound entry. So now finally, how do we write this entry here? So here you can write down, what is that? Purchases account to debit. How do we write? Purchases account to debit. How much? 32,000 to cash account 14,000 to summer account 8,000. That's it. This is our simple entry and compound. Other names for compound entry what? Other names for compound entry is combined entry. Combined entry. Yes or no, students? Now come to next important concept, that is banking transactions. This is very important, and this concept is very important. Concept helps you to solve the problems of other chapters also. What are those chapters, sir? Cash book cash book chapter. At the same time, we have an important chapter called BRS, bank reconciliation statement. Bank reconciliation statement. The- For solving these two chapters, problems of these two chapters, this concept helps you a lot. Is it clear, students? So that be careful. Now, see, nowadays everybody is doing banking transactions in the form of UPI. Majority people, they are doing UPI. Apart from UPI payment, see, as an individual, we are having two, three accounts in the bank. As an individual, we are having two, three accounts in the bank. Yes or no? Banking transaction. As an individual, we are having accounts in the bank. Why don't the business will have account in the bank? Yes or no? So businesses may also have one or two accounts, three accounts in the bank. Same business may have account in different banks also. Having two or three accounts in the same bank, let us say this is ABC Limited. Is a company, student. ABC Limited means company. What is company? All those things we try to understand later. Now this is ABC Limited. ABC Limited has account in SBI Bank. Account in SBI Bank, State Bank of India. It has two accounts. It has two accounts. Account 1, account 2. May have more than two accounts also in the same bank. EI. And it may also have account in Axis Bank also. Account in Axis Bank. The same manner in Axis Bank also they may have more than one account. Account 1. Nowadays there is no restriction on the number of accounts that you can have. Yes or no, students? Yes. Now generally this bank is considered as artificial person. Bank is considered as what? Artificial person. Artificial person. Because their bank is outsider now. Now what we do? Business, their business, ABC Limited. ABC Limited will ABC Limited enters with the bank, artificial person, some transactions. Or no? So ABC, what are those transactions? ABC Limited will open an account with the SBI Bank. Is one transaction. ABC Limited opened an account with the Axis Bank. Is also one transaction. ABC Limited withdrawn amount from Axis Bank. The transaction. ABC Limited withdrawn amount from SBI Bank. It is also a transaction. ABC Limited transferred amount from SBI Bank to Axis Bank. Is a transaction. And ABC Limited will receive checks from customers. Suppose we sold goods to the customers and we received checks, and these checks are deposited into bank. Is a transaction. At the same time we are having bank account, so we get some checkbook and we issue these checks to our suppliers. Is a transaction. Sometimes we pay expenses by using checks. It's a transaction. We buy the assets by issuing checks. It's a transaction. There are no students. So business will enter in with bank so many transactions. All these transactions put together, we call it as banking transaction. Now, in case of banking transaction, how the entries are recorded? The entries are recorded. So do remember here SBI and Axis Bank is considered as artificial person. Artificial person means personal account. Artificial person means personal account. Here you should remember the rule. Personal account rule. Debit the receiver, credit the giver. Bank is the receiver, then bank account debit. If bank is the giver, bank account credit. Full fundamental rule. Yes or no, students? So bank account. Bank account. If you are having only one bank account, na, we use only the word bank account. Suppose if you are having more than one account, na, then only simply we prefix the word at a bank name. At a bank name. Suppose SBI bank account. Next, Axis bank account. Axis bank account. Yes or no, students? If these are receiver, receiver, then debit bank account. Bank is the giver, then credit bank account. Bank is the giver, then credit bank account. So by using this trick, now we solve banking transaction. Is it clear, students? Okay. So I hope you are writing the running notes. Okay. So if you want, you can just pause the video and you can copy it. Fine. Come to the banking transaction. First one. See here, I have given analysis and the space left is for writing the content. Look at first one, transaction, accounts involved, nature of account, whether the account is debit or credit. Now entry also here itself we discuss, so that we need not to do separate problems here. Okay, now look at first one. Cash deposited for opening an account means business will give cash to the bank. Here who is the receiver? Bank is the receiver. So bank account. Bank is the receiver. Bank account created. Now what is giving aspect? Cash. We are giving cash. Yes or no, students? Receiving aspect, we are not receiving anything, but bank is receiving our money. So bank account debit. And what is giving aspect? Cash. And what is the nature of account? I said already, bank is a artificial person, comes under personal account. Comes under personal account. Yes or no, students? Cash, real account. Cash is always real account. Debit or credit, we call the rule of personal account debit. Real account here credit. Yes or no? What is the entry we record? Bank account debit to cash account. These are very, very important, students. This is how we record the entry. So whenever you get a transaction that is cash deposited into bank, then what is the entry directly we can write? Bank account debit to cash account. Hope you understood. Next one. Cash withdrawn for office use. For what purpose? Office use. Cash withdrawn means we are receiving cash from bank. What is receiving aspect? Cash. What is receiving aspect? Cash. Is it clear? And who is the giver? Bank is the giver. Who is the giver? Bank is the giver. So bank account. Nature. Cash is real. Bank is personal. Now real account rule. Debit what asset comes in. So debit. Personal account rules. Credit the giver. So credit. What is the entry we record? Cash account to debit. Cash account debit to bank account. Cash account debit to bank account. Is it clear, students? Next one. Cash withdrawn for personal use means first one is for office use. We have withdrawn cash for office use. Office use means for business purpose. Personal use means for owner's personal purpose. So whatever the amount given by the proprietor, owner to the business, we treat it as capital. Whatever the amount withdrawn by the proprietor, we treat it as drawings. So who is the receiver here? Proprietor is the receiver. In the place of proprietor's name, which account we write? Drawings account. Which account we write? Drawings account. Yes or no, students? What is giving aspect? Who is the giver? From business, we are not giving anything. Who is the giver? Bank is the giver. Who is the giver? Bank is the giver. Is it clear, students? Now, drawings account, personal account, representative personal na personal account. Bank also personal account. So here you can make a note. What is that? In a transaction, in a transaction, the accounts affected may be same category, same nature, means here drawings and bank, same personal accounts. In some transactions, suppose furniture purchased for cash, furniture and cash both are assets, real account category. So in an entry, the accounts affected may be relating to same category. Yes or no, students? Now, personal account rule: debit the receiver, so debit; credit the giver, so credit. What is the entry we record? Drawings account to debit, drawings account debit to bank account. Amount column, we write the amount. That's it. Amount is not a big task. Writing entry is very important. Amount you get in the transaction. Na? And the next important one, a check received from a debtor. A check received from a debtor means he received check. What we do? This check is deposited into bank directly, because you know very well, everybody, I think most of the students, almost all students, they have visited to the bank or no. This check can be encashed only in the bank. I received a check. This check can be encashed only in the bank. Yes or no? So whatever the check we receive from debtor, that is first deposited in the bank. Bank will credit amount to our account, then after we can withdraw. Yes or no, students? Yes. Now you people tell me, indirectly or directly, who is the receiver of this amount? Bank. Who is the receiver of this amount? Bank. Who receives amount first? Bank. Even though we received check, that check we deposited into the bank, na? That check we deposit into bank. So directly, indirectly, who receives this amount? Bank receives the amount. That's why, who is the receiver here? Bank is the receiver. Who is the receiver? Bank is the receiver. Then who is the giver? Debtor is the giver. Who is giving this check? Debtor. So debtor account. Our customer. Debtor is nothing but our customer. Yes or no? Our customer. Now tell me. Banku personal account plus debtor also personal account. Banku personal account, debtor also personal account. Rule: debit the receiver, credit the giver. So debit, credit. Finally, what is the entry we record? Bank account to debit to debtor account. Bank account to debit to debtor account. Important. Is this clear, students? Next transaction. Next transaction. Observe the next one. Deposited check dishonored. Means this transaction is related to this transaction. We deposited check into bank now. Now what bank will do? Bank will collect the check first. Bank will collect the check. If this check is honored, means bank collects the amount and that amount is deposited into our account. If due to any reason, if check is dishonored, means bank is unable to collect the check. Bank is unable to collect the check. In that case, whatever the entry you have been written in the previously, you have written previously, that entry becomes reverse. Entry becomes reverse. Observe carefully. Simply that entry becomes reverse. Debtor account debit to bank account. That's it. Earlier, at the time of deposit of check, what is the entry we have recorded? Bank account debit to debtor account. Now the same check has been dishonored. That's why previously whatever the entry we have written, that becomes reverse now. Indirectly, we are cancelling that entry. Sir, directly you can write like this, na sir, into mark. No, 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 no. We should not overwrite anything in the books of accounts. It leads to fraud. See, it leads to fraud. That's why we should not write like this. We should not write like this. Is it clear, students? Cancel any entry in the books. We should record the reversal entry, so that the effect gets cancelled. The effect gets cancelled. Hope you understood. Next one. Next important aspect. Payment by check to a creditor. That means we have paid amount to creditor. Who is the receiver? Creditor is the receiver. Who is the receiver? Creditor is the receiver. Creditor is the receiver. Yes or no? Who is the giver? We are not giving cash directly. We are giving cash to bank. That means indirectly who is the giver? Bank is the giver. So bank account. Creditor person. Bank also person. Sir, no. Now creditor account. Debit or credit? Debit. Because creditor is the receiver. Debit. Bank is the giver. Credit. So entry. Creditor account to debit. Creditor account debit to bank account. Creditor account debit to bank account. Understood this? Next one. The check, the issued check is dishonored. Issued check is dishonored means earlier whatever the check we have issued to the supplier or creditor, the same check gets dishonored. Means whatever means what the bank is unable to collect the amount. It may be some mistake due to any mistake, maybe due to insufficient balance in the account, mismatch of signature, or check validity is over, or any overwriting on the check. Due to any reason, check gets dishonored. In that case, what happens? Earlier, actually we have to pay amount to the creditor. Let us say 10,000. Actually, we have to pay amount to the creditor 10,000. For that amount, we have already issued a check. Have already issued a check so that the liability gets completed, cleared. The liability is cleared. But now what happened? Whatever the check we have given earlier that became dishonor. Now immediately whatever the entry earlier we have written that gets cancelled. How do we cancel that entry? Look at reverse of previous entry. Bank account debit, bank account debit to creditor account. Bank account debit to creditor account. Observe students. These two with this. Is it clear, students? If you have any doubt, pause the video, try to observe. If you want, rewind the video, play again. Is it clear? So, I already said this is the first chapter. I will discuss very slowly, very basic. Why? Because the moment you understand the journal entries chapter, then you will not face any difficulty in the next chapters. That's why invest your time in this chapter. Is it clear, students? Now come to the next one. Next transactions, observe. Payment of expense. Suppose I have paid rent. I have to pay rent. This is paid through check. This is paid through check. Or I am paying salaries. Salaries are paid through check. Like this, electricity bill paid. Nowadays, everybody is paying electricity bill through UPI. Yes or no? So that means what? Directly we are paying expense through our bank account. Yes or no, students? So expense account debit now. Expense account debit. So expense account. Concerned expense, whatever it may be, rent, electricity, or interest, dividend, whatever it may be. Yes or no expense. Payment na we have paid to bank. So indirectly, who is the giver? Bank is the giver. Directly, who is the giver? Bank is the giver. Now tell me, classify the accounts. Expense nominal account. Expense nominal account. Bank personal account. Bank personal account. Now recall the rules. Nominal account. Debit all expenses and losses. Credit all incomes and gains. So debit. Here, credit. Is it clear, students? So, entry expenses account debit, expenses account debit to bank account. Expenses account debit to bank account. Yes or no, student? Whatever the expense you pay, that expense name debit to bank. Next one. Next one. Bank charges. Bank charged for charges. The bank is providing so many services to us. Bank is providing so many services to us. Yes or no? For the services rendered by bank, bank will charge some nominal amount. Bank will charge some nominal amount. This becomes expense. Yes or no, students? Yes. In that case, what is the entry we record? Simply bank charges. We create bank charges account. Bank charges account. Here. Now, who is paying this amount? Bank is deducting this amount now. From our bank account only the amount gets reduced now. So, bank account. Directly who is paying these bank charges? Bank only paying. Bank paying, bank receiving. Okay, now that's it. Now, bank charges nominal account. Bank charges nominal account. Bank account personal account. Bank account personal account. Yes or no, students? Yes, sir. Now, nominal account rule, debit all expenses and losses. Personal account rule, credit the giver. So, what is the entry we write? Bank charges account to debit. Bank charges account to debit to bank. Bank charges account to debit to bank account. The entry we record. Yes or no, students? One. Interest charged by bank. Interest charged by bank. Sometimes we get some overdraft facility from the bank. Means, suppose I have some 1,000 rupees in my bank. How much amount can I withdraw from bank? 1,000 rupees. Suppose zero balance is the minimum balance. Zero balance account. Suppose if I want to withdraw 10,000 rupees, is it possible? As an individual, it may be not possible, but for businesses, it may be possible. Business may request the bank to allow some overdrawn facility. To overdraw amount, we can request the bank. That is in the form of overdraft facility. Is it clear, students? Yes. In that case, the bank may charge some interest. Interest is expense for us. Yes. So interest account debit. Interest account debit. And who is paying this interest? Bank only paying this interest. So that means the amount gets reduced in the bank account. This bank is only paying the amount. So interest is expense, nominal account. Interest is expense, nominal account. Bank real account. Bank real account. Sir, no, students. Now nominal account rule. Debit all expenses and losses. Credit all incomes. Bank. Sorry. Bank personal account. No? Personal account. Personal account rule. Debit the receiver. Credit. Entry. Interest account debit. Interest account debit to bank account. Interest account debit to bank account. Yes or no, students? Next one. Interest allowed by bank. Sometimes we deposit our money now. On those deposits, sometimes bank will pay some nominal interest. That becomes income for us. Becomes income for us. So interest received account. Because we have to make a difference between interest paid, interest received. That's why which account we are creating? Interest received. Interest received is nominal account. Nominal account rule, debit the expense, credit the income. Here interest received is income, so that his account interest account is credit. Next, who is the receiver of this interest? Bank is receiving interest. On one hand, bank is allowing. On the other hand, the amount is deposited into our account. No? On the other hand, the amount is deposited into our account. So, bank account. Bank is the receiver. The amount is directly credited into bank account. The amount is directly credited into bank account. Yes or no, students? Now, bank is personal account. Personal account rule: debit the receiver, credit the giver. Entry: bank account to debit to interest received account to interest received account. Yes or no, students? Yes, sir. Next one. Transfer of funds from one bank to another bank. Okay. For example, here SBI. You can write here. Transfer of funds from one bank. One bank is SBI, and another bank is HDFC. Write down HDFC. What is happened here? From SBI bank, the amount is transferred to which account? HDFC account. Who is the receiver? HDFC bank is the receiver. HDFC bank account. HDFC bank is the receiver of amount. Who is the giver of amount? SBI bank. Who is the giver of amount? SBI bank. Yes or no, students? Yes, sir. That's it. HDFC, SBI, both are personal accounts. Both are personal accounts. Rule: debit the receiver, credit the giver. Understood, students? Sometimes it happens like this. Both are personal accounts only. So amount is transferred from one bank to another bank. Finally, what is the entry we record? HDFC bank account debit. Amount you can write to SBI bank account. That's it. These are the maximum possible banking transactions. Apart from these transactions, we have also some more transaction, but here these transactions are enough. Remaining we discuss at the time of cash book. Remaining we discuss at the time of cash book. Is it clear, students? Observe carefully. Observe once again. Banking transactions. Very, very important. Now the same transactions, if you get in the transactions, means in the journal problem, directly write down the entry and amount is given in the problem, write down that amount. Now, is it clear? Hope you understood. Now come to, okay, you can do one thing, just pause the video, go through the concept once again. Pause the video and go through the concept once again. Is it clear, students? Make it fast. Is it clear, students? I hope you understood this. Next, come to another important area of concept of journal, that is goods utilized for other than sale. Generally, business will purchase goods for sale purpose. Yes or no, students? Goods are purchased for sale purpose. Suppose I am doing a furniture business. I have purchased furniture goods. For what purpose generally we purchase goods? For sale purpose. Sometimes what happens is the goods are used for other than sale. Means we purchase goods, but sometimes we will not sell all the goods, and some of the goods are utilized for various purposes. Various purposes. And in that case, what is the entries we have to write? What are the entries we have to write? First, observe the purpose. First purpose: goods taken for personal use. Means proprietor has taken some goods. Let us say we are running a grocery store. So proprietor may take some grocery items to his home. Yes or no? In that case, what we can say? Goods taken for personal use. goods taken for personal use. Next one, goods given as charity. Sometimes we may give goods as charity. Suppose I have some clothing store. Now, some clothes or some old stock I have given as charity. In that case, what is the entry I have to write? Next one, distribution of goods as free samples. In some businesses, now we need to distribute some goods as free samples. These are like advertisement expense. These are for what purpose? Advertisement. Next one, loss of goods by fire or theft or due to accident. Sometimes the goods may be kept in the godown. Some of the goods kept in the shop. Most of the goods kept in the godown. Yes or no, students? Because total stock it is not possible to place in the store. That's why some stock we kept in the godown. Suppose due to any reason the stock was lost. Stock were lost. Maybe due to theft, fire accident, or any due to anything. Goods lost. That is a these goods are meant for sale, na, but due to theft, fire, goods lost. In that case, what is the entry we record? Next one, goods used to make an asset. Means see, I am running a timber depot. Do you know timber depot? Wood. Timber depot. These people will deal with the raw wood. Wood. Okay. Now this wood, actually the wood I have purchased is for sale purpose. Plywood, whatever it may be. The wood I have purchased for sale purpose. But what I did, I have utilized this wood for manufacturing of furniture, which is used in the business. I have utilized this timber or wood or lags in the manufacture of furniture, and that furniture is used in the business. In that case, what we can say, the goods which meant for sale, we have utilized in making asset. That case, what is the entry we record? So these are the various situations of utilization of goods for other than sale. For other than sale, most of the goods we will sell. Most of, see, that is our business now. Purchase and sale of goods is our business, or providing services our business. Most of the goods are sold. Some of the goods may be used like this. In these cases, what is the entry we record? Simple. In all these cases, in all these cases, earlier at the time of purchase of goods, earlier at the time of purchase of goods, we debit purchase account now. Now, in all these cases, purchase account gets reduced. Purchase account balance gets reduced. Is it clear, students? Yes, because purchase account is expense, so that debited. Purchase account is expense, so that debited. Is it clear? Now we have used these goods for these purposes, so that now the expense cost gets reduced. Expense cost gets reduced. Do remember, students, this concept is very important. Now observe carefully. And first point, write down. In all the above cases, first note point, write down. In all the above cases, in all the above cases, purchase account is credited. Purchase account is credited. Second one, in all the above cases, amount is written at cost value. At cost value. This is very important. Sometimes in the problems they give you cost value of goods plus sale value of goods. Cost value of goods and sale value of goods. You observe, if we sell goods, suppose 100 rupees is the cost. 100 rupees is the cost, plus I am adding profit 20 rupees. I am adding profit 20 rupees. What is the total sale value? What is the total selling price? 120. Now this selling price consists of what? Cost plus profit. If I sell these goods, I can generate some profit. Suppose instead of selling goods, Instead of selling goods, I have utilized the same goods for these purposes. Means withdrawal purpose, charity purpose, free samples purpose, or goods theft, or goods used in making asset. In all these cases, if goods are utilized, then we don't generate any profit. We don't generate any profit. And notional profit we should not record in the books of accounts. Actual realized profit we can record, but notional profit we should not record in the books of accounts. That's why when there is no profit element, no selling price. But in the problem, they give you 120 rupees selling price, 100 rupees cost price. At what price you record the entry? At 100 rupees. What price you record the entry? At 100 rupees only. In all the cases, we record the entry at cost value. Is it clear, students? Is very important. Now observe what is the entry we record. Now goods taken for personal use. Who is taking goods? Proprietor. So proprietor account is debit simply. In the place of proprietor account, which account we debit? Drawings account. So drawings account to debit to purchases account. Drawings account to debit to purchases account. Is it clear? Next one, goods given as charity. Simple. Charity account to debit. Charity or donation. This becomes expense for us. Charity or donation. Account to debit to purchases account. In all these cases, purchase account balance gets reduces. Next, third one, distribution of goods as free samples. Free samples given only for what purpose? Advertisement purpose. So here, okay, you may debit either free samples account or advertisement account. Free samples account or advertisement account. Advertisement expenses account. Wait, to purchases account. To purchase. Is it clear, students? Next one. Goods lost by fire. Simple. What is the entry we record? Goods lost by theft or fire. Account debit to purchases account. Is it clear, students? Goods lost by fire or theft account debit to purchases account. Here itself I am writing the entries. Now, in the problems, if you get the amount, just you write the amount. That's it. Next one. Goods used to make an asset. By utilizing these goods, we are creating one asset now. We are creating one asset. So asset account debit. Asset account debit to purchases account. To purchases account. Observe, students. Asset account debit to purchases account. This is the concept of goods utilized for other than sale. Hope you understood. Okay. Pause the video and try to recollect one by one. To remember, in all the above cases, purchase account gets credited, and in all the above cases, we record the entry at cost price or cost value. Is it clear, everybody? Yes. Now, once you get complete all these things, next we try to solve some problems based on traditional approach. Based on traditional approach. Is it clear, students? We meet again in the next video. Till then, bye bye, everybody. Don't forget to revise everything. Suppose today you have watched, today you have assumed today you have watched 2 hours of video, because if you observe, we are recording only 1 hour video which comes a duration of 1 hour. Okay, so for your simplicity also, okay, after watching this 1 hour video, try to read once again the concept, plus try to solve the problems. Take some 10 to 15 minutes break, again watch the second video. Now again, after watching the second video, just go through the concepts which we have learned in that video. At the end of the day, make a cumulative revision. Cumulative revision means what? Whatever you have learned in the two videos, so try to recollect them once again. Like this, try to learn each day. Is it clear, students? Yes. So we meet again in the next video. Hello students, how are you all? I hope you are doing well. In the previous lecture, we have seen the concept of simple entry versus compound entry along with some example. At the same time, banking transaction. Here it is the transaction and what is the entry we have to write. So this you need to understand. Very important concept. After that, we have discussed goods utilized for other than sale. Generally, we purchase goods for the purpose of resale. But apart from sale of goods, we use the purchased goods for various purposes. In that case, what is the entry we have to write? Okay. And I hope you are writing the examples which we are discussing in the classroom. So don't forget because these examples will help you to understand the concept after some period of time. Because we forget whatever we are learning today, all the concepts you may not remember after some period of time. But if you have these examples in your notebook, then you will just recollect what we have discussed in the classroom. Is it clear, students? Now, with the same energy, we discuss the concept of discount now. It is another important aspect in our journal entries chapter. Concept of discount. I hope you have seen so many advertisements that 50% discount, 20% discount, 70% discount, even in online e-commerce websites, if you see, they give the ad 90% discount, 90. So what is the meaning of discount, students? Discount is nothing but reduction. Discount is nothing but reduction in the usual price of a product or service. Yes or no? Discount is nothing but what? It is a reduction. So some amount of the price is reduced. That may be product or service. So it is given to encourage more purchases or prompt payment. See, whatever the discount we see outside, that means a final discount to the consumer, that is different from this discount. Here we are talking discount from a business point of view. From a business point of view, do remember, students, we are not discussing the discount which you know. No. Here we are discussing about the concept of discount from business point of view. From business point of view. Look at types of discount. There are generally two types of discount. One is trade discount, another one is cash discount. Now we try to understand the purpose of what is trade discount and what is the purpose of it. Another one, cash discount, and what is the purpose of it. These two things we try to understand. Look at the trade discount. Generally, this discount is given by the wholesaler or manufacturer. So if you observe, here we have manufacturer. After that, distributor. This is called distribution network. Distributor. After that, wholesaler. After that, retailer. After that, consumer. Yes or no, students? So, from the manufacturer to reach the product to the final consumer, there are so many people in the middle. These are called middlemen. Distributor. So, distributor will buy goods from manufacturer. Wholesaler. Wholesaler will buy goods from distributor. Retailer. Retailer will buy goods from wholesaler. Consumer. Finally, the consumer are the people who consume the final product. Yes or no, students? Yes. Now we are talking about the discount given to consumer. We are not talking, sorry, we are not talking about the discount given to the final consumer. We are talking about the discount given by manufacturer to distributor, either manufacturer to distributor or distributor to wholesaler. distributor to wholesaler or wholesaler to retailer. We are talking about this discount given by whom to whom? Manufacturer given by manufacturer to distributor, or distributor to wholesaler, or wholesaler to retailer. Yes or no, students? We are talking about that discount. Is it clear, everybody? Yes. And the first one is trade discount. What is the purpose of giving trade discount? Means to encourage large number of to purchase. So we are encouraging the buyer to purchase large quantities of goods. Large quantities of goods. Try to understand trade discount. What is the purpose of giving trade discount? To encourage or to buy large quantity of goods. Large quantity of purchase. Simple. Large quantity of purchase of goods. Is it clear, students? So for this purpose, trade discount is given. Generally. If you see 1 kg rupees 100. 1 kg of item is rupees 100. Now the wholesaler is giving an offer to buyer. If you buy 5 kg, the price is 98. You buy 1 kg of goods or material, whatever it may be, the price is how much? 1 kg, 100. If you buy 5 kgs, then the price is 98. Automatically what happened here? 2 rupees discount they have given. This is called trade discount. What is the purpose of this discount? To encourage to sell more quantity of goods. Next, if you buy 10 kg, then the price is 95. You buy 10 kg, then the price is 95. Straight away from 100 rupees to 95, the price is reduced, and the difference 5 rupees is called trade discount. Difference amount is called trade discount. Difference amount is called trade discount. If you buy 50 kg, then the price is 90. Now straight away the price is reduced from 100 to 90. When do you get this discount? Only when you buy 50 kg material. 50 kg material. Then only you get this trade discount. If you buy only 1 kg, you get the price 100. If you buy from 1 kg to 5 kg, then 98 rupees. 5 kg to 10 kg, 95. 10 kg to 50, 90. Like that, the wholesaler or manufacturer or distributor, they will offer this type of discount to the buyer. What is the purpose of this discount, students? To purchase more quantity of goods or to increase the sales volume. So here, when he purchases 1 kg, the price is 100. But here, he is purchasing 50 kg. That means the sales turnover increases automatically. The sales turnover will increase. Yes or no, students? Yes, sir. Now, important aspect is trade discount is not recorded in the books of accounts. Trade discount is not recorded in the books. The books. Why, sir? Why? Because the invoice is prepared. Why? We should not blindly follow. Okay, trade discount is not recorded. Yes, don't record. No, why? Why trade discount is not recorded? Why? Because at the time of preparation of invoice, what he will do? Look at 50 kg into 100. How much total? 5,000. He will prepare the bill for 5,000. This is called gross amount. This is called gross amount. Yes or no, students? So immediately what he will do? He will deduct less trade discount rupees, trade discount 50 kgs na, 50 kgs into per kg how much discount he is giving? 10 rupees. So 500 rupees he will reduce. 500 rupees he will reduce. And what is the remaining amount payable? 4500. What is the remaining amount payable? 4500 net amount payable. Net amount payable. Net amount payable 4500. So he will prepare bill for 4500. That's why at the time of recording the transaction in the books of accounts, what we do is we directly take 4500 rupees in the books of accounts. Purchase account debit 4500 to creditor account 4500. That's it. Understood this simple logic? Yes or no, students? The next type of discount is, so at the time of recording transaction in the books of accounts, you find the trade discount concept in the problem. First, what you have to do? First, write down the gross amount. After that, deduct the trade discount. Record the entry, final amount, record the entry for 4500, whatever the amount you get in that transaction. Is this clear? Now, come to another type of discount, that is cash discount. Another type of discount, that is cash discount. First of all, what is the purpose of giving this cash discount? See, cash discount is given, it is given to collect amount promptly. Collect amount promptly or immediately. Sir, what is this, sir? Here, let us say we sold 4500 worth of goods on credit. So 2 months credit. 2 months credit. So when do we get this amount? After 2 months. Now we are giving an option to the buyer. As a seller, we are giving an option to the buyer that if you pay rupees 4500 within 15 days, I will give you 2%. I will give you 2% cash discount. I will give you 2% cash discount. Understood, students? Actually, how much amount he has to pay? 4500. This amount we receive only after 2 months. But what is the option that we are giving to the buyer? Hello, Mr. Buyer. Actually, you have 2 months credit free or free credit. You have 2 months free credit. You need not to pay any interest. So 2 months free credit. But you pay 4500 rupees within 15 days. From today, next 15 days, if you pay amount na, then I will give you more 2% cash discount. Already I have given you trade discount 10 rupee per kg. But this time I am giving more discount to you. That is 2%. That is called cash discount. That is called cash discount. So why I am giving this discount? To collect the amount promptly. To collect the amount promptly, I am giving this cash discount. Okay, now look at amount payable. Amount payable is equal to how much? 4500 minus, suppose if buyer pays amount within 15 days, then I have to allow cash discount at 2%. Tell me, 4500 into 2%. Is it 90 rupees? 4500 into 2%. Yes, 90 rupees. 90 rupees. So how much amount we collect from the buyer? 4410. Cash received. Cash received. So what is the net amount we receive from buyer? 4,410. And what about this 90 rupees? It is treated as, actually how much amount you have to receive from the buyer? 4,500. But how much amount you are receiving? 4,410. In your books, how much amount you have written that we have to receive 4,000 written from, uh, how much amount you have to receive from buyer? 4,500. But actually how much amount you are receiving? 4,410. Now remaining 90 rupees is treated as an expense. Treated an expense. For us it is an expense. For the buyer it is a gain. Yes or no, students? And we are giving a name to this expense, that is discount. Discount allowed. Discount allowed. And discount allowed comes under nominal account, because expense, na? Nominal account. What is the nominal account rule? Debit all expenses and losses, credit all incomes and gains. So it is debit. Now you people tell me, discount allowed, whenever you get cash discount, then we use the account discount allowed. This discount allowed account is debit. Is it clear, students? Yes. For us it is discount allowed. For opposite person it is discount received. For us it is discount allowed. For others it is discount received. We debit discount allowed account. Others credit discount received account. Yes or no, students? Observe. From seller point of view. Think from seller point of view. Discount allowed is debit. Buyer point of view. Same amount is nothing but discount received. Discount received. It is a gain. They will credit. Yes or no, students? Yes, sir. That's it. This is the concept of trade discount and cash discount. We have a problem on this concept that we discussed. When we discuss that problem, now then you will understand the concept of cash trade discount and cash discount. Tell me, trade discount is given to encourage more quantity of sales or more quantity of purchase. This trade discount is not recorded in the books as a final amount payable to the buyer or receivable from the payable to the seller and receivable from the buyer. Clear, everybody? Why? Because we record in the books direct net amount. Net amount we record in the books. After that, if this amount, if the seller wants to collect the amount promptly or immediately, then he will offer more discount to the buyer. What is the condition? If you pay amount within 15 days, then I will allow some 2% or 5% discount. If you pay amount after 15 days to 30 days, 15 days to 30 days, then I will allow some percentage. Next 30 to 45 days, some percentage. After that, no discount. Why? Because anyway you have to pay the total amount. This depends on terms and conditions. Terms and conditions. At the time of sale, generally we prepare invoice, sales invoice. That sales invoice contains all these terms and conditions. Is it clear, students? Yes. See, after completion of your CA Inter, you go to articleship. There you will find these type of all invoices. Is it clear, students? Yes. Now come to the concept here. Concept of discount. Is it clear, students? Yes. Now come to another important area, that is financial year. Financial year. I hope you heard this word, financial year. Financial year is nothing but it's a period of 12 months. 12 months. Sir, is it a calendar year? Calendar year starts from 1st January, ends on 31st December. That is also 12 months. 12 months time period maybe starts from any month, any date, and ends exactly within 12 months. Suppose in India, generally we follow financial year as 1st April. 1st April, the financial year starts from 1st April, ends on 31st March of next year. Let us say, for example, now we are in 1st April 2024 to 31st March 2025. We are in this financial year. Different countries will follow different financial years, but the time period is same, 12 months. 12 months is the time duration, but the day starts and the day ends will different from country to country. To make you understand, I have given some examples here. Observe. In India, generally we follow 1st April to 31st March of next year. In Australia, they will follow 1st July to 30th June of the next year. That means their financial year at present, their financial year is 1st July 2024 to 30th June 2025. And in China, they will follow 1st January to 31st December. Means at present, what is their financial year? This financial year is also called as fiscal year. So in economics, you come across this word, fiscal year. Generally, government will use these words. Government accounting, or at the time of preparation of budgets, they use these words. Okay. Next, China. At present, what is the financial year for China? 1st January 2025 to 31st December 2025. United States, they will follow 1st October to 30th September. At present, what is their financial year? 1st October 2024 to 30th September 2025. Next, United Kingdom, they will follow 6th April to 5th April of next year. Now, what is their financial year at present? 6th April 2024 to 5th April 2025. So, different countries, you can search, different countries will have different financial years. That depends on their customs of the country, tradition or custom of the country. Yes or no, students? Yes. Now, look at it. So, all the transactions and events that occurred during the year, during this financial year, we have to record in the books of accounts. During this particular time period, 12 months or 1 year, whatever it may be, whatever the transactions and events happened in the business, which are measured in terms of money, we have to record them in the books of accounts first. Is it clear, students? Now, the summary of all nominal accounts will be result of the business. We have discussed nominal accounts now. Nominal accounts is nothing but expenses, losses, incomes, gains. The summary of all these accounts is nothing but profit or loss. At the beginning of the class itself, I have discussed a small example how to calculate profit or loss of the business. There we have discussed sales minus, I will show you that problem just a minute. Here itself. Example 1 we have discussed now. Total goods sold for 1,25,000. For 1,25,000. This is our income. Sales nominal account minus expenses incurred for this sale. Expense also nominal account. Now the difference between income minus expense is nothing but profit or loss. But summary of nominal account is profit or loss of the business. Is it clear, students? Yes. This is the concept of financial year. I hope till here it is clear to you. Yes or no, students? So if you still have some doubts, do one thing, just pause the video and refer once again. Still, if you have any doubts, you can post those doubts into the doubts section. Is it clear? So I will clarify. Right, students? Now we go to the problems. We go to the problems. See, first problem, second problem, third problem, fourth problem. These we discuss only after discussion of accounting equation approach. Accounting equation approach we discuss after trial balance chapter. Why? Because now we go with the flow. Already we understood how to record the transaction. Immediately the next step is ledgers, how to prepare ledger accounts. After that, after preparation of ledger accounts, the next immediate step is preparation of trial balance. Till here we go with a flow. But accounting equation approach is totally different concept. That's why I will discuss accounting equation approach after completion of trial balance. So we come back to journal entries chapter once again after completion of trial balance. So that's why till the completion of accounting equation approach concept, let these problems pending. Is this clear, students? Yes. Don't worry, I will cover all the ICAS sources. That is our promise. Is it clear? Now come to illustration 5. Means problem number 5. Be careful, from now onwards we directly record the entry. If you want, you can just, I will give oral explanation for the analysis. If you want, you can first write down the analysis, then after you write the entries. Look at, journalize the following transactions. Also state the nature of each account. Nature of each account means whether it is personal or real or nominal. Yes or no, students? Personal, real or nominal. Means actually we draw a format for journal. Here they are asking, tell me the nature of account also. So now we draw one more column to say, to mention what is the nature of account. This column we draw after particulars column. This column we draw after particulars column. Is it clear, students? Yes, sir. Now look at it. Involved in the journal entry. Fine. Read one by one. Just pause the video first. Read one by one entry. Read one by one entry. Okay. Here we have so many entries. Now read one by one. Next step. Observe now. 2022. They are giving these transactions in the year 2022. Month is December. Observe the dates. All the dates are in chronological order. All the dates are in chronological order. Yes or no, students? Yes. And they are giving amount in hundreds. They are giving amount in hundreds. We are also write the same in hundreds. Is it clear? Right. Now read the first transaction. 2022 December 1st, Ajit started a business with a capital 4 lakhs. Add more 2 zeros. You get 4 crores. Yes or no, students? Yes. Now here we may get some confusion. Sir, can I take this amount as cash or can I take this amount in bank? Here most of the students will get a doubt, because receiving aspect is what cash comes in, yes, but it is 4 crores amount now. And that too, if you observe in the next transaction, they said majority of the transactions through bank, but they did not mention specifically that we have opened a bank account and we deposited that amount into bank. They did not mention. Why? Because nowadays at the time of starting business itself, we open the bank account. That is implied. The moment we start the business, after getting certificates or business proofs, labor license or trade license or certificate of incorporation, okay, all these things, immediately we open a bank account. That's why their assumption is the total amount is deposited into bank. The total amount they are taking from bank to this total amount is directly deposited into bank. Now tell me, who is the receiver? Bank is the receiver. Who is the giver? Proprietor is the giver. So what are the accounts affected? Bank account, capital account. Yes or no, students? Bank personal, capital also personal. Now recall the rules. Debit the receiver, credit the giver. So what is the entry finally we record? Bank account debit to capital account. Yes or no, students? Now go to journal, draw the format. Pause the video, draw the format first. Problem number 5. Problem number 5. In the books of, first write down the heading, need heading. In the books of Ajit, in the books of Ajit, journal entries. In the books of Ajit, journal entries. Yes or no, students? Now draw the format. Now this time, how many columns? Tell me. Total 6 columns we have to draw. Why? Because they asked mention the nature of account also. Look at the format first. Look at the format first. So minimum it requires 2 pages, students. 2 pages. It is better to draw 2 pages format because we have more transactions. No, have to write a narration also. All those things. No. Yes. Next one. Now you people also start drawing the format. Small column is for ledger folio. I already said we discuss ledger folio column later. Now this is for nature of account. Is it clear, students? So my format is ready. What about your format? Check it once. So here I will write date, particulars, nature of account, LF column, debit rupees. Here write down rupees in 1000. Rupees in 1000. Observe. Next one, credit rupees. Clear, students? Now look at the first entry. First, how do we write the date? 2022 December 1st. Is it clear? Now, bank account debit. Here I am not writing narration, student. You people just write down narration because I will tell the narration orally. Don't worry. Okay, bank account debit. They have given 4 lakhs because already we have written at the top rupees in 100. Now tell me, bank account is personal. Just write down here personal account. Okay, 4 lakhs. To capital account. This is also personal. Yes or no? 4 lakhs in the credit column. Tell me what is the narration we write? Being started business with capital. Being started business with capital. Yes or no, students? Yes, sir. Next entry. He withdrew, third date. He withdrew cash for business from the bank 2000. What we are doing? We are withdrawing cash from business. Sorry, cash from bank. For what purpose? Business purpose. Already we have discussed this now. Look at cash withdrawn for office use or business use. What is the entry we have to write? Cash account debit to bank account. Yes or no, students? Yes, sir. So write down. Directly write down third date. Third date. Cash account debit. Cash account debit. Cash account is real account? Yes, sir. Real. How much? They said 2000. Okay. 2. Who is the giver? Bank is the giver. So that bank transactions are very, very important, students. Bank is personal, na? How much? 2000. Is it clear? Next one. What's the narration? Being cash withdrawn from bank. Being cash withdrawn from bank. Next one. Fifth date. He purchased goods by making a payment through bank 15,000. He purchased goods. Entry. Purchases account debit. But payment, what is receiving giving aspect? Generally, if you pay cash, then cash goes out. Cash is the giving aspect. But here, who is the giver? Bank is the giver. So what is the entry we record? Purchases account debit to bank account. Yes or no? Fifth date, purchases account debit. Purchases is nominal account. 15,000 to bank account. Because payment made through bank now, that means we have issued a check. So whenever we issue check, the supplier will present the check into bank. What is the narration we record? We write being goods purchased and issued check. Being goods purchased and issued check. Here, bank account is personal account. Na? So you can write narrations from your suggested answers booklet. Okay. Next one. Eighth date. He sold goods and received the payment through bank. He sold goods. Generally, when you sell goods, what we receive? Cash we receive. But here, what we are receiving? Check. This check we deposit into bank. In that case, who is the receiver? Bank is the receiver. Then what is the entry we record? Bank account to debit. Bank account to debit. Eighth date. Bank account to debit. Bank is personal account. To sales account. To sales account. Tell me how much it is? 16,000. Sales is nominal account. Sales is nominal account. So 16,000. That's it. What is the narration we write? Being goods sold and received check. Yes sir, no students? Yes sir. That's it. Next one. 10th date. He purchased furniture and paid by check 2500. We have purchased furniture. But amount is paid through bank. So we should check. Yes or no? So what is the entry we can write? 10th date. What comes in furniture? Furniture is asset. So furniture account debit. It is real account, na? Real account. How much? 2500. What is giving aspect here? Actually, if you give cash, then we write cash account. But here what we are giving? Check. So that we write bank account. We write bank account. Bank is personal account. So you people read and write. While you are writing, na, read the entry, no problem. So in our childhood, we have learnt everything by loudly speaking. Yes or no? By shouting. By shouting. Yes or no? For example, in your childhood, na, nursery or LKG, so your teacher will uh, uh, teach a rhyme like this. Johnny, Johnny, yes, Papa. You people also what you do? Johnny, Johnny, yes, Papa. Yes or no? You don't know the meaning, na, first of all. At that age, you don't know the meaning. What is the meaning of Johnny, Johnny, yes, Papa? No. But your teacher is pronouncing so that you people also pronouncing the same loudly. Yes or no? Here also. But here we write by understanding. Here we write by understanding. Yes or no, students? That is the difference. Simple logic. Simple logic or not? Yes, sir. Okay, okay. Narration being furniture purchased and issued check. That's it. Next one. 12th date. He sold goods to Aravind 2400. Now tell me, I already said at the time of purchase of goods or sale of goods, check whether this is a cash transaction or credit transaction. So here they did not mention whether any cash received or not, but they have given the customer or debtor name. So we assume that it is a credit transaction. What is the entry we record? Aravind account debit. 12th date. Aravind account debit. Aravind account debit. Aravind account is personal account, na? 2400 to sales account 2400 being goods sold on credit to Aravind. That's it. Yes or no, students? Next one. 14th date. He purchased goods from Amrit. Now tell me, is it cash transaction or credit transaction? They did not mention about cash. That's why we assume it is a credit transaction. 14th date. So what is the entry we record? 14th date. We have purchased goods now. So purchases account to debit. Purchases account. Purchases account is nominal account. Your sales is also nominal, write down. Nominal. So how much goods purchased? 10,000. 10,000. To Amrit account. To Amrit account. Amrit account is what? Personal account. How much? 10,000. Yes or no, students? Yes, sir. That's it. 14th date. Over. Being goods purchased on credit. Is it clear? Next one. 15th date. He returned goods to Amrit. Who is Amrit? Our creditor, supplier. We are returning goods. It becomes purchase returns. So, whatever the entry we have written for purchase, that becomes reverse. Means Amrit account debit. Look at this 14th date, whatever the entry we have written, that becomes reverse. Amrit account debit to purchase returns account. The place of purchase, we write purchase returns. So, 15th date, Amrit account debit. Amrit account is personal account. To purchase returns. What is the other name for purchase returns, students? Returns outward. Yes or no? How much? 500. That's it. Being goods returned to Amrit. Being goods returned to Amrit. Yes or no? Yes. Next one. 16th date. He received from Aravind. Who is Aravind? Aravind is our debtor. Who is Aravind? Aravind is our debtor. A full settlement. Full settlement means actually how much amount Aravind has to pay. How much amount Aravind has to pay? 2400. How much amount Aravind has to pay? 2400. So full settlement means after this, but how much amount he is paying? 2300. He has to pay 2400, but he is paying 2300, and they are saying that it is the full settlement. Means there is a difference of 100 rupees. There is a difference of 100 rupees. Here we assume that this 100 rupees is nothing but discount allowed. This 100 rupees is nothing but discount allowed to Aravind by us. Yes or no, students? This is the meaning of full settlement. Means after payment of 2300, now there is no relationship between Aravind and business. But here Aravind has to pay 2400 now, but he is paying only 2300 now. How this becomes final settlement? Means the difference 100 rupees we are giving as discount. And I already said discount allowed is expense for us, nominal account, and discount allowed account is debit. Now tell me, what is the receiving aspect here? What is the receiving aspect? 2300 we are receiving now. So look at 16th date. Right? Now the next transaction is, yeah, 16th date. How do we write the entry? Tell me. 16th date. How do we write the entry? First of all, tell me what is the receiving aspect. 16th date. Cash account to debit. How much we are receiving? It is real account now. How much we are receiving? 2300. And discount we are allowing, it is a loss for expense for us, so it is also debit. So discount account to debit. Discount account debit. Discount is nominal account. How much discount we have given? 100. 2. 2. Who is the giver of this? Aravind. You may ask, sir, Aravind is giving only 2300 na sir. Yes, and we are also giving 100 rupees discount. So here you can write discount allowed. To Aravind account, now debit is always equal to credit 2400. Observe this. Yes or no, students? So this entry is nothing but compound entry or combined entry. Being received from Aravind full settlement and allowed discount 100. Yes or no? And if you observe here, Aravind account is debited with 2400. Aravind account is debited with 2400 and credited with 2400. One time debit and another time credit means Aravind account gets closed in our books. Earlier, Aravind is our debtor. Now he settled his account. Now Aravind is no more debtor for us. Yes or no, students? Yes, sir. Super. Next one. 18th. He withdrew goods for personal use 1000 rupees. He withdrew goods for personal use 1000. Withdrew goods for personal use 1000. Now it is the concept of goods withdrawn for personal use. What is the entry we record? If you remember, here we have discussed entries now. Goods withdrawn for personal use. What is the entry? Drawings account debit to purchases. The same entry we record. What date? 18th date. Drawings account debit. Drawings account represents proprietor na. Drawings account debit. Drawings account is nothing but personal account. 2. Purchases account. 2. Purchases account. How much? Purchases account is nominal account. 1000. Here also 1000. That's it. Being goods withdrawn by proprietor for personal use. Is it clear, students? That's it. Next one. 20th. He withdrew cash from the business for personal use. Earlier he has withdrawn goods. Now this time he is withdrawing cash. Yes or no? Now what is the entry? Same. Whatever the proprietor withdraws from business, we debit drawings account. 20th date. 20th date. Drawings account debit. So shall we write the combined entry for this? You may write, but this transaction happened on two different dates. 18th date he has taken goods, 20th date he is taking cash. Okay. So drawings account is personal account. How much? 2000 to cash account because he is taking cash now. Cash account. Cash is real account. That's it. Being cash withdrawn for personal over. This is the entry we record. Next one. 24th date. He paid telephone charges 110. Telephone charges expense for us. So expense account debit to cash account. 24th date. Telephone charges account debit. Telephone charges account debit to cash account. Telephone charges nominal account. Yes or no, students? Cash real account. So you need a lot of practice of writing entries. Don't simply ignore the writing practice. So you need writing practice of entries. Okay. Telephone charges 110. Cash also 110. Being telephone charges paid. Paying telephone charges paid. Yes or no, students? Next one. 26th. Amount paid to Amrit in full settlement 9,450. Actually, for how much amount we have purchased goods 10,000. Here we need a little bit analysis, students. Observe carefully. Here we have purchased goods for 10,000. Here we have purchased goods for 10,000. If you observe, 500 worth of goods returned. 500 worth of goods returned to Arvind. That means you need not to pay 500 rupees. First we have purchased goods for 10,000, but later we returned 500 worth of goods. So what is the remaining amount? 9,500. What is the remaining amount? 9,500 we have to pay. But how much amount we are paying? 9,450. How much amount now we are paying? 9,450. What about the difference of 50 rupees? What about the difference of 50 rupees? This is nothing but discount received from Arvind. Discount received from Arvind. Understood or not? This is nothing but discount received from Arvind. Clear, students? Now how do we write the entry? That is the question mark. 26th date. Observe how I am writing. First, who is the receiver? Amrit is the receiver. Who is the receiver? Amrit is the receiver. Amrit is personal account. Don't write the amount, wait. Now, how much amount we are paying? Cash account. Sir, we are paying 9,450. How much amount we are paying? 9,450. Next. How much discount we are receiving? Because discount received is income for us. Income means nominal account. Nominal account rule, credit all incomes and gains. So discount received account. Discount received account. Do remember, discount allowed account is different and discount received account is different. Discount cash is real. Discount received is nominal. This is also compound entry, students. This is also compound entry. How much discount we received? 50. Now put together total amount 9,500, write down. Clear? Now if you keenly observe 10,000 rupees worth of goods purchased from Amrit. 10,000 worth of goods purchased from Amrit. 500 rupees debit. Means we returned goods. So what I said, debit credit minus 10,000 minus 500. What is the excess amount? 9,500. Debit or credit? Credit is more. Credit is more. Yes or no? Yes. Now his account is settled. Now his account is settled by paying 9,500. Now his account is settled by paying 9,500. Observe clearly. Understood? Next one. Next one. 31st. 31st. Paid for stationery 200. Paid for stationery 200. Rent 5,000. Salary is 2,000 from the bank. If you can observe, I said at the time of compound entry, you want to write compound entry, there are two conditions. First one, the transactions must be similar nature. If you observe here, paid for stationery expense, paid for rent expense, paid salaries to staff expense. These three are expense, so similar nature. And these three payments are done on 31st March. So the transaction must be happened on a day. Now these three payments all are made on 31st. So that what we can write? We can write a combined entry. So all expenses debit. To meet all these expenses, we have paid amount from bank. So bank account credit. Entry 31st. First, stationery account debit. Stationery account debit. Stationery is nominal account. Stationery is nominal account. How much? 200. Next one, rent account to debit. Rent is also nominal account, 5,000 to 5,000. Next is salaries. Salary is also nominal account. How much? 2,000. 2. 2. All these payments are made from bank. So to bank, total amount add. Because to remember, when you are writing compound entry or combined entry, debit total must be equal to credit total. 7,200 being expenses paid to bank. That's it. Being various expenses paid through bank. Is it clear, students? That's it. And look at the last entry. That is 31st. Goods distributed by way of free sample. This also we have discussed now. Goods given as free samples. Look at third one. What is the entry we got? You may debit either free sample account or advertisement expense account to purchases. Understood? Write down 31st. We debit advertisement expense. So advertisement expense account debit. Advertisement expense is nominal account, student. Nominal account. How much? 2,000. Is it 2,000 only? Yeah, 2,000. To purchases account. That banking transactions plus goods utilized for other than cash, sorry, sale. These two are very important. Plus discount concept. These three concepts are very important at the time of recording journal entries. Purchases account, nominal account. Purchases account also nominal account. So this is our problem. Important problem. This covers everything. Almost all transactions are covered, important transaction, except discount transaction. That we see in the next problem. We have problem number 14. There we discuss. Yes or no? Now observe this problem once again. Make sure that you practice this problem once again. No problem. At least orally. Is it clear, students? Yes. Now next look at it. Yeah. Problem number 6. Problem number 7. Problem number 7 we discuss. Problem number 6. Problem number 8. And problem number 9 also we discuss now. Problem number 10, 11, 12, 13 already completed, 14. These problems we discuss, and the remaining problems we discuss only after completion of accounting equation approach. Accounting equation approach. Now we start solving problem number 9. Problem number 9. No. Problem number 6 we can do only after accounting equation approach. You can observe out of the problems, whatever the problem contains, accounting equation approach na, that we discuss later. At what time? You can write here after trial balance chapter. After trial balance. Okay, you can write like this. After trial balance chapter. Yes or no, students? Yes, sir. Now we discuss problem number 7. Here, look at it. Hello, students. How are you all? I hope you are doing well. In the previous class, we have discussed till problem number 5. I hope you understood this problem. Problem number 5. Is it clear, students? So try to solve the problem once again. Right. Next, come to problem number 7. Next, come to problem number 7. Problem number 6, already I said we discussed this problem after completion of trial balance. Now look at problem number 7. Transactions of Ramesh for April are given below. So these are the transactions for the April month. Journalize them. This is our illustration 7 problem of ICAI. Okay. Now look at 2022 April 1st. What happened? Ramesh started business with 10 lakhs. So here the first question comes, sir, whether I take this investment either in the form of cash or in the form of bank. Most of the cases you take in the form of bank itself. In this problem, all the transactions are taken from bank only. Even though if you observe first, see whenever you are practicing problem for journal entries, first try to read all the transactions. You observe the pattern of transaction here. Bought goods for cash, even though they said it is for cash, but you people tell me, if I take total 10 lakhs rupee, if I take total 10 lakhs rupee as cash investment, here they said cash, okay fine, but see the next transaction immediately, drew cash from bank. Observe, suppose if I take the total investment as cash, then what about the bank transaction? What about this transaction? They did not mention that they have opened a account with the bank now, but they are giving that we have withdrawn amount from bank. That's why here what they did is they have taken all the investment in bank directly, and all cash transactions they recorded through bank only. Is it clear, students? Yes. Now, so that what is the entry for the first transaction? We write entry for the first transaction, bank account debit to capital account. So draw the journal format here. Problem number 7. Problem number 7 in the books of in the books of who is the proprietor? Ramesh. In the books of Ramesh, in the books of Ramesh, journal entries. In the books of Ramesh, journal entries. So try to draw the journal format. Here you need not to mention nature of account like in problem number 5. Problem number 5, they have specifically asked that mention nature of account also. But in this problem, you need not to write nature of account. But in your mind, you can visualize. Okay. Now look at date, particulars, LF, debit rupees, and credit rupees. Is it clear, students? Now look at one by one entry first. First, write down the year 2022, April 1st. Bank account debit, bank account debit to capital account. How much? 10 lakhs. Being started business with capital. Yes or no, students? Next, draw a simple line. That's it. This is our first entry. I hope at this point of time you can manage writing the entries. Yes or no, students? So, whenever you read the entry, try to remember the steps. What are those steps? Identify accounts involved, identify nature of account, recall the debit credit rules. After that, record the entry. That's it. Next one. Third one. Bought goods for cash 50,000. Bought goods for cash 50,000. Even though they may have mentioned this for cash, but we treat it as from bank. So what is the entry we record? Purchases account debit. Third date. Purchases account debit. Purchases account debit to bank account. Purchases account debit to bank account. How much? 50,000. 50,000, 50,000. What is the narration we write? Being goods purchased. Being goods purchased. Is it clear, students? Next one. Fifth date. True cash from bank 10,000. So what is the entry we record? Cash comes in na. So cash account debit to bank account. Fifth date. cash account to debit 10,000 to bank account. Cash account to debit to bank account. Is there any difficulty here? That's it. 13th date, sold to Krishna. We have sold goods to Krishna on credit. They said specifically goods are sold on credit 1.5 lakh. So entry we record 13th date, 13th date. What is the entry for credit sales? Who is the receiver? Krishna is receiver. So receiver account debit. So Krishna account debit. How much? 1 lakh 50,000. 1 lakh 50,000. Is there any difficulty here? To sales account, because sales is income na, nominal account credit. 1 lakh 50,000 being goods sold on credit. Being goods sold on credit. Is it clear, students? Next one, 20th date, bought from Sham goods on credit. This is also credit purchase 2,25,000. What is the entry we record? Purchases account debit to Sham account. 20th date, purchases account debit to Sham account. Purchases account debit to Sham account 2 lakh 25,000. 2 lakh 25,000 being goods purchased from Sham on credit. Yes or no, students? Next one, 24th, received from Krishna. Who is Krishna? Krishna is our debtor. So this transaction can be related with the 13th date. How much amount we should receive? 1 lakh 50,000. We should receive 1 lakh 50,000 from Krishna. But how much amount he is paying? 1 lakh 45,000. Remaining 5,000 rupees is discount. Already this type of transaction we have seen in the previous problem. Yes or no, students? So how do we write this? First, what is the receiving aspect here? 24th date. What is the receiving aspect? Tell me. Bank. We are receiving cash. Minute. Yeah. Yes, write down 24th. Bank account debit 1,45,000. We received check. Okay, impliedly, and we are allowing discount. Na discount is expense for us. Discount is expense for us, and it is debited. So discount allowed account debit 5,000 to Krishna account. Who is the giver? Krishna. So Krishna account. How much? 1 lakh 50,000. Yes or no, students? That's it. This is the entry we record. Next one, 28th date. 28th date, paid Sham cash 2,15,000. Even though they said cash, but we take it as bank. Fine. Now, how much amount payable to? How much amount is payable to Sham? 2,25,000 we have to pay to the Sham. But how much amount we are paying? 2,15,000. Remaining 10,000 is nothing but discount received from Sham. This type of entry also we have seen already. So 28th date, how do we write the entry? First, who is the receiver? Sham is the receiver. Sham is the receiver. So Sham account debit. What is the amount payable to Sham? 2,25,000 is payable to Sham. Observe, this is 2,25,000. Now we are paying to, how much amount we are paying to bank? 2,15,000 we are paying. Remaining amount is discount. So discount received account. Discount received account 10,000. Discount received account 10,000. Is it clear, students? That's it. Observe carefully. Okay, next. 30th date. 30th date, what happened? Look at. Cash sales for the month 8 lakhs. Even though they have given cash sales, we consider it as bank. Okay. So, what is the entry here? 30th date. 30th date. Bank account debit. Bank account debit 8 lakhs. Here our assumption is majority of the amount he is depositing into bank and he is utilizing the amount from bank. So bank account debit to sales account. How much? 8 lakhs. Is it clear, students? So being goods sold. Being goods sold. That's it. Next one. Next, look at paid rent 50,000, paid salary 1 lakh. Now, all the amounts we are depositing into bank, so that these also we pay from bank. These are the expenses: rent account debit, salary account debit to bank account. Write down same 30th date. You can write a combined entry here. So 30th date, rent account debit, rent account debit. Next, salary account debit. Rent account debit 50,000. Next, salaries account debit. Salaries account debit 1 lakh. Salaries account debit 1 lakh to bank account. To bank account 1.5 lakh. Being rent and salaries paid through bank. Being rent and salaries paid through bank. Observe, students. So this is our problem number 7. What way do you find any difficulty here? Here only understanding the problem is important, because the moment you take the first transaction as cash contribution of capital, then the remaining transaction it is not possible to justify to us. That's why the initial transaction we have taken in bank. Clear, students? So observe the problem once again. Next one. Now come to problem number, see, problem number 8, 9, 10, 11, 12. All these problems we try to answer after discussion of accounting equation approach, because here ICAI has given more problems on accounting equation, but they will not ask accounting equation problems in the exam. Most of the problems they have given on accounting equation approach, but they will not ask any question of that in the exams. Do remember, but just for understanding the concept, they have given these many examples. So now problem number 13 already completed. Now come to problem number 14. Just a minute. Yeah. Come to problem number 9 first. Problem number 9 we can solve. This problem number 9 is nothing but your study material practice question 2. Suppose if you have already registered with ICAI, you receive books. So you can check that. study material practice question 2. Even the material you can download from icai.org website directly. BOS Knowledge Portal, Board of Studies Knowledge Portal. You can directly download the material also. You can see here. Now, past journal entries for the following transactions in the books of Gamma Brothers. See, whatever the transactions they are giving here, they are completely different from previous year problems. Here they are giving random transactions. Here they are giving random transactions and they are asking us just to write the entries. And do remember here each transaction is separate. There are no dependent transaction. All are independent transactions. So for each transaction we have to record the entry. First, whose books we are writing? Gamma Brothers. First put the heading problem number 9. Problem number 9 in the books of Gamma Brothers. In the books of Gamma Brothers. The books of Gamma Brothers journal entries. The books of Gamma Brothers journal entries. Okay. Date, particulars, ledger folio, debit rupees and credit rupees. Is it clear, students? That's it. Now look at one by one transaction. See, observe carefully. Employees of our organization had taken inventory. So employees had taken inventory worth 1 lakh, but whose cost price is just 75,000. So our employees, they had taken inventory worth of 1 lakh, but whose cost price is only 75,000 on the eve of Deepavali, and the same was deducted from their salaries in the subsequent month. That means our employees on the eve of Deepavali, they have taken some goods. Okay. Generally, we have purchased goods for the purpose of resale, but our employees, they have taken some inventory on the occasion of Deepavali. Now, what we do, we are not giving them as at free of cost. We are not giving them at free of cost. Same amount we will adjust against their salaries. Actually, we have to pay salaries now. What is the entry for payment of salary? Salaries account debit to cash or bank account. But here what we are doing, we are giving goods. And do remember, to the employees, generally we will not give goods at selling price because they are our employees. Na? So we give goods at cost price only. This is the important aspect of this problem. Look at how do we write the entry. They have not given date now. That's why I am writing just Roman number. Observe carefully. So first what I write, salaries account to debit. Salaries account to debit. Which price I consider? Only cost price. Don't consider selling value of goods. Why? Because to our employees, we give goods not at free of cost but at cost price itself. 2. Purchases account. Because employees have taken goods now. Inventory is nothing but stock, nothing but goods. They have taken goods. To sell goods, then we credit sales account. Apart from that, if any other purpose goods are utilized, simply we credit purchases account. Here, how much? 75,000. That's it. Is it clear, students? That's it. Being goods taken by employees, the same can be adjusted against their from their salaries. That's it. Okay. Next one. Second one. Wages paid for erection of machinery 18,000. This is another important aspect. See, here we are paying wages. Generally, wages are expense for that for us. Normally, what is the entry I have to write? Normally, what is the entry I have to write? Second one, wages account to debit. Wages account to debit. How much? 18,000. Wages account to debit 18,000 to cash or bank account. Cash or bank account 18,000. Normally, this is the entry I have to write. Yes or no, students? Yes. But the important concept here is these wages are paid for erection of machinery. First, try to understand what is the meaning of erection of machinery. The machinery is asset. Machinery is asset. Erection of machinery is nothing but to put the machinery, we have to ready the place first. Suppose we want to install a big plant and machinery in our premises. In our premises, like let us say for example, generator we want to install in our premises. A big generator. To put this generator, we need some space. So that is to construct that space or place, we need to incur some expenses to construct that place, because that generator we should not keep on a flat surface. On the flat surface we have to construct, because some above the surface we have to put the generator. Yes or no, students? To construct that we need to incur some amount, and all those amounts, whatever the expenses you are incurring, for what purpose you are incurring? To install the machinery and to keep, we are readying the place, to put the machinery. Yes or no? That's why what we do is, these expenses we directly add to the cost of machine. These expenses we directly add to the machinery cost. That's why instead of debiting wages account, what we do is we directly debit machinery account. Because of these type of expenses, the machinery value gets increases. That's why machinery account we debit. This is another important entry. Machinery account debit. If you debit wages account na, it is a mistake. That's why machinery account we have to debit. Is it clear? Yes. Next one. Third one, income tax liability of proprietor. Income tax liability of proprietor 17,000 was paid out of petty cash. Petty cash is nothing but, see, in the business generally, apart from huge amounts, the expenses of business involves some expenses, it may involve huge amount, but some expenses it may involve nominal amount. To pay these type of expenses, generally we appoint a person who is an employee of the organization. We hand over, or we give this responsibility also to that person to pay these small expenses. For that we pay some cash first. He will incur he will incur these petty expenses means small expenses. He will incur these expenses out of that petty cash. That is our petty cash. Income tax liability of proprietor, actually this amount should be paid by the proprietor out of his pocket, but who is paying? Business is paying. So we treat this as drawings. Is it clear, students? So third one, we treat that as drawings. So drawings account debit 17,000 to petty cash, because out of petty cash only they paid. So to petty cash 17,000. That's it. Being income tax liability of the proprietor paid out of petty cash. Simple logic. Last one, very important one. Purchase of goods from Naveen of the list price of 2 lakhs. Actually, we have purchased goods from Naveen for 2 lakhs. List price 2 lakhs. Quotation price. He allowed 10% trade discount. What we have to do first? From the 2 lakhs, from the 2 lakhs, first we have to deduct, from the 2 lakhs, first we have to deduct trade discount na, minus trade discount, trade discount at 10%. Means how much? 20,000. Yes or no, students? 2 lakhs is the list price and 10% is the trade discount. What is the remaining amount receivable? 1,80,000. Sorry, remaining amount payable because it is purchased na. Remaining amount payable 1,80,000. And what they are saying, 5,000 cash discount was also allowed for quick payment. Actually, we have to pay to the Naveen 1,80,000, but we are paying immediately cash. We are paying cash immediately. We are paying cash immediately so that he is also giving 5,000 rupees cash discount. He is also giving 5,000 rupees cash discount. So finally, what is the net amount we are paying? 1,75,000. Now you people tell me, how do we write this entry? We know that trade discount is not considered in the books of accounts. So whatever the goods you have purchased, its value is 1,80,000. Its value is 1,80,000. But at the time of making payment, we are receiving some 5,000 rupees discount and finally we are paying 1,75,000. Is it clear, students? Now, how do we write the entry? Observe carefully. Fourth one. First, purchases account debit. Purchases account debit. How much? 2 lakhs. Sorry, 1,80,000. 1,80,000. Clear? Next one. 2. Cash or bank account. You may take bank. So how much amount we are paying? 1,75,000 we are paying. And we have received discount na. So discount received account 5,000. Discount received account 5,000. That's it. Observe. And this working note you just write down. Working note 1. Here just give reference of working note 1. Is it clear, students? List price 2 lakhs minus trade discount 20,000. Remaining amount payable 1,80,000. Out of that we are deducting cash discount and final net amount payable 1,75,000. This is how we record the entry. Is it clear, students? Yes, that's it. This is our problem number 9. Now come to problem number 14. Problem number 14. Okay, look at. Pass journal entries for the following transaction. This problem is exclusively to understand the concept of trade discount and cash discount. Exclusively to understand the concept of trade discount and cash discount. Is it clear, students? Now look at first one. First one. Purchased goods from Bhargav. Purchased goods from Bhargav at a list price of 40,000. At a list price of 40,000 at a 10% trade discount. You tell me, list price is 40,000. Out of that, what we have to deduct? Discount we have to deduct, trade discount 4,000 trade discount. What is the remaining amount payable? 36,000 we have to pay. Yes or no, students? And he is also allowing 5% cash discount. 5% cash discount. The amount was paid at the time of purchase itself. That's why he is giving 5% cash discount. So 36,000 is the amount payable. 36,000 into 5% comes around 1800. Comes around 1800. What is the net amount we pay? 34,200. This calculation is also very important. Is it clear, students? Now finally, what is the entry we record? Simple. Observe carefully. Put the heading problem number 14. Problem number 14 in the books of whose books we are writing entries in the books of leave space, that's it, just leave space because business name is not given. Write down journal entries. We are writing journal entries. Clear? Now draw the format. Date, particulars, LF, debit rupees and credit rupees. Is it clear, students? Yes. Now tell me, how do we write the entry? Simple. First one, yeah, just give the number. First one, purchases account debit. Working note 1. Whatever the calculation we have shown, this is nothing but working note 1. Here what we write? List price of goods. Here we write list price minus trade discount, balance amount, minus this is trade discount and this is cash discount. Like this we have to write the working note. Okay, look at purchases account debit. Fine. How much? 36,000. 36,000 and we are paying cash to cash. How much cash we are paying? Just 34,200. Remaining 1,800 rupees is discount received. So to discount received 1,800. Yes or no, students? So in the working note 1, all these calculations comes 36,000, 34,200 and 1,800. All these calculations comes under this working note. Clear? Whatever the transaction they have given, to just simplify that and write down it as a narration. That's it. Okay. Second one. Observe carefully. Purchased goods from Vijay of 40,000. Fine. So second calculation, 40,000 worth goods purchased on a 10% trade discount. So they have allowed 10% trade discount. Fine. What is the remaining amount payable? 36,000 is the remaining amount payable and 5% cash discount. Okay. Half of the amount was paid at the time of purchase itself. So he is allowing us 5% cash discount when if we pay amount immediately. But what we are doing, this 36,000 rupees, out of the 36,000 rupees, we are paying half amount immediately. Nothing but what about remaining half amount? Credit. What about remaining half amount? Credit. So half amount is 18,000 and the remaining half amount is 18,000. Half amount is 18,000 and remaining half amount 18,000. Now cash discount, do remember, cash discount is always allowed on the amount of cash paid or received. Now you people tell me 18,000 we are paying cash and remaining 18,000 is credit. On the payment of cash part, we receive what? Discount. We receive discount. How much discount we receive? How much discount we receive? Simple. 18,000 into 5%. So we receive discount 900 and we pay cash 17,100. That's it. Observe carefully. Is it clear, students? Look at total 40,000 minus 10% trade discount, 4,000 minus. Remaining amount payable 36,000. What they are saying, if we pay amount within the time, they allow 5% cash discount also. But what he is doing, half of the amount was paid at the time of purchase itself. Means remaining half amount we have to pay on credit basis. So cash discount generally allowed on the cash payment. How much cash we are paying? 18,000. So 18,000 into 5%, 900, 17,100 we pay cash. So how do we write this? Second one, purchases account. Purchases account debit. Purchases account debit. How much? 36,000 to Vijay account. To Vijay account 18,000. Because to Vijay we have to pay 18,000 to cash account. How much cash we are paying? 17,100 cash we are paying, and we are receiving discount na. So to discount received account. To discount received account. Observe, I said this is compound entry, students. So I said when you are writing compound entry, make sure that debit is equal to credit. 36,000, 36,000. Is it clear? That's it. This entry is supported with working note. Working note 2. Clear, students? Next one. Third one. Sold goods to Anil. We sold goods to Anil for 20,000, allowing him a 10% trade discount. Tell me. Total goods sold 10,000 minus 10% trade discount. Deduct 2,000. Remaining amount receivable. This time we have to receive money. 10% we allowed as cash discount. 10%. Received half of the amount by cash and the balance half by check within the specified time. If customer pays amount within the specified time, then we allow 10% cash discount. Yes, sir. So he is paying total amount, but half amount cash, half amount check. Now that so that we allow cash discount. 18,000 is the amount receivable. 10% is the cash discount deduct. This is trade discount at 10% and cash discount at 10%. Is it clear, students? This calculation. So this problem is exclusively on the concept of trade discount and cash discount. Clear? Now look at. So what is the remaining amount receivable? 18,000 minus 1800. Remaining amount receivable is 16,200. Here what they said, whatever the final amount receivable, out of that half amount is received, means 8,100 is received in cash, remaining 8,100 is bank. Remaining 8,100 is bank. Now finally what is the entry we record? Cash we are receiving, cash account debit. Bank we are receiving, bank account debit. That means check we are receiving. And we are allowing 1800 discount na. So discount allowed account debit 1800 rupees. To sales account finally 18,000. This is how we record the entry. Here students, third one look at. First, cash we are receiving. So cash account debit 8,100. After that we are receiving check. So bank account debit 8,100. And we are allowing discount na. So discount allowed account debit. Discount allowed account debit. How much? 1800. 2. Sales account 18,000. That's it. Working note 3. Working note 3. Understood? Very logical problem, student, it is. Because if you commit any mistake in recording this entry na, it leads to effect on your profit or loss. At the same time, financial position. Whatever you are writing in the books of accounts now, it finally gives effect on your profit or loss of business. At the same time, financial position of the business. That's why at the time of recording transactions, we have to be very careful. Clear? Now, fourth one, look at sold goods to Ajay. We sold goods to Ajay for 50,000. Okay. Allowing 5% cash discount and 10% trade discount. So I am writing this here. Working note 4. How much? 50,000. List price is equal to 50,000. Yes or no? Minus what we deduct here? Trade discount. Trade discount at 10% is equal to 5,000. What is the net amount receivable? Net amount. Net amount 45,000. Yes or no, students? List price 50, trade discount to 10%. And we are also allowing 5% cash discount. But do remember, cash discount is allowed only when we receive amount within stipulated time. Look at, half of the amount was received by check within the specified time. Only half amount is received. 45,000 divided by 2. 45,000 divided by 2. 22,500. 22,500. So 22,500, what we are doing? We are receiving a check. For 22,500, we are receiving check. And remaining on credit. Remaining on credit. Yes or no, students? And this 5% cash discount we have. 5% cash discount, that is allowed only on the 22,500. So out of this 22,500, discount allowed 22,500 into 5%, discount allowed 1,125, and check received for the remaining amount 22,500, that comes around 21,375. Understood, students? So this is the working note we have to write. Is it clear, students? Now how do we write the entry? Simple. Credit 22,500. Anil or Ajay? Ajay. So Ajay account debit. Ajay account debit 22,500. We are receiving a check now. So bank account debit 21,375, and we are allowing discount. So discount allowed account debit. Discount allowed account debit. How much? 1,125. 1,125 to finally sales account 45,000. Sales account 45,000. That's it. Is it clear, students? Ajay account debit, bank account debit, discount allowed account debit to sales account. Working note 4. This is our problem number 14. Is it clear? Observe. Problem number 14. Working note. That's it. These are the problems for the chapter of journal entries. Till now we have discussed analysis of transaction based on traditional approach, means personal account, real account, nominal account. Now we have other part of journal entries chapter, that is accounting equation approach. This accounting equation approach we discuss after completion of trial balance chapter. After completion of trial balance chapter. Okay. So meantime, you try to practice the problems. Right. Now come to the last concept of our journal entries, that is advantages of journal. Advantages of journal. Till now we have recorded transactions in the journal. Because of this recording of transactions in journal, what are the advantages to us? First of all, observe carefully all the transactions and events which are happened in the business. We are making a record of it. Just now I discussed, even a single mistake in recording the transaction will leads to your profitability situation. At the same time, financial position situation. There is an effect on profitability and financial position. Even if you forget even single transaction also, it affects your profit, at the same time your financial position. That's why by recording all transactions on timely basis, daily basis, there is proper we can calculate the proper profit or loss of the business, at the same time financial position of the business. That is one advantage. To get, as transactions are recorded in chronological order, one can get complete information about the business transactions on timely basis. We get complete information. Next one, in the transaction we are writing narration now. So by writing narration itself in the journal, one can understand the entry, that means the transaction. You observe, even without looking the transaction, yeah, here observe, here we have written narration, being goods returned by Sukumar. Here you need not to refer the source document once again. Here itself you can understand, okay, for this transaction they recorded the entry. For this transaction they recorded the entry. Here itself we can understand the transaction also. This is one more advantage. Next one, the journal forms the basis for posting the entries in the ledger. Unless you record all the transactions in a proper manner, it is not possible to further process the data. See, our ultimate objective is what? To ascertain the profit or loss of the business, same time to calculate the to ascertain, to find out the financial position, to know the financial position of the business. For this, the journal is the first step, and journal forms the basis for the next steps. Yes or no, students? And reduces the chances of error. I already told you, if you commit any mistakes in the journal, then it leads to so many mistakes in the next stages. So these are the various advantages of journal. So that's it for this class, students. In the next video, we discuss the next chapter, that is ledgers. Do remember accounting equation approach concept we discussed after completion of trial balance chapter. See, this chapter forms basis for the next chapter, and the next chapter forms basis for the next chapter. That's why this chapter forms basis for next chapter, next chapter. Is it clear, students? Yes. So be careful, as this is the first chapter. Try to revise minimum 2 times. Is it clear? If you know journal chapter, then ledger becomes easy. If journal and ledger are easy, then the next chapters will become easy. So that's it, and we meet again in the next class. Till then, bye bye everyone. Hello students, how are you all? I hope you are doing well. In this class, we try to understand the miscellaneous concepts pending in journal entries chapter. In the previous class, we have discussed till financial year. Yes or no, students? Till financial year we have completed. Now we see the another important area, that there are three important concepts, that are transactions between business and its customers, debtors. What are the transactions between business and its customers? And transactions between business and its suppliers, and transactions relating to assets purchased. These three concepts we try to understand, students. Advantages already we have completed. In this video, we cover these three aspects. So be careful. Look at, See, the business sell goods either for cash or on credit. If we sell goods for cash, we receive cash immediately. Yes or no? If we sell goods on credit, we receive amount after a certain time period. Yes or no? Now the relationship between business and its debtor exists. The relationship is creditor and debtor relationship or debtor and creditor relationship. Yes or no, students? Yes. Now, what are the probable transactions between our business and our customers? So, customers also called as debtors. Yes or no, students? Is it clear, everybody? Debtors or trade payables. Trade payables. Look at the first transaction. You people write down the entry here itself. Here, goods sold on credit. For this, already we know the journal entry. What is the journal entry here? Tell me. Debtor account debit. Debtor account debit to sales account. Debtor account debit to sales account. This is the entry we record. Let us say, for example, 1 lakh. Take for example 1 lakh. This is just an imaginary amount, student, to understand the entries. Next one, goods returned by debtor. These are nothing but sales returns. So for this also we have already discussed an entry. What is the entry we record? Sales returns account debit. Sales returns account debit. Say for example 1000 rupees worth of goods that are returned. Customer, okay, to debtor account. In the place of debtor, we will write the debtor name. Yes or no, students? Yes, sir. Right. Next one, cash received from debtors. What is the entry for receipt of cash from debtor? What is the receiving aspect? Sir, cash is the receiving aspect, sir. So this also already we have discussed. Okay, but what I am doing is I am trying to make you understand the transactions between debtor and business at a glance. Okay, cash account debit. Let us say we have received some 20,000 rupees cash. Some 20,000 rupees cash to debtor account. To debtor account 20,000. Yes or no, students? Next one, check received from debtors. So just in the place of cash, what we write? Simply bank, because whatever the check we receive from debtor, that we deposit into bank na. So who is the receiver then? Bank is the receiver. So bank account to debit, bank account to debit to debtor account, to debtor account. Yes or no, students? Yes, sir. Observe carefully. Now say for example 30,000 rupees. 30,000 rupees. Observe here, we sold 1 lakh worth of goods. We sold 1 lakh worth of goods to debtor. He returned 1000 rupees worth of goods. Now tell me, what is the amount due from him? What is the amount due from him? 99,000. Now we received 20,000 cash. What is the remaining amount receivable? 79,000. What is the remaining amount receivable? 79,000. Next one, and we are receiving 30,000 worth of check. 30,000 rupees check we are receiving. And what is the amount receivable now? 49,000. Is it clear, students? So this is the final amount we have to receive from debtor. Clear? Now look at the next transaction. Discount allowed to debtor. What is the entry that we have written? Discount. The discount is expense for us. Discount is expense for us. So discount allowed account to debit. Did you remember already this entry also we understood? Discount allowed account to debit. Let us say for example we have given some 1000 rupees discount. These are just imaginary amounts of students. To debtor account. To debtor account 1000 rupees. To debtor account 1000 rupees. Yes or no? Yes, sir. Now tell me, what is the amount receivable? 49,000 minus How much discount we have allowed? 1000 rupees. We have allowed 1000 rupees discount. What is the final amount receivable from the debtor? 48,000 still receivable from debtors. Yes or no? Yes, sir. Now look at amount not recovered from debtors. Amount not recovered from debtors. Suppose due to any reason, if we are unable to receive amount from debtors, then that amount becomes bad debt for us. I repeat, due to any reason, if any amount is not recovered from our debtors, that amount becomes bad debts. Is it clear, students? Observe. What is the amount receivable from debtors here? 48,000. What is the amount receivable from debtors here? 48,000. Yes or no? Yes, sir. Now, assume total amount is not received. Assume total amount is not received. In that case, what is the entry we record? Here, whatever the amount not received from debtors becomes loss for us. Here, whatever the amount not received from debtors becomes loss for us. This loss comes under nominal account. Yes, sir. What is the name we are giving for this loss? Bad debts. Clear? So, what is the entry we record? Very important entry, students. This I have not discussed earlier. Now, I am discussing. So, loss is debit. So, bad debts account debit. Bad debts account debit. How much amount not received? 48,000 to debtor account. To debtor account. 48,000. With this, debtor account gets closed. Observe carefully. 48,000 we have written off as bad debt. Na? 48,000 we have written off as bad debt. Now, debtor account, it is called debtor accounts gets closed. Debtor account gets closed. Is it clear, students? Yes. So, these are the very important transactions. Yes or no? Observe. Now, next one. After some period of time, if we receive the same amount from debtor, after some period of time, if we receive the same amount, or actually what is the total bad debt for us? 48,000. 48,000 is the total bad debt for us. Suppose after some period of time, if the same person is paying some amount, let us say 10,000 rupees, he is paying 10,000 rupees, very good person, a very nice person. Yes or no? At that point of time, we are unable to recover. But after some period of time, he is paying 10,000 rupees voluntarily. In that case, what is the entry we have to write? This is very, very important entry, student. Most of the students, they may commit some mistake here. Here, already in our books, debtor account gets closed now. Debtor account gets closed. Debtor account gets closed. Yes or no, students? Debtor account gets closed. Again, we should not create debtor account in our books. First of all, bad debts recovered means what is receiving aspect for us? The receiving aspect is cash or check also, cash or bank. Let us say we are receiving some 10,000 rupees. Let us say we are receiving some 10,000 rupees. Clear? 2. What is the giving aspect? We are not giving anything. Then who is the giver? Some person is the giver. Let us say some Y. Y is the giver. We should not write Y account in our books. Again, why we should not write Y account? Why? Because Y account already gets closed. Y account already gets closed. Again, we should not create. Y account in our books. 48,000 debt already we have written off as bad debt. Already we have written off it as bad debt. It is completely loss for us. After some period of time, the same amount we realized, then we treat it as gain. For us. Incomes and gains comes under nominal account category. Incomes and gains comes under nominal account. Nominal account. Is it clear, students? So, it is gain for us. So, this account is credited. Now, which account we create, sir? Same. Bad debts recovered account. bad debts recovered account, bad debts recovered account credit. Look at bad debts recovered account credit. Understood everybody? Bad debts recovered account credit, very very important entry. Is it clear? So these are the sequence of transactions, and these transactions help us in the accounts from incomplete chapter. Once again, accounting from or accounts from incomplete chapter, the same concept will help us. That's why I have discussed here itself. Is it clear? Do remember these transactions. Just pause the video and try to read once again. Is it clear? Now go to next concept, transactions between business and its supplier. Transactions between, so here just write down transactions, and here also transactions. Transactions between business and its suppliers means generally we purchase goods either for cash or on credit. If we purchase goods for cash now, immediately we pay cash, so that there is no relationship between our business and our supplier. But when it comes to credit purchases, the relationship between our business and our supplier exists. Now we become debtor for our supplier, and our supplier becomes creditor to us. Yes or no, students? Again, there is debtor and creditor relationship exist. Now, what are the probable transactions between our business and our supplier? Clear, everybody? Now look at. If you can understand the 19th concept, that is transactions between business and its customer, then you can understand easily the concept of this one. Is it clear? Yes. Now look at goods purchased on credit. What is the entry we record? So receiving aspect, goods na. So purchases account debit. Write down purchases account debit. Here also we take some imaginary amount. Let us say 2 lakhs. Let us say 2 lakhs. To creditor account. Creditor account. Creditor may be any person. Yes or no, students? Yes. So we will write that person name. We will write that person name. Clear? Next one. Goods returned to creditors. These are purchase returns. What is the other name for purchase returns? Returns outward. For that, what is the entry we record? Simple. Creditor account debit. Creditor account debit 2 lakhs to purchase returns account. Purchase returns account 2 lakhs. Or returns outward account 2 lakhs. Returns outward account 2 lakhs. Yes or no, students? Yes, sir. Next one. Cash paid to creditors. We are paying cash to creditors. What is the entry we record? Who is the receiver here? Creditor is the receiver. So, creditor account debit. Let us say we are paying some 1 lakh cash. Let us say we are paying some 1 lakh cash. Creditor account debit to cash account. 1 lakh. Is it clear, students? Next one. Check issued to creditor. This time we are issuing check. What is the entry? Same above entry, but in the place of cash, we write bank. Write down creditor account debit. Creditor account debit. Let us say 50,000 rupees we are paying. We are issuing check to bank account 50,000. Is it clear, students? Next one. Discount allowed by creditor. Discount allowed by creditor. See, for us it is gain, and for the creditor it is expense. Yes or no? So creditor will record it as expense, we record it as gain. So what is the entry we record? Who is giving this one? Creditor is giving discount. So creditor account debit. Let us say some 1000 rupees. Some 1000 rupees we are receiving as discount to discount received account. I will write the same here. So write down what is the entry we record? Creditor account debit 1000 rupees to discount received account. Discount received account. Yes sir, no students? Yes sir, that's it. Creditor account debit to discount received account 1000. Clear everybody? Yes sir. Next one. Next one. This is another important area, student. Already we have discussed these 5 entries. Already we have discussed these 5 entries. But the important entry is amount not paid to creditors. Suppose due to any reason, if we are unable to pay amount, due to any reason, if we are unable to pay any amount, then what is the entry we record? Simple. Whatever the amount we are unable to pay to the creditor is called deficiency, because that amount we are unable to pay. Now tell me here, what is the amount we are unable to pay to the creditor? Simple sir. How much, for how much amount we purchased goods? 2 lakhs minus we have returned just a minute, goods returned to creditors, not 2 lakhs. Let us say some 5000 rupees. 5000 rupees goods we have returned. Okay, now tell me, returns how much? 5000. Returns how much? 5000. What is the amount due now? 1,95,000. 1,95,000 is the amount due. Out of that we paid cash 1 lakh. So 1 lakh cash paid. Remaining amount outstanding 95,000. Again we have issued a check for 50,000 rupees. So 50,000 minus what is the remaining amount payable? 45,000. Okay, but for out of 45,000 we received a discount of 1000 rupees. Now we have received a discount of 1000 rupees. Yes sir, yes. Now what is the remaining amount payable? 44,000. 44,000 is the remaining amount payable. Tell me students, how much amount is payable? How much amount is payable? 44,000 rupees amount is payable to creditor. Yes or no everybody? Yes sir. Now this much of amount we are unable to pay to the creditor. Now what we have to do? We have to close creditor account. We have to close creditor account. Sir, how do we close it, sir? Simple. Creditor account is debited. Because how creditor account is created? By purchase of goods on credit. At that point of time, creditor account is credited. Look at. Now, if you want to close creditor account, then simply debit it. Reverse. Is it clear, students? So, what is the amount due to him? 44,000. What is the amount due to him? 44,000. 2. Deficiency account. Deficiency account. 44,000. Yes or no, students? Here, our creditor record the same as bad debt. Our creditor will record the same as bad debt, but we record the same as deficiency because we are unable to pay this much of amount to him. Deficiency. Is it clear, students? Yes sir. So these are the transactions between our business and suppliers. This concept also helps us at the time of solving problems of accounts from incomplete records or accounting for incomplete records. Is it clear, students? Yes sir. And the next concept is transactions relating to assets purchased. Transactions relating to assets purchased. Look at, students. See, business will purchase assets for uses. For uses. We use the assets in the business and we generate some revenue. Right. Assets are generally not purchased for resale purpose. What we purchase for resale purpose? Goods we purchase for resale purpose. Yes or no, students? Yes sir. Now look at asset purchased. Look at asset purchased. What is the entry we record? See, being it is an asset na, so it is under real account. It comes under real account. What is real account rule? Debit what asset comes in and credit what asset goes out. Entry asset account to debit. asset account debit to cash, or if we issue check then bank, or if we purchase on credit then creditor account, creditor for asset. Yes or no, students? Yes, sir. That's it. Now tell me, let us say the asset cost is 10 lakhs. Let us say the asset cost is 10 lakhs. Fine. Now, next transaction, observe transportation or carriage paid. Now, asset is purchased. Let us say we are in Hyderabad. We are in Hyderabad and the asset is purchased from Delhi. From Delhi, we have to bring the asset to our premises. So, from Delhi, to bring the asset from the place of Delhi to Hyderabad, we need to pay some transportation charges. Yes, sir. Why you are paying transportation charges to bring the asset, sir? So normally we write this transaction as expense. Sometimes the bookkeeper or the person who is recording the transactions and the person who is making the bookkeeping process, he will record this transaction as transportation account debit, transportation account, or carriage account debit, carriage account debit to cash account. He will write the entry like this, but this entry is wrong. This entry is wrong. If you write like this, then it is a mistake. Why, sir? These expenses, these expenses we are incurring for purchase of asset. These expenses we are incurring for purchase of asset. Yes or no? So in that case, whatever the expenses we have incurred for purchase of asset, these are added to asset cost. These are added to asset cost. Because of these expenses, our asset value gets increases, or not value, asset cost gets increases. That's why, what is the entry we record? Simple. Asset account debit to cash account. Asset account debit to cash account. Simple. Let us say we have paid 10,000 rupees. Let us say we have paid 10,000 rupees. Observe, students. Now tell me, what is the total amount incurred on purchase of asset? 10 lakhs plus 10,000. Total 10 lakhs 10,000 rupees is the asset cost. Hope you understood. Next one, marine insurance or transit insurance paid. Let us say we have purchased a machinery, big machinery from China. From China. Now we have to import it. So generally, huge machineries they they send through ships. Yes or no? So for that, to safeguard our asset, what we do is we have to pay some insurance. That insurance is called marine insurance. Or assume we have purchased an asset from Delhi in our previous example. So during the transit, if anything happens to the asset machinery, then we get some insurance amount. For that purpose, we have to take some transit insurance because the asset amount involves more na transit insurance. So whatever the type of insurance you pay till the asset comes to your place. I repeat, till the asset comes to your place. That may be marine insurance or transit insurance. These are capitalized. These are capitalized. Means we add these expenses to the asset cost. We add these expenses to the asset cost. Then what is the entry we record? Asset account debit. Let us say we have paid some 5,000 rupees insurance. These are just imaginary amounts, okay, to cash. Now our asset cost increased now 10 lakhs plus 10,000 plus 5,000. Don't debit marine insurance or transit insurance account. Is it clear? Next one, sir. Installation expenses paid. Installation expenses paid. Observe, students, after bringing the asset or machinery, in our example, let us take a machinery. After bringing or after purchase of machinery to our place, now we have to install it properly. So whatever the expenses we have incurred on installation of machinery, because of these also the asset cost increases. We should not debit installation expenses account. If you debit like this, or if you write the entry like this, installation expenses account debit to cash, it is wrong. or it's a mistake? Yes or no, students? Yes, sir. So what we have to do? So we have to write asset account to debit to cash account. Let us say installation expenses are 10,000. Observe, because of all these things, our asset cost increases. See, asset account is debited. Look at asset account debit, asset account debit, asset account debit, and asset account debit. Our cost of asset increases. Our cost of asset increases. Understood this concept? Yes, sir. Next one. Wages paid for erection of machinery. This already we have discussed at the time of discussing journal entries. To put the asset in a proper place, we have to construct something. Okay, some place we have to construct. Whatever the expenses we have to pay for this construction, all these expenses we have to add to the asset cost. So what is the entry we record? Asset account to debit. We should not debit wages account, student. We should not debit wages account. If you do like this, it's wrong. Okay, asset account debit to cash account. Yes or no? Let us say some 5,000 rupees we incurred this erection charges. Now because of all these things, our asset cost increases. Now look at next one. Till here, observe carefully. All these are additional expenses. All these are additional expenses. For what purpose we have incurred these additional expenses? To put the asset in a usable condition. To put the asset in a usable condition. Yes or no, students? From the time of purchase till it is put to use. I repeat, from the time of purchase till the asset is put to use, whatever the expenses we have incurred on the asset, we have to add to the asset value. This is called capitalization of these expenses. Is it clear, students? Yes, sir. Next important aspect, that is expenses incurred on second hand or old asset. Another important concept is, this concept is also very important, students. Expenses incurred on second hand or old asset purchased. See, sometimes we purchase some second hand machineries or second hand assets in the business or for the business. For the business. In that case, what is the entry we record? Simple. Asset account debit to cash or bank or creditor account if it is on credit purchase. But for us, it is second hand machinery. Yes or no, students? But we are purchasing it for first time. We are purchasing it for first time. Yes or no? Yes. Now, to use the machinery, we have to incur some expenses because it is a second hand one. And suppose we have paid some repair expenses. We have paid some repair expenses. Observe. Repair expenses for machinery, or we have purchased let us say for example old building. Let us say for example old building. Okay, for that suppose we have repainted, whitewashing expenses or some other expenses we have incurred on second hand building. At the time of purchase building, normally we record the entry building account debit to cash or bank. But these are all additional expenses we are incurring on second hand or old asset. Yes or no? So these also we have to debit to the asset cost. I repeat, these also we have to debit to the asset cost. Why, sir? These expenses we are incurring to put the asset in usable condition. To put the asset in usable condition. This is another important area which you have to consider here. Yes or no? So what is the entry we record? Asset account to debit to cash or bank account. Important, student. These expenses we are incurring to put the asset in usable condition. This asset we have purchased for the first time. We have purchased for the first time. Do remember. Is it clear? It may be machinery or furniture or building, whatever it may be. If you pay some repair expenses, whitewashing expenses, or overhauling expenses, or servicing expenses, whatever it may be, or some part of the asset is replaced, All these expenses we are incurring to put the asset into usable condition. That's why we have to debit asset account. Suppose we have a old building. We already have old building. We already have old building. We already have old building. Okay. Now to this building we have paid repairs, or we have incurred repairs or whitewashing expenses. Whitewashing expenses. Nothing but we have painted it, or we have paid some amounts to renovate the building. Now you people tell me whether these expenses are capitalized or not, means whether these expenses are added to the asset cost or not. The question is no. The question is no. Not added. Not added to asset cost. Not added to asset cost. Why, sir? Because these expenses we have to incur for maintaining the asset. I repeat, these expenses we have to incur for maintaining the asset. This asset already existing asset. To maintain this existing asset, we have to pay some repairs. Because of this, we will not get extra benefits from the asset. That's why we treat them as expenses. Treat them as expenses. Very, very important, student. Treat them as expenses. Treat them as expenses means repair account debit, or whitewashing expenses account debit, or repairs and maintenance account debit. We record the entry like that. Repairs and maintenance account debit. In that case, what is the entry we record? Repairs and maintenance account debit. Repairs and maintenance account debit to cash or bank account. To cash or bank account. Yes or no, students? Yes, sir. So here try to make a difference between this transaction and this transaction. Here why we are debiting asset account? Because this asset we purchased for first time. This asset we purchased for first time, and we are incurring expenses to put the asset in usable condition. Then what about this? Already we have an existing asset. When we have asset now, we have to incur some amount for its repairs and maintenance. These are treated as our expense. So here is the important concept. That's it, students. So with this, our journal concept gets completed. In the next video, we start our ledger chapter. Clear, everybody? Yes, sir. Hello, students. How are you all? I hope you are doing well. In the previous classes, we have completed our second chapter, that is journal entries, except the concept of accounting equation approach, which we discussed after completion of trial balance chapter. After completion of trial balance chapter. Here we have also completed problems on journal entries except on accounting equation approach. Clear? So now our next chapter is ledgers. This is very, very important chapter, not from examination point of view, but this chapter is the basis for your next chapters. Especially they will not ask any question from the chapter of ledger, because in our all next chapters we apply the concept of ledger in the next chapters. That's why there is no specific question from this chapter. Do remember. Next, before understanding the chapter of ledger, let us quickly revise the accounting cycle which we understood in the first chapter, that is basics of accounting. Look at the accounting cycle here. Accounting cycle. First we have to identify the transactions. After that we have to record them in the journal. What is the next step here? This is the first step, and next step is what? Posting into ledger. This is our next chapter. So what is posting to ledger? That we try to understand. Why we are following this accounting cycle? Tell me. To ascertain the profit or loss of the business, plus to know the financial position of the business. Do remember, to put it simple, for the preparation of financial statements of any business, we have to follow this accounting cycle. Under this accounting cycle, we have completed the first step, that is what? Recording the transactions in journal entries. In the second chapter, journal entries, already they have given the transactions which are measured in terms of money, and we recorded them in the journal. But practically, you should identify which transactions are recorded in the books of accounts. Hope you are following. Now, we discuss the second step, that is posting. Here, if you observe, in the journal, we record the transaction in the form of debit and credit. Yes or no? Look at here, we see the problem number. Look at problem number 5 once. Look at problem number 5 once. Here they have given transactions, and these transactions we have recorded in the journal. Yes or no? Look at. From this recorded data, can you tell me how much of bank balance we have? See, during December month, till December 31st, we have recorded the transaction. Can you tell me how much of bank balance we have as per our books? And can you tell me how much of capital account balance we have? And tell me total purchases during the month. During the particular month of December, what is your total purchases? And what is your total sales? And what is the amount due from Aravind? And what is the amount due to Amrit? Can you tell me this data from the recorded data? It becomes difficult. Here you have in a month approximately some 12 to 15 entries, but practically in a day you find some hundreds of transactions in the business. Out of all the transactions, it becomes difficult to know some particular account balance. That's why the recorded data we have to classify now account wise. So here, can you tell me how many accounts we have created? I repeat, from problem number 5, look at your notebook and tell me how many accounts that we have created while recording the transactions. Calculate. Calculate everybody with me. Bank account 1, capital account 2, cash account 3, bank account. Don't count it again. Don't count it again. Try to count how many accounts you have created. Okay. Next, purchases account 4, sales account 5, furniture account 6, Aravind account 7, purchase account already over, Amrit account 8, purchase returns 9, discount 10, Arvind already created, drawings 11, drawings okay, cash over. Next, telephone expenses 12, Amrit over, bank discount, yeah, 13. Sir, here one discount account na sir, this is discount allowed. This is discount allowed and this is discount received. Both accounts are different. 13. Next, stationery 14, rent 15, salary 16, advertisement expense 17. Yeah. So these many accounts we have created during the process of recording the transactions in the book journal. Clear? Now what we have to do? We have to take another book and we draw account formats. Already I have shown you the account format. Yes or no, students? Look at the account format once again. This is the account format. Now we take another book and we draw 17 accounts. One page is allotted for one account. Do remember, one page is allotted for one account. We take a book, one each page or one account in each page. Observe carefully. One account in each page. Like that, how many accounts we create? 17 accounts we create. 17 accounts we create. Now, all the information relating to a particular account we place in that account only. So, if you observe, I have shown you family man example. Family man earned a salary of 1 lakh. Yes or no? Out of this 1 lakh, he has incurred so many payments. What we did, we have created one account and we have shown the information in a different manner. Left hand side we recorded, right hand side also we recorded. There we have shown the information relating to cash. There we have shown the information relating to cash. Here also we have to create 17 accounts and we have to show the information relating to bank in one place, the information relating to capital in another place, information relating to cash, information relating to purchases, information relating to sales. Like this we classify data, recorded data, account wise. This is called classification. This is called classification. In our accounting definition also, we come across the word classification. Yes or no? Look at, accounting is at the art of recording, classifying. Here account wise classification. Recording already completed in the journal. Our next step is classification. Tell me, under classification what we do? We classify the recorded data account wise, and that classification we do in a separate book. That book is nothing but ledger book. That book is nothing but ledger book. How we maintain the recorded data in account wise, or simply how we classify the recorded data account wise, that we learn in this third chapter, that is ledgers. So here we create all accounts. That's it. Account is a T-shaped format. Account is a T-shaped format. Look at, this is account format. That's it. But the heading we write now. So here what we write, we create accounts like this. Like this we create 17 accounts, but we write account heading, right? Bank account, cash account, purchases account, okay, sales account, Aravind account, Amrit account, purchase returns account, sales returns account, discount allowed account, discount received account. Like this we classify the data. This is very important chapter, and this is the journal and ledger is the base for whole accounting. Unless you do these two things now, there is no concept of accounting. And the maintaining, recording the data in journal and classifying the data into ledger, these two are called bookkeeping. These two steps are called bookkeeping. That concept we discuss. That concept we discuss at the end. Concept of bookkeeping. Don't worry. Clear, students? So we are learning step by step. We are learning step by step. Okay, now look at. Right? So now tell me, ledger. What is the meaning of ledger? Tell me. Ledger is a book. Journal is a book in which we record the transactions. We record the transactions in the form of debit and credit. Then what is ledger in simple terms? Ledger is a book which contains all accounts. Means personal accounts, real accounts and nominal accounts. Personal accounts, real accounts and nominal accounts. Yes or no, students? Yes sir. right? This ledger contains personal accounts relating to persons, nominal accounts relating to expenses, losses, incomes, gains relating to real accounts, means all assets, cash, bank. Next up, any furniture, plant and machinery, building, land, equipments. All these are assets for us, investments. So this is one book in which we maintain all accounts, and this book is very very important for preparation of financial statements. That's why this book is called principal book. This book is called principal book. Very very important book. Hope you understood. Right, students. So how we post the data, recorded data in this journal, that we understand now. Look at everybody. Look at the concept of first concept of journal is what? We record the transactions in chronological order in the journal book. Okay, date wise now. So from this recorded data, it is impossible to ascertain the profit or loss of business. Directly, it is not possible to ascertain profit or loss of the business from this recorded data. That's why this data must be further classified. That classification is nothing but posting into ledger. Look at next one. Concept of ledger, look at. So a ledger is a book that contains all sets of accounts, personal, real and nominal. So this book is also called book of final entry. Journal is called book of first entry or primary entry or original entry. Why? Because whenever the transaction is happened, that is recorded first in the journal book. That's why it is a book of primary entry. Ledger, this is called book of final entry. Why, sir? After posting the recorded data from journal to ledger, the same information you need not to record anywhere else. See, this is journal, recorded in the journal. The same data we take it to the ledger. The same data we take it to the ledger. That's it. That's it. Okay. You need not to record the same data anywhere else. That's why this book is called book of final entry. Book of final entry. Right. And this book is also called principal book. Why? This book contains all accounts information. Na? See, journal contains all transactions in chronological order, date wise. And that too, which account debit, which account credit, how much amount debit, how much amount credit. That's it. But this ledger contains all accounts information. That's why this book is called principal book. By using this book, we prepare our financial statements. Nothing but profit and loss account and balance sheet. Next one. A ledger book may be a bound book or loose leaf sheets or book. See, normally if you go to a stationery shop, just ask them, do you have any journal book? They give you journal book, just see the format of journal book. At the same time, they will also give you ledger book. You just have a look on it. But nowadays, the journal and ledger we are maintaining in computerized environment. Nowadays, we are maintaining the data in computerized environment. I will show you after at the time of preparation of final accounts or trial balance. Once trial balance is completed now, then I will show you how the data is recorded in the computers by using Tally software. By using Tally software. The beauty of online classes, we can show you so many things practically. See, suppose I am discussing company accounts like bonus issue, rights issue. So here I have a chance to show you this stock exchange, and I can show you which company issued bonus shares and what is the ratio of bonus, and which company issued right shares and what is the ratio of right shares, and even the financial statements of so many companies. That is the beauty of online classes. Yes or no? Here so much of data is accessible and we can show it to you practically. That's why here I will show you how the data we enter into the computers, so that you can understand. Now whatever we are learning, that is manual accounting system. Do remember, now whatever we are learning, that is manual accounting system. manual accounting. But once practically if you see na, that is computerized accounting. That is computerized accounting. Do remember. Manually, whatever the work we are doing, the same we do in computers. Hope you understood. Yes, sir. So first we learn how accounts are prepared manually. Then after we see how the accounts are prepared in a computerized environment. Is it clear, students? Yes, sir. Now come to the next one. Format of ledger. Already we know the format of ledger. It looks like a T-shaped format. It looks like a T-shaped format. It has two sides now, left hand side and right hand side. Left hand side is called debit side. To indicate left hand side, we write the word dr, and right hand side is called credit side. To indicate this, we write the word cr, and above this we write the word account. Before the word account we write the account head, account name. Suppose here I am writing cash, means this account shows cash account information or cash information. This cash account shows cash information. If I write bank, this account shows bank information. If I write capital, this account shows capital information. If I write a sales, this account shows sales information. Account format is same, but the account head is changing now, so that automatically the information shown in the account also changes. Is it clear? Once we solve one problem, then you can understand everything. Look at the format of ledger. It has two sides. Yes, left hand side, right hand side. Left hand side is called debit side and right hand side is called credit side. Each of the debit and credit sides have four columns. Four columns. Look at date, particulars, JF, amount. If you remember, in the journal chapter, we have LF column, na, ledger folio column. In the ledger, we have journal folio column. Sir, what is this? We understand in this chapter. Ledger folio, journal folio. Clear? Now look at. So each side, how many columns we have? Four columns. But whereas journal, it's a five column. Five column. Date, particulars, LF, debit amount. Debit amount, credit amount. Date, particulars, LF column, debit amount, credit amount. Five columns now. Clear? So ledger, left hand side four columns, right hand side four columns. Date, particulars, JF, amount. Clear? In the date column, we write the date of transaction. In the particulars column, what we write? I will show you by taking one example. JF column, what we write? I will show you by taking one example, amount also. Okay, so this explanation you can understand after seeing one small example. Here I have given one small example to understand the concept of posting. Clear? So what is the meaning of posting? Very, very important word, posting. Here in the journal we understood the word journalizing. We understood the word journalizing. Did you remember? Journalizing. Yes. What is the meaning of journalizing? The process of recording transactions in the journal is called journalizing. In the same manner, what is the meaning of posting? The process involved, or the process of transferring debit and credits to the book ledger is called posting. I repeat. So here we have recorded data. This data is in the form of debit and credit. So first entry, look at debit account, bank account debit to capital account, debit account, credit account. Now this information we are transferring. We are transferring to which book? Ledger. Ledger book. This process, whatever the process involved here, that is called posting. That is called posting. Now how do we post? That we understand with this simple example. Look at. Now we try to understand how the recorded data is posted into ledger. In the concept of ledger, we understood different types of entries: simple entry and compound entry. Simple entry, compound entry. What is the meaning of simple entry? When an entry contains only two accounts, that means one account debit and one account credit, that entry is called simple entry. Compound entry means if an entry contains more than two accounts, then that entry is called compound entry. In the ledger, we should understand how a simple entry is posted, at the same time how a compound entry is posted. Clear, students? Yes, sir. Now look at posting of simple entry. Posting of simple entry. Here we have given one example. Observe, for example, goods purchased from Anand on credit 1 lakh. First, for this transaction, record the journal entry. So here we are taking date on 1/1/2025. Just write down the date 1/1/2025. Now tell me, how do we post? Sorry, how do we record this? Tell me, what is receiving aspect? Goods received. Giving aspect, at present we are not giving anything. Then who is the giver? Anand is the giver. So tell me, how do we write? 2025 January 1st. Purchases account to debit. Purchases account to debit. How much? 1 lakh. To Anand account. To Anand account 1 lakh. Being goods purchased from Anand on credit. Being goods purchased from Anand on credit. Over. This is the entry. Now tell me, identify how many accounts we created. How many accounts we created? Purchases account 1, Anand account 2. Now go to ledger book. Go to ledger book. Go to ledger book. Take one page. Draw the account format of purchases and draw the account format of Anand account. So first account, purchases account. Second account, Anand account. Okay, so now the ledger book, like ledger account, looks like this. Okay, yes, observe. Now how do we post? Observe carefully, very important. If you can understand how to post a recorded entry in the ledger, almost preparation of this ledger accounts completed. Okay, look at. First, take the account which is debited in the journal. So which account is debited in the journal? Tell me. Purchases account is debited in the journal. Now first come to purchases account. Give name here. Purchases account. Purchases account. Next account is Anand account. Next account is Anand account. We created two accounts. Now tell me, which account is debit first? Purchases account debit. Now come to debit side of purchases account. Purchase account is debited now. So in the ledger also, we post on the debit side of purchases account. Debit side means left hand side. Now Anand account is credit. Now we come to Anand account credit side. Purchase account is debit now. Come to debit side of purchases account. Anand account is credit. Come to the credit side of Anand account. Understood? Now purchases account debit side, write down the date 2025 January 1st. In the date column, first we write the date of transaction. Next, come to particulars column. Debit side, start with the word TO2. We are posting in purchases account now. Yes, go to journal. Purchase account is debit. Look at the other account. What is the other account? Anand account. Here simply write down Anand account. Leave journal folio column for some time and look at purchase account opposite amount. Purchases account opposite amount is how much? 1 lakh, sir. So write down same 1 lakh here. Over. Posting completed. How do we read this? Look at purchases account debit. Purchases account debit to Anand account 1 lakh. Sir, what is the meaning of this posting? Means you have purchased goods. From whom you have purchased? From Anand 1 lakh, sir. Suppose if you purchase goods on cash or for cash, then purchases account debit to cash account. That is the meaning of this. Observe carefully. I repeat, this is a simple entry. We are trying to understand how a simple entry is posted into the ledger. First, simple entry means only two accounts. First account purchases, second account Anand account. Now come to purchases account first. Purchases account is debited in the journal. Now come to debit side. Debit side. So in the date column, first write down the date of transaction 2025 January 1st. In the particulars column, other than the debit account, which account we have? Anand. So write down. To put it simple, the account which is credited in the journal, that should be written here. Yes, sir. To Anand account. Amount. So opposite to purchases account, whatever the amount you have, that amount you have to write. Whatever the amount is there, that amount you have to write. So now purchases account posting completed. Purchases account posting completed. Over. Now come to Anand account. Complete posting not completed. Only partial posting completed. I repeat, when it is said to be posting is completed, because how many accounts you have? Two accounts. Now you have to complete posting in two accounts. Now we have completed only posting in one account. So partial posting completed. Now come to second account. Second account is what? Anand account. Look at the journal entry. Anand account is debit or credit? Credit, sir. Now come to credit side of Anand account. Means right hand side. First, write down the date 2025 January 1st. 2025 January 1st. Okay, now when you are writing, when you are posting on debit side, start with the word TO2. When you are posting on credit side, start with the word BY by. Now, Anand account is credit, yes. Then which account is debit in the journal entry? Purchases account, sir. Write down that account. Purchases account. Amount. Opposite to Anand account, how much amount we have? Opposite to Anand account, how much amount we have? 1 lakh, sir. Write down 1 lakh. Now, posting in Anand account is completed. Now observe, purchase account posting one time, Anand account posting second time. Two accounts, two times posting. Purchase account one time, Anand account second time. So now it is said to be posting completed. Debit side posting, credit side posting. Check the amounts. Amounts must be equal. Debit 1 lakh, credit 1 lakh. Amount same. Debit equal to credit. Hope you understood. This is how a simple entry is posted into ledger. Now look at Anand account is credited. Now why Anand account is credited? Because we purchased goods. So here what is the thumb rule? In the purchases account, we never write purchases. We never write the word purchases. We have to write the opposite account. In the Anand account, we never write the name of Ananda. In the Anand account, we never write Anand name. Anand account is the heading. In the account, we should not write Anand name. That's why what we are writing, Anand account credit. Why Anand account is credit? Because we purchased goods from him. so that his account is credited 1 lakh. This is simple entry posting. This is simple entry posting. Hope you understood. Not yet completed. In the ledger, we do three things. Observe carefully. In the ledger, work in the ledger. You people write down work in the ledger. Work in the ledger, or what we do in the ledger. First step, posting. First step is what? Posting. That we have completed. An entry contains two accounts, purchases account and Anand account. Posting completed in purchases account and Anand account. Now second work we have casting or totaling. This is the second work we have to do. Third work, balancing. These are the three works we have to do in the ledger, not journal, ledger. First, posting. What is the meaning of posting? Transferring the debit account and credit account from journal to ledger is called posting. That we understood. We have second work in the ledger is casting or totaling. Nothing but making total of debit side and credit side. Making total of debit side and credit side. If you take purchases account, now tell me debit side total how much? 1 lakh. Credit side nothing. So total 0. I repeat. Look at purchases account alone. Debit side total how much? 1 lakh. Credit side total how much? 0. There is no posting on credit side now. So this is called totaling or casting. Now come to Anand account. Look at the credit side. What is credit side total? 1 lakh. Look, tell me the debit side total. 0, sir. Because debit side there is no posting now. So this is what? This is called casting or totaling. This is second work. Third work is balancing. So what is balancing? We try to understand in the next stages. Wait for some time. Clear, students? Next one. Now we understood how a simple entry is posted into ledger. Now come to compound entry posting. See, compound entry consists of, tell me, compound entry consists of what? Compound entry consists of more than two accounts. More than two accounts. How, sir? That may be one account to debit, and more than two accounts credit. One account debit, more than two accounts, or more than one account, more than one account credit. Next one. One account credit, more than one account debit. Means debit we have more than one account, but credit we have only one account. More than one account debit and more than one account credit. Observe. This is our compound entry. One account debit and more than one account credit. One account credit, more than one account debit. Or sometimes in some entries we get more than one account debit. That means more than one account debit and more than one account credit. Okay, so this is our compound entry. Now look at how do we post. I have taken one example here. Remaining whenever it comes in the problems, then we discuss slowly. Okay, now look at the example. For example, goods purchased from Anand 1 lakh. We purchased goods from Anand 1 lakh. and paid 50,000 cash immediately. 50,000 cash we have paid immediately means what about remaining 50,000? Credit. What about remaining 50,000? Credit now? Yes, sir. Yes, sir. Now tell me, how do we post? Sorry, first of all, how do we record this entry? Tell me. So this is also assumed on 1/1/2025. Tell me the date. 2025, January 1st. Tell me purchases account debit. Purchases account debit 1 lakh. Purchases account debit 1 lakh. 2. Cash account. Because we paid cash immediately now. How much cash paid immediately? 50,000. What about remaining 50,000? It is on credit. Means who is the giver? Anand is the giver. To Anand account 50,000. This is how we record the entry. This is how we record the entry. Purchases account debit to cash account to Anand account. 1 lakh 50,000 50,000. Check whether debit is equal to credit or not. Here, how many accounts you have total? 3 accounts, sir. 1, 2, 3. Now tell me, it is the case of first one account debit and more than one account credit. How many accounts credit? 2 accounts, sir. Fine. Very good. Now go to ledger. Go to ledger. Open 3 accounts. Purchases, cash, Anand. Open 3 accounts. Observe carefully. These are the 3 accounts. Give one account head. Write down account head. First one, purchases account. First one, purchases account. Second one, cash account. Third one, Anand account. Third one, Anand account. Observe. Okay. Right. Third one, Anand account. Now tell me posting. Follow the same principles like simple entry posting. First, which account is debited? Sir, purchase account is debited, sir. Come to purchases account. Purchase account debit na? Yes, sir. Come to debit side. Write down the date. Write down the date. 1/1/25. 1/1/2025. Write down the other accounts. That means other than purchases account, write down the remaining accounts. Remaining accounts are 2 accounts, sir. Write down one by one. 2 cash account. 2 cash account. This time opposite to cash, how much amount you have? 50,000. Don't write 1 lakh straight away. Don't write 1 lakh straight away. Write down 50,000 first. Write down 50,000 first. Posting completed, not yet. Next one, to Anand account. To Anand account. How much? 50,000. Now posting completed in purchases account. Now posting completed in purchases account. Observe. I repeat, purchases account is debit. Come to debit side. Write down 2 cash and 2 Anand 50,000 50,000. Now read the posting. Purchases account debit. 2 cash account 50,000. 2 Anand account 50,000. Next, which account we have? Cash account. Come to cash account credit side. Cash account is credited na? Write down 1/1/25. Other than cash account, write down the account which is debited, not credit, debit. Which account is debit? Purchases account. So by purchases, how much? 50,000, sir. Sir, purchases 1 lakh na, sir. Wait. But cash purchased, we purchased for cash na. How much? 50,000. That 50,000 we are writing. Next one, come to Anand account. Anand account is also credit. Yes, sir. Now come to Anand account credit side. Write down date column 1/1/2025. Write down the same purchases. purchases. How much, sir? 50,000. 50,000. What is the meaning of this? We purchased goods for cash 50,000, on credit 50,000, total purchases 1 lakh. Come to cash account credit side. Cash goes out. How much? 50,000. Why? Purchases. Anand account is credit. Credit personal account. Anand is personal account. Personal account credit means giver. Anand is giver. For how much value? 50,000. Why he is giving? Purchases. Now this is said to be posting completed. Observe the debit credit. Purchases account debit 1 lakh. Cash account credit 50. Anand account credit 50. 1 lakh debit, 1 lakh credit. Total. Yes, sir. Completed. This is how we post compound entry. I repeat. Look at. So simple entry posting, compound entry posting. So in the ledger, how many works we have? Tell me. Posting, casting or totaling, balancing. Casting or totaling, I said. Take one account. Take one account. Let us take this example. Compound entry purchases, debit side total. How much you have? 1 lakh. Credit side 0. So total completed. Debit side total, credit side total. Cash account also. Debit side total 0, sir. Credit side total 50,000. Anand account. Debit side total 0, sir. Credit side total 50,000. So casting, posting completed. After that casting or totaling. After that balancing. Sir, how we balance the accounts? That we try to understand by solving a problem. By solving a problem. Clear, students? Now come to the concept of posting. Posting. Look at the process of transferring debit and credit items from the journal to classified accounts in the ledger is called posting. Sir, how we post, sir? What is the time period to post? If you get time, you can post daily. Here, transactions are recorded in the journal on daily basis now. If you get time, you can post the same transactions on the same day in the ledger, or you can fix a time every week. Every week at the end of Saturday or at the end of every week, we post the recorded data in the ledger. Weekly, fortnight, 15 days, once in a 15 days, monthly, according to the convenience of the bookkeeper and requirements of the business. Clear? Right, sir. Sir, is it necessary to post? Yes. Why? Because we should prepare financial statements now. Unless you have these account balances, it is not possible to prepare financial statements. Do remember, students. Next, rules of posting. Whatever we have discussed during the posting, the same rules applied. Okay. Now look at the words TO2 and BY by. Here, when you are posting on the debit side, we are starting with the word TO2. While you are posting on the credit side, we are starting with the word BY by. These two words you need not to use. Modern accountants, they are not using these words. Traditionally, we have used earlier those days, but now they are not using. But in our exams, we use. In our exams, we use. Hope you understand. Now come to the format of ledger here. Explanation: title of the account, debit, credit, debit, left hand side debit, right hand side credit. Date column, you have to write date. Particulars column, you have to write the account of other account name, you have to write. Next, journal folio. Amount we understood. What about this journal folio? Now observe carefully. Look at problem number 5. We recorded the transactions in journal. Let us take journal is also a book. Journal is also a book. This is page number 1. This is page number 1. And this is page number 2. Page number 2. Next one. Yeah. In 2 pages, we recorded the journal. We recorded the transaction. This is page number 1 and this is page number 2. Now tell me, in the ledger what we do? In the ledger what we do? We open. In the ledger we open. Okay, we take the same example. Yes, this is page number 1 and this is page number 2. . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . Okay, page number 1 and page number 2. Now come to ledger. Come to ledger. Here what I write is I am posting in the purchases account debit side. Yes, actually this entry is there in the journal. Fine, very good. From which book you are posting? What is the source for posting? Journal, sir. Journal is a book, contains various pages na, contains various pages. You are posting from journal to ledger. Yes, we are taking the reference of page number. I repeat, we are taking the reference of page number. This entry is there in the journal. Yes, in which page? I repeat, the entry of purchases account debit to Anand account is there in the journal, but in which page? Which page? Page number 1 or page number 2 or page number 3? Yes, sir, page number 1, sir. The same page number I will give reference in the ledger. I will give reference in the ledger. Why? In case if any mistake happened during posting, it is easy to us to locate the error. Now, I have posted in the purchases account from journal, but this entry is there in the journal in which page? Page number 1, sir. Page number 1. In the same manner, what I am doing is ledger. Yes, ledger is a book. Yes, sir. Each page is allotted for one account, or one page is allotted for one account. Yes, sir. Purchase account, page number 1, sir. Anand account, page number 2, sir. Purchase account, page number 1. Anand account, page number 2. Now what I do is, opposite to purchase account, I will write in the LF column number 1. And opposite to Anand account, I will write in the LF column number 2. What is the meaning of this? What is the meaning of this? Purchase account is maintained in the ledger, page number 1. Purchase account is maintained in the ledger, page number 1. You directly go to page number 1 because ledger is consecutively numbered 1, 2, 3, 4, 5. Every time you post in the ledger, you have to verify where is the purchase account. Every time you post in the ledger, you have to verify where is the purchase account, where is the Anand account, where is bank account, where is capital account. You have to verify na. You have to check it. To avoid this, what we do is, in the journal, we maintain one special column to record the page number of that particular account in the ledger. That page number technically we call as folio, journal folio, ledger folio, ledger folio, journal folio. These are the reference columns. In the journal, we give reference of ledger account. In the ledger, we give reference of journal page. These are the meanings of ledger folio and journal folio. That's why I kept pending the ledger folio in journal chapter. Now you are in a position to understand what is ledger folio and what is journal folio. Next concept. Yes, this is our journal folio. It records the page number of the original book of entry in which the relevant transaction is recorded. Because journal also consecutively numbered 1, 2, 3, 4, 5. Yes, from which page you have taken this entry and posting in ledger. That is important. Clear, students? Yes, sir. Now, pause the video and try to understand what we have discussed till now. Now we start discussing balancing. I said already in the ledger how many works we have to do. One is posting work, another one is casting or totaling work. These two works are easy. Next one is balancing. That balancing work we understand by solving a problem. By solving a problem. Clear, students? Yes, sir. So go through the concept which we have discussed till now. Take some time to understand the concept of journal and ledger, because these are the pillars for your next levels of CA plus inter final also. Clear, students? make it fast. In the previous video, we have discussed additional problems, problem number 1 and problem number 2. Now, come to the concept of ledger. We see any concept is pending. So, concept of journal completed, ledger, format, explanation, meaning of posting, rules regarding posting, whatever we have followed the process of posting, the same is given in theoretical form. Next, examples to understand the concept of posting. Here we have discussed simple entry posting and compound entry posting. After that, balancing of ledger account. This also we have discussed debit balance, credit balance, balanced accounts. If you observe this concept once, personal accounts. Generally, personal accounts are balanced. Personal accounts are balanced. In our problems, if you observe, look at illustration 2. Cash account, real account, bank, personal account, bank, personal account. See, personal account is balanced and the balance is carry forward. Inventory, asset account, building, asset account, Vijay, personal account, because he person na, here his account is automatically closed. Observe, Madhu, personal account, we balanced na, and this balance is carried forward. Anand, person, personal account. Kapil, person, personal account. Capital, representative, personal account. Balanced and the balance is carried to the next period. Discount allowed, nominal account. Purchases, nominal account. Discount received, nominal account. Plant, real account. Mukesh, personal account. Sales, nominal account. Rahim, personal account. Bad debts, nominal account. Like this, the ledger book contains various ledger accounts. That means all ledger accounts. Real account, personal account, nominal account. Now observe carefully. Personal accounts are balanced and carried to the next financial year. The balance is carried to the next financial year. Real accounts also balanced plus the account balance is carried to the next financial year. Means personal accounts are automatically closed. Suppose Vijay, from Vijay we have to receive 2000 rupees. If Vijay pays 2000, then automatically Vijay account gets closed. If Vijay did not pay 2000 rupees during the financial year, we collect the same 2000 rupees in the next financial year. Till then, his account balance we have to carry. At the same time, real accounts. Suppose we have building. We have building. Observe. We have building worth of 1 lakh. If this building is sold, then automatically building account gets closed until this account balance we carry to the next financial years. Hope you understood. Next one, nominal account. Very, very important. Nominal accounts are not balanced generally. Here you may ask, sir, in this case we balance bad debts. Take for example bad debts. Bad debts. Bad debt is nominal account. Expense, loss account. Na, bad debts is loss account. Nominal account. You may ask, sir, here you have balanced na, sir. Yes. During a particular year, we balance nominal accounts. During the particular, suppose we are in the financial year 2023-24, means 1st April 2023 to 31st March 2024. During this financial year, generally we record the transaction and we post them to the ledger. And every month, generally we balance the accounts, ledger accounts. During the financial year, all accounts are balanced. All accounts means personal, real, nominal accounts. But at the end of the financial year, means 31st March 2024, only personal accounts and real accounts are balanced, and these balances are carried to the next financial year. But all the nominal accounts total is transferred to the profit and loss account. Means at the end of the financial year, to calculate profit or loss, we calculate profit or loss. Now profit is nothing but what? Income minus expense. Income minus expense. Income accounts and expenses accounts. Nominal accounts na. Nominal accounts na. Nominal accounts. To calculate or to ascertain whether the business has earned a profit or loss, we have to close all the nominal accounts by transferring them to profit and loss account. By transferring them to profit and loss account, do remember this is very important true or false statement. At the end of the financial year or accounting year, all the nominal accounts are balanced. Is it true or false? It is false. Why? At the end of the financial year or accounting year, all the nominal accounts are closed by transferring them to profit and loss account. Very important true or false statement from the chapter ledger. Do remember, students. So look at nominal accounts. At the end of the accounting year, all the nominal accounts of the ledger book are totaled and transferred to the profit and loss account. Hope you understood. Next one, look at noteworthy points. Noteworthy points. Look at the time of preparation of financial statements, the balances of all nominal accounts such as incomes, gains, expenses and losses are transferred to the profit and loss account. Based on this concept, we get one important true or false statement. Next, the net result of all nominal accounts is reflected in the profit and loss account for an accounting period and is transferred to the capital account. Already we discussed this. To ascertain whether the business has earned profit or loss, we have to transfer the balance to the nominal account balances to profit and loss account. So the net result of nominal accounts, nothing but profit or loss. Observe, income minus expense. Income, expense, both are nominal accounts. The net result, total income minus total expenses, nothing but profit or loss. Hope you understood. Next one, the balance of all accounts relating to assets and liabilities, means personal real, are reflected in the balance sheet at the end of the accounting period. This you can understand when we discuss the financial statements of business. Okay, here already we discussed real accounts and personal account balances or accounts are balanced and carried to the next financial year. The capital account is adjusted for profit or loss at the end of the accounting period. If you observe here, at the end of the year we get profit now. So profit is added to capital account balance. At the end of the year, whatever the profit the business earned, that belongs to whom? Owner, proprietor. In case of partners, partners. Partnership firm, partners. In case of company, shareholders. And this profit is added to the capital account balance, so that capital account balance will increase. Hope you understood. That's it. These are the noteworthy points. Now, the last concept, nothing but concept of bookkeeping. If you observe, the total accounting work can be divided into two parts. One is bookkeeping, another one is accounting. Bookkeeping is nothing but recording the transactions in journal and posting the same into ledger. This is called bookkeeping work. Once this work is completed, next we start our accounting work. So accounting includes bookkeeping. I repeat, accounting includes bookkeeping. Clear? So this journal, maintaining journal and ledger comes under bookkeeping work. After that, we start accounting work, nothing but preparation of financial statements. At the time of preparation of financial statements, we have to do a lot of work. Accounting depends on bookkeeping work. Accounting depends on bookkeeping work. Bookkeeping will not depend on accounting. Accounting will depend on bookkeeping work. To put it simple, accounting work starts where bookkeeping work ends. I repeat, accounting work starts where bookkeeping work ends. The moment we record the transactions in journal and we post them into ledger. Now in the ledger, what we do? Posting, casting, totaling and balancing. With the account balances, we prepare trial balance. Once the trial balance is prepared, we start next accounting work, means preparation of financial statements. Now this is the concept of bookkeeping. Look at, bookkeeping is an activity concerned with the recording of financial data relating to business operations in a significant and orderly manner, means chronological order. In simple words, bookkeeping is the art of recording business transaction systematically. We have followed a double entry system of accounting. By following double entry system, we classified the transaction into debit and credit, and both debit and credit is recorded in the books of accounts, chronological order. Accounting is based on a careful and efficient bookkeeping system. If you commit any mistake in the bookkeeping process, it will directly affect your accounting work. If a proper record is not maintained, it is not possible to get details of the transactions regarding income and expenses. Yes, to ascertain profit or loss of business plus financial position of the business, each even 1 rupee incurred as expense, we have to record it in the, we have to give accounting for that amount. So careful observation and identifying the transactions and recording them in the books of accounts, very important. Maintenance of books of accounts and the preparation of financial statements of a company are guided by the Companies Act, banks and insurance companies by special act governing these institutions and so on. Means, see, I am running a sole proprietor. Mine is a small business. Now the question comes, should I maintain books of accounts? Means, should I record all my business transactions and post them into ledger and preparation of financial statements? The question is no, it is up to you. If you want to maintain books of accounts for careful recording and knowing your profit or loss or financial position of your business purpose, then you can maintain. But there is no obligation on sole proprietorship firms and partnership firms to maintain the books of accounts. But when it comes to companies, suppose Reliance Industries Limited, Infosys company or Wipro company, you take any company form of organization, mandatorily they have to maintain books of accounts. This provision is given under Companies Act. And banks also should maintain books of accounts. Who said? Banking Regulation Act. Is it clear, students? Yes, but when it comes to sole proprietorship and partnership form of organization, there is no such obligation. Do remember. Next one. However, sole proprietorship and partnership business, there is no specific legislation regarding the maintenance of books of accounts and preparation of financial statements. Note, the terms bookkeeping and accounting are different. Accounting is a wider concept that includes bookkeeping. This note point also very important for true or false statements. They give you in the true or false statements that accounting and bookkeeping both are same, but actually both are not same. Why? Bookkeeping is different aspect and accounting is different aspect. These two are used synonymally, but actually these two are not same. Very important for true or false statement. So this is the concept of bookkeeping, students. Okay, now observe. So almost all concepts in the ledger we have discussed. We have discussed all the concepts plus illustrations. Look at all the concepts, illustrations, practice questions, additional problems. Till now we have discussed. Now we discuss true or false statements. After that, MCQs. Once we discuss these two, the chapter is completed. In each chapter, we discuss these things. All concepts we discuss, illustrations, practice questions. If any additional problems are there, we also discuss them, and true or false statements and MCQs. Now, we start our discussion with true or false statements and MCQs. Hello students, how are you all? I hope you are doing well. In the previous lectures, we have started our discussion of the concept of ledgers. We have also discussed what is the concept of ledger and how the recorded transactions are posted into the ledger and how the ledger accounts are balanced, totaled and balanced. And we have also seen solved one problem, that is practice question 1. Okay, and also prepared trial balance with the help of the list of ledger accounts. Hope you understood the concept of ledger with this problem. Now go to illustration 1. Go to illustration 1 and do remember the account balances also. Which account shows which balance? Here in our practice question 1, cash account is showing debit balance. Okay, and capital account is showing credit balance. Purchases account debit balance. Y account credit balance. Okay, next Z account is closed. Next sales account credit balance. And the same balances are shown as opening balances. How opening balances are shown? Look at cash account debit balances na debit balance na on the debit side, two balance brought down. Capital account credit balance on the credit side, by balance brought down. Purchase account debit balance on the debit side, two balance brought down. Y account credit balance on the credit side, by balance brought down. Is Z account is closed now. Okay, forget about it. Sales account is showing credit balance, so on the credit side, by balance brought down. Hope you are following. Right. Now look at illustration 1. Observe. Prepare the stationery account. Prepare the stationery account of a firm for the month of January 2022, duly balanced off. We have to balance it also from the following details. First, understand the problem. Here they are asking to prepare only the stationery account, only one account. But in the previous problem, we have prepared almost 6 accounts. No? 6 accounts we have prepared. But in this problem, they are asking only one account. Only one account. That to which account? Stationery account. Stationery account. Clear? Now, look at first. 2022, January 1st, inventory of stationery 480. Inventory of stationery 480. What is the meaning of this? This is nothing but opening balance. This is nothing but opening balance. Do remember, students. That means on January 1st, we have stationery worth of rupees 480 in the business. This becomes opening balance. If you observe here, cash account, look at cash account. What is the meaning of opening balance of 24,000 cash account? Tell me. That means on January 1st, we have 24,000 rupees opening balance of cash. That means 24,000 rupees cash we have on January 1st. Here also we have 480 rupees worth of stationery in the business on January 1st. And stationery shows debit balance. Stationery shows debit balance. Do remember which balance? Debit balance. So how do you write this one debit balance na, to balance brought down 480. To balance brought down 480. Very, very important. This one is very, very important. Now, you people draw stationary account first. Draw stationary account. Okay, look at. Draw stationary account. Yeah. Illustration 1. So, stationary account. Date particulars amount, date particulars amount. Here you need not to draw LF column. Sorry, JF column. Clear? Now, first one. This is opening balance now. This we show as 2022 January 1st. To balance brought down. In this problem, this one is important. To balance brought down 480. That's it. That's it. Okay, next one. January 5th, what happened? Purchase of stationery by check 800. Purchase of stationery by check 800. What is the journal entry? Journal entry you think in your mind. You read in your mind. Entry. Stationery account debit to bank account. Stationery account debit to bank account 800. Look at. So, January 5th. Stationery account debit to bank account. How much? 800. Over. Next one. January 15th. What happened? Purchase of stationery on credit from 5-star stationery marked 1280. We purchased stationery. So, stationery account debit to from whom we have purchased? We have purchased it on credit now. We have purchased it on credit. So, to 5-star stationery marked 1280. So, look at on what date? 15th date to 5-star stationery marked 1280. That's it. That's it. Over. Any more transactions here? Any more transactions here? Nothing, sir. Nothing. Now, simply balance the account. Simply balance the account. How do we balance? First, total debit, total credit. Total debit and total credit. Look at total debit, how much? 480 plus 800 plus 1280. 2560. Total debit 2560. Credit side 0 na. So 2560. Now how do we balance this? By balance carried down 2560. Date 2022. They said balance the account for the month of January 2022. Okay. So January 31st. Over. Now the same becomes opening balance for February month. Same becomes opening balance for February month. So February 1st to balance brought down 2560. Over. This is our simple problem. What did you understand by solving this problem? We have learnt in this problem how to prepare only one ledger account. How to prepare only one ledger account without writing any journal entries. Here we have prepared ledger account. Yes or no, students? Yes, sir. So write down, make it fast. In the previous class, we have discussed problem number 1. Now look at problem number 2. Prepare the ledger account of Mr. Solkar from the following. Here also we should prepare only one single account. Okay. Now you prepare, put the heading in the books of so and so Mr. Solkar account. Now draw the account format. Okay. Now here we have account format. Look at Solkar account, debit, credit, date, particulars amount, date, particulars amount. Observe next. 2023 March 1st, debit balance to his account 2000. If you observe in the previous problem, Raman account is started neither debit balance nor credit balance. But in this problem, Solkar account is started with debit balance. So debit balance means debit side. Write down 2023 March 1st to balance brought down 2000. Understood? Next one. Third date, sold goods on credit to him worth 10,800. It is credit sales now. Entry, Solkar account debit to sales account. So third date, to sales 10,800. Next one, eighth date, received cash from him 12,600 and allowed discount 200. We received cash from him 12,600 and we also allowed 200 discount. What is the entry we record? Cash account debit, discount allowed account debit to Solkar account. Okay, write down 8th date 2023 March 8th by cash 12,600 we received. On the same date we allowed discount. Now it is discount allowed for us 200. That's it. Next, 10th date, Solkar bought goods on credit 3000. Solkar bought goods means we sold goods. Entry, Solkar account debit to sales account. 10th date. To sales, how much? 3000. If you observe the account, before recording this transaction, before posting this transaction, if you observe the account already closed. How? 2000 rupees debit, 10,800 debit, total 12,800. Out of 12,800 we received 12,600 na? And 200 discount allowed. So before March 10th Solkar account closed. Again on March 10th we sold goods to him. So it's a running account. Hope you understood. To sales 4,000. Next one, 15th date. Received cash from him 2,900 and allowed him discount 100. 15th date. 15th. We received cash 2,900 and we allowed a discount. By discount allowed 100. If you observe till now, Solkar account closed. There is no balance in Solkar account. If you want, you can observe total debit, total credit and identify the balance. 20th date, purchased goods on credit from Solkar worth 2000. Purchased goods on credit from Solkar. This time we purchased goods from Solkar. He sold, we purchased. Entry, purchases account debit to Solkar account. 20th date, by purchases. $2,000. Over. Next, 25th. Paid cash to Solkar 1000. This time we paid cash. So 25th date. What is the entry? Solkar account debit to cash 1000. Over. Next, 28th. Returned goods to him 200. Earlier we purchased goods. Now this time we are returning goods. Entry, Solkar account debit to purchase returns account. 28th to purchase returns account 200 over. Next one, 31st, paid cash to him in full settlement of his account 780. If you observe, we purchased goods from him 2000 minus how much amount he paid. Sorry, we paid 1000. Remaining amount 1000 rupees. How much worth of goods we returned? 200. What's the remaining amount payable? 800. Now how much amount we are paying? 780. What is the difference of 20,000? Nothing but discount received from him. Nothing but discount received from him. This is important calculation. Entry: Solkar account debit to cash account to discount received account. 31st, to cash 780 to discount received. Earlier we allowed a discount to him, but now we received a discount from him 20. That's it. If you observe, his account gets closed. His account gets closed. Okay, total it. Total and leave it. 2000 debit, 10,800, 4,000, 1,000, 200, 780, 20. 18,800. Next, 12,600 plus 200 plus 2,900 plus 100 plus 2,000. Yeah, just a minute. Calculate once again. 2,000 plus 10,800, 4,000, 1,000, 1,000, 18,800. This side. Okay. His account shows 1,000 rupees balance now. This side 17,800. Observe. 12,600 plus 200, 2,900, 100, 2,000. 17,800. Sir, why his account is not closed? Very simple. Okay, on 10th date, okay, here I have done a small mistake. On 10th date, we sold only goods worth 3,000. We sold only goods worth 3,000. Make a small correction so that here we have 17,800 over. His account gets closed. By mistake, instead of writing 3,000, I have written 4,000. Yes, observe this problem. Problem number 2. These two additional problems are given only for extra practice purpose. See, in this problem, we sold goods to Solkar. At the same time, we purchased goods from Solkar. Okay, previous problem, we only sold goods to Raman. Yes or no? Right. That's it. This is our ledger chapter. Okay, this is our problem number 2. Next, in this ledger chapter, we discuss true or false statements plus MCQ questions now. Okay. Hello students. In the previous class, we have discussed problem number 2. That means illustration number 2. In illustration number 2, we have discussed the opening balances of various accounts. After that, we have recorded some more transactions. With all these transactions, we have prepared so many ledger accounts. After that, we have seen trial balance at the beginning, at the same time at the end also. Hope you understood. Now look at question number 3. That means illustration 3. This question you have to read with utmost care. Why, sir? You will understand. Look at the following data is given by Mr. S, the owner, with a request to compile only the two personal accounts of Mr. H and Mr. R in his ledger. Mr. S is asking us to prepare only two accounts, that is Mr. H and Mr. R. That's it. We have to prepare only two accounts. Observe. For the month of April 2022. Fine. Look at one by one. Now what we do first. So here the requirement of the question is for preparation of Mr. H account and R account. You people first draw the ledger accounts. After that we read one by one transaction. Straight away we post into concerned ledger accounts. Clear? Now look at. Yes. Here we have the formats you people try to draw. In the books of Mr. S, Mr. H account, at the same time Mr. R account. Okay, fine. Now look at first one. Read. Mr. S, owner of the business, owes Mr. R 15,000. First, tell me what is the meaning of this. Mr. S, owner, owes Mr. R 15,000 means we have to pay 15,000 rupees to Mr. R. Means Mr. R is our creditor. So this 15,000 is nothing but credit balance. Credit balance in R account. How we write this? Look at. Go to Mr. R account, credit side, write down 1/4/2022. 1/4/2022 opening balance now. So it is credit balance. So by balance brought down 15,000. Yes or no? Next one. Mr. H owes Mr. S 20,000 means Mr. H should pay amount to Mr. S. Who is Mr. S? We are Mr. S, owner. So Mr. H has to pay amount to us means he becomes debtor for us. He becomes debtor for us. Debtor account shows which balance? Debit balance. Debtor account shows which balance? Debit balance. Now we go to Mr. H account, write down 1/4/2022. To balance brought down 20,000. This is very important in this problem. Identifying who is debtor and who is creditor. Debtor account shows debit balance, creditor account shows credit balance. Next one. Look at fourth date. Mr. R sold goods worth 60,000 at a 10% trade discount to Mr. S. Who sold goods? R. To whom? S. Who is S? We are S. We should record this transaction in our books. R sold goods means we purchased goods. Yes, sir. Right away they can say yes, we purchased goods rupees 60,000, sir. No. That is the importance of this problem. So here you should identify who is debtor, who is creditor, who is purchasing goods, who is selling goods, who is allowing discount and who is receiving discount. That is the beauty of this problem. Now tell me, R sold goods, S purchased. We are S. So from our point of view, it is purchases. So that what is the entry we write? Purchases account debit to R account. What is the entry? Purchases account debit to R account. Tell me, total we purchased for 60,000 minus 10% trade discount na 6,000. So that we get 54,000. That is the important aspect here. Look at. So R account credit side Fourth date 4 4 2022 by purchases. Straight away we can write 54,000. Any doubt? Next one. Fifth date. Mr. S. V. sold to Mr. H. We sold goods to H. Goods prices at 30,000. So for us it is sales. For H it is purchases. Entry. Mr. H account to debit to sales account. Yes or no? Fifth date. 5 4 2020 to sales 30,000. That's it. Next one. 17th date. Record a purchase of 25,000 net from R. We purchased 25,000 rupees worth of goods from R, which were sold to H at a profit of 15,000. Very important. 25,000 worth of goods we purchased from R. That is one transaction. And the same goods we sold to H at a profit of 25,000. That means what is the worth of goods sold? For how much amount of goods we sold to Mr. H? 25,000 cost plus 15,000 profit, total 40,000 worth of goods sold to Mr. H. This is two transactions. One, purchase of goods from R. Second, sale of goods to H. These two transactions we have to record now. What is the first one? First we record for purchases. Purchases account debit to R. So write down in the R account 17 4 2022 by purchases 25,000. The same goods now we sold to Mr. H. So same date 17 4 2022 to sales 25,000 rupees cost plus 15,000 rupees profit, total 40,000. Clear? Next one. 18th date. Mr. S rejected 10% of Mr. R's goods of 4th April. If you observe, on 4th April we purchased goods total 60,000, 10% trade discount from Mr. R. Now on 18th we are rejecting 10% of our goods. Means how much? So here we recorded entry for 54,000 now. 54,000 straight away we recorded the entry. Out of the 10% goods we rejected, means purchase returns. What is the journal entry we record? R account debit to purchase returns account. R account debit to purchase returns account. So that 18th date 18th 4 2022 to purchase returns account. How much? 5,400. Don't forget. 54,000 into 10%. 54,000 into 10%. 10% of goods returned or rejected. That's it. Next one, 19th date. Mr. S issued a cash memo. Cash memo is nothing but we sell goods and we issue cash invoice, cash memo. Cash memo is nothing but this memo is issued against cash sales. Okay. So Mr. S issued a cash memo for 10,000 to Mr. H. H is our debtor. For H we have issued 10,000 rupees cash memo. Means we sold goods to H, but the sales are not on credit for cash. That's why we have issued cash memo. This is also very important. Who came personally for this consignment of goods urgently needed by him? So Mr. H personally purchased goods. He came personally and he purchased goods, and also he paid 10,000 rupees immediately, so that Mr. S issued cash memo. Understood? This is not credit transaction. This is a cash transaction. That is the important aspect in this problem. What is the entry we record? Cash account debit to sales account. Cash account debit to sales account. This transaction is not recorded into H account. Why? Because it is not credit sales, no? It is cash sales. Here what we are preparing? We are preparing H account and R account. So this transaction is not entered into H account. Important. It is ignored. We write a note point and we ignore this transaction. 22nd date. Mr. H cleared half of his total dues to Mr. S. Mr. H, our debtor, cleared half of his total dues to Mr. S, enjoying a half percent cash discount of the payment received. Cash, do remember, cash discount is given on cash receipt. Suppose now I am receiving 10,000 rupees. On 10,000 only I will allow cash discount. Suppose a customer has to pay 10,000 rupees, but out of that he is paying only 5,000. Out of that he is paying only 5,000 rupees cash and remaining 5,000 not paid. Now you people tell me on which amount we allow discount, cash discount, on 10,000 or on 5,000 rupees. On 5,000 rupees we allow cash discount because we are receiving 5,000 now, so that we allow some 5% or 2%, 1% cash discount. Here also same. Mr. H cleared half of his total dues. What is the total amount due from Mr. H? Can you tell me? No. Why? Because here we should balance Mr. H account. Then only we can able to identify what is the amount due from Mr. H. Calculate Mr. H account debit side. 20, 30 and 40. Total 90,000 we have. Total amount due from H. Tell me how much? Amount due from Mr. H. 90,000. What they are saying, out of this 90,000, 45,000 rupees he is clearing. That is what they are saying. Half of his dues cleared. How much? 45,000. 45,000. And he is paying 45,000 now. We are allowing half percent cash discount. We are allowing half percent cash discount. Calculate what is the half percent cash discount here. 45,000 into half percent means 0.5%. 225 rupees. And what is the remaining amount we have to receive? 44,775. This is the amount we have to receive. Yes, sir. Now you people tell me whether this amount received in cash or check. That is the important aspect. Observe. Of the payment received, 20,000 was by check. What they are saying? We received half of his dues after allowing half percent cash discount. Fine. Out of the amount received, 20,000 was by check. What is the amount received? 44,775. Out of this 44,775, cash is how much? Check is how much? Check they are saying 20,000 rupees, means remaining amount is nothing but 24,775 cash. This is very, very important. In this problem, this calculation is important. Now, what is the journal entry we record? Simple. Cash account debit 24,775. Bank account debit 20,000 to H account. Sorry, just a minute. We are also allowing some discount now. Discount allowed account debit 225 to H account 45,000. This is the journal entry we should record. Now, post the same entry into H account. So H account credit side on what date? 19th date, 19/4/2022, by cash 24/7/75, same date, by bank 20,000, next by discount allowed 225. This is the posting in H account. Now tell me, what is the amount due from H now after this transaction? Remaining 45,000 is due. Clear? Next one. 26th date, R's total dues. R's total dues. R is our creditor. So we are paying amount to R less 10% held back. Means, suppose first calculate what is the amount payable to R. What is the amount payable to R? Tell me. 15,000 plus 54,000 plus 25,000. Total 94,000 rupees we have to pay to R, minus 5,400 debit now. Calculate. What is the balance here? 88,600. Amount due to R. How much? 88,600. Out of this, what they are saying? 15,000 held back. Sorry, 10,000 na? Yeah, 10,000 held back. Keep it pending. What is the remaining amount payable? 78,600. This is the remaining amount payable. Now read. Were cleared by check. We are paying by check. Enjoying a cash discount of 1,000 on the payment made. How much amount we are paying? 78,600. Out of that 1,000 rupees we are receiving discount. Remaining amount 77,600 we are paying to him. What is the journal entry we record here? Simple. R account debit to bank account, because we are paying through bank, 77,600, to discount received account, because we are receiving a discount of 1,000, total 78,600. After this transaction, what is the amount due to Mr. R? Remaining 10,000 na, 10,000 held back na, that is the amount due to him. Okay, now post this entry into R account. What is the date? 26th. 26/4/2022, to bank 77,600, to discount received 1,000. That's it. Next one. 29th. Close H account to record the fact that all but 5,000 was cleared by him by a check because he was declared bankrupt. Means what? Mr. H was declared bankrupt. Mr. H was declared bankrupt means insolvent. What is the amount due from Mr. H? 45,000 rupees. What is the amount due from Mr. H? 45,000 minus what they are saying, we received total amount but 5,000 rupees, means 5,000 not received. 5,000 not received means remaining 40,000 we are receiving. What is the entry we record? That too we are receiving this 40,000 in check. So bank account debit 40,000, bad debts account debit 5,000, to H account 45,000. With this, H account gets closed. Observe. H account credit side, what date? 29/4/2022. By bank, how much amount we are receiving? 40,000 on the same date. By bad debts, 5,000 bad debts. With this, H account gets closed. Look at debit side 90,000, credit side 90,000. H account gets closed. Okay, now look at 30th date, balance R account. Okay, balance R account and tell me what is the balance. Credit side already we calculated 88,600. Already here we calculated now 88,600 is the total credit. 10,000 held back. Nothing but our account shows how much balance? 10,000. Which date? 30th April, month ending date. To balance carried down 10,000. This becomes opening balance for May 1st. By balance brought down 10,000. If you observe, during the month of, we started April month, H we have from H we have to receive 20,000, to R we have to pay 15,000. During the month, some transactions happened between S, H and R, between S and H and S and R. The transactions between S and H, because of the transactions happened during the month of April, H account gets closed because he became insolvent. Finally, what is the amount due to R? 10,000. This is the problem. Observe carefully once again. Now here two note points we have to write. One, why we are not recording transaction on 19th in H account? Why? Because this transaction is cash transaction. That's why we are not recording. Fine. Now look at. And next one, this working note. Amount due from Mr. H. These two note points we have in the answer itself. You can just observe. First note point and second note point. Clear everybody? Yes, sir. Now look at the next problem. Yes. See, if you observe, after illustration 3, here they have given a note point. It is irrelevant to you. Ignore. It is irrelevant to you. Ignore. Fine. Now come to the next problem. PQ1 already completed. Yeah. PQ1 already completed. Next, yeah, these many problems we have in our study material. 3 illustrations and 1 practice question. Now, if you observe in the previous examinations, we didn't get any problem from this chapter. At the same time, mock test paper and revision test paper also. And for your practice, here I have given some additional problems. Additional problems for extra practice. Here we have 2 problems, very simple problems, and we try to solve them now. Look at problem number 1. Record the following transactions in the personal account of Raman. Means only one account you have to prepare. So do prepare Raman account. One by one transaction we post into Raman account. Make it fast. Next one. 2023 September 1st, sold goods to Raman 5,420. If you observe, in the previous problem, illustration 3, H account and S account started with the opening balance. H account debit balance, R account credit balance. But here they said prepare Raman account. Raman account, it doesn't have any balance now, neither debit nor credit. We are starting Raman account for the first time, so that there is no balance in the Raman account. Observe. Sold goods to Raman. What is the entry we record? Raman account debit to sales account. Raman account debit to sales account. Now go to Raman account. Yes. Go to Raman account. Debit side write down. 2023 September 1st. 2023 September 1st to sales account. To sales account 5420. 5420. Over. Next one. Fourth date, received from Raman cash 5150 and allowed him a discount 270. Means, observe, we received 5150, discount allowed 270. Add total becomes 5420. Yes or no? Now what is the entry we record? Cash account debit, discount allowed account debit to Raman account. So credit side, write down 2023 September 4th by cash 5150. On the same date by discount allowed 270. Hope you understood. Next one. 15th date. Raman bought goods 6000. Raman bought goods means we sold goods. So what is the entry we record? Raman account debit to sales account. 15th date to sales account 6000. That's it. Next one. 28th date received cash from Raman on account. This is important word, on account means if you observe Raman first he purchased for 5420 and he also paid 5420 over, no balance. But next he purchased 6000 rupees. Now tell me what is the amount to due from Raman? 6000. But now this time how much amount we are receiving? 2000 rupees. This time how much amount we are receiving? 2000. The remaining 4000 discount. No, that's why they are using the word on account. Means there is some amount due from Raman. Out of that, we are receiving some amount now. Remaining amount is still receivable. That is the meaning of the word on account. Means we have to receive some amount from Raman. Out of that, we are receiving only 2000. Remaining amount we receive later. Now what is the entry we record? Cash account debit to Raman account. 28th date by cash 2000. That's it. Next one. October 1st balance from last month brought down 4000. So September month is completed now. Observe. Every month generally ledger accounts are balanced. Here also we balance Raman account. Here also we balance Raman account. Observe carefully. Total debit 11,420. Credit 5,150 plus 270 plus 2000. 7,420 minus 11,420. What is the balance here? 4,000 total. This becomes September 30th by balance carried down 4,000. The same becomes opening balance for the next month. Next month starts from October 1st. To balance brought down 4,000. That is what they are saying. Look at this is the balance of 4,000. Important this is. Means indirectly they are asking us to balance Raman account for the month of September. Now we are in October month. Look at 13th date sold goods to Raman again 10,000. Entry Raman account debit to sales. 13th date to sales 10,000. 20th date received from Raman cash 3,960 and allowed him a discount 40. Okay, this 4,000 rupees observe maybe from opening balance na 4,000 rupees. What is the entry we record? Cash account debit, discount allowed account debit to Raman account. 20th date October 20th by cash 3,960 by discount allowed 40. 21st date October 20th by cash 3,960 by discount allowed 40. 22nd date October 20th by cash 3,960 by discount allowed 40. 23rd date October 20th by cash 3,960 by discount allowed 40. 24th date October 20th by cash 3,960 by discount allowed 40. 25th date October 20th by cash 3,960 by discount allowed 40. 26th date October 20th by cash 3,960 by discount allowed 40. 27th date October 20th by cash 3,960 by discount allowed 40. 28th date October 20th by cash 3,960 by discount allowed 40. 29th date October 20th by cash 3,960 by discount allowed 40. 30th date October 20th by cash 3,960 by discount allowed 40. 31st date October 20th by cash 3,960 by discount 40. Over. Next one. 31st. Received cash in full settlement. Now they are using the word full settlement. Full settlement means what? After this transaction, now there is no balance due from Raman. That is the meaning of this. Then what is the meaning of on account? On account means we have to receive amount from Raman, but out of that we are receiving some amount. Remaining amount we receive in the future. But if they use the word full settlement means after this transaction there is no amount due from Raman. That means remaining amount can be taken as discount. In full settlement of Raman account, how much amount we are receiving? 9,800 we are receiving. Balance Raman account to know the account balance of Raman. Look at already September month account balanced, October month observe 4,000 opening balance due, 4,000 we received on October 20th. On October 13th we sold goods 10,000. That is the account balance of Raman. Or else you can calculate in our traditional way, that is total debit 14,000 minus total credit 4,000. Balance 10,000. Out of that we are receiving 9,800. Remaining 200 discount. So October 31st by cash 9,800 by discount allowed 200. That's it. Total 14,000. Here also 14,000. Raman account closed. Raman account closed. Over. This is our problem number 1. This is our problem number 1. Check the problem once again. Yes, students, I hope you understood the concept of ledger, posting and totaling or balancing. Sorry, totaling. Balancing we try to understand by solving some problems. Because if I explain at this point of time, you cannot understand, because visualization is very important. So that what we do is we solve one problem. After that, we come to this balancing content. Clear? Look at. Now come to problem number. Yes. SM practical question 1. Come to SM practical question 1 first. Look at everybody. Journalize the following transactions. Journalize the following transactions. Post them in the ledger. What they are asking? Journalize means record the transactions in journal and post them in the ledger. Posting work and balance the accounts on 31st December. They are also asking balancing. Balancing work includes casting and totaling. So how many works here? Journalizing, posting, balancing. So one thing I forgot to tell you, during the learning stage of ledger, you should have so much of patience. Why, sir? Because here we have to draw so many accounts. You need so much of patience. Patience. Okay, because drawing accounts is not that much of easy. Drawing accounts and posting the transactions or recorded transactions in journal, sorry, ledger, and balancing, not that much of easy task. It is a clerical work. I repeat, it is a clerical work. That's why you need so much of patience. Clear? Right, sir. Now look at, this is a simple problem. First you record all the transactions in journal. Next you post them into ledger. After that totaling, balancing. Totaling and balancing. Okay. Now you can do one thing. Just pause the video, take out your notebooks, write down the entries first. Pause the video, take out the notebook and write down the entries. Because you know the entries na, very well. Already journal chapter is completed. Right? Yes. Do it fast. Do it fast. Now So now come to yes practice question 1. Here I have drawn, so here I am showing you the formats. Here I will write the entries. Tell me first transaction, first December. Okay, first December. What is the transaction here? X started business with a capital of 20,000. X started business with a capital of 20,000. So that, so write down the year. Year is not given. Okay, forget it. Write down December 1st. What is the entry we write here? Cash or bank account debit to X account. Capital na? X, we generally we don't write X, but we write capital. So better to take capital account. Just a minute. Cash account debit to capital account. Being started business with cash. How much? 20,000. 20,000. So first entry recording completed. Now come to second entry. He purchased goods from Y on credit 4,000. Entry purchases account debit to Y account. Write down quick. Purchases account debit to Y account 4,000. Being goods purchased on credit. Next one, third date. He paid cash to Y 2,000 rupees. Entry. Who is the receiver? Y. Y account debit to cash account. Y account debit 2,000 to cash account 2,000. Being cash paid to Y. Next one, fourth. He sold goods to Z 4,000. Entry. Z account debit to sales account. Z account debit 4,000 to sales account. Clear? Next one, fifth date. He received cash from Z 6,000. Here you may get it out. Sir, actually Z purchased only 4,000 na? But why he is paying 6,000? Sometimes there may be frequent transactions between business and its customer. Customer sometimes may pay more amount. That extra amount is adjusted against next purchase. That extra amount will be adjusted against next purchases. Hope you understood. Yes, sir. So fifth one, entry cash account debit to Z account. Cash account debit 6,000 to Z account 6,000. Clear? Next one. Sixth date. He further purchased goods from Y 4,000. We purchased again from Y 4,000. Entry purchases account debit. Purchases account debit to Y account 4,000. Very simple problem. See, these problems helps us to understand the concept. Don't expect these type of problems in the exam. This is not your intermediate course, junior inter or senior inter of MEC or CEC. Okay, don't expect this type of problems, but this problem is given to understand the concept of recording, continuation, ledger posting, continuation, totaling and balancing. Clear? Next one. Seventh one. He paid cash to Y 2,000 rupees. Yes. So entry Y account debit 2,000 to cash account 2,000. Over. Next. Eighth. He further sold goods to Z 4,000. Entry Z account debit. Z account debit to sales account. How much? 4,000. Over. Next, ninth one. He received cash from Z 2000. Entry. Cash account debit to Z account. Cash account debit to Z account 2000. Over. All the transactions given in the problem are recorded in the journal. Recorded in the journal. Now, next step is what? Posting. Posting in the ledger. Before posting into ledger, identify how many accounts that we have created. How many accounts we have created, identify. First one, no repetition. No repetition. Cash account, capital account, purchases account, Y account, again Y account. No. See the entry wise. Cash account already created. Z account, yes. Sales account, yes. Next, cash account already we have. Z account, no. Purchases, Y, cash, Z, sales, cash, Z. Means we have to open total 6 accounts in the ledger. Each page we prepare one account practically, but not here. In our notebooks, generally we draw accounts. We draw accounts. Okay. Each page some 3 accounts or four accounts we draw, because number of postings are very limited now. Number of postings are very limited. That's why we take little bit of space for each account. What you people will do is, for this problem, you people draw three accounts, in a page. Three accounts in a page. That means in 2 pages you can complete drawing 6 accounts. Pause the video and draw the accounts manually. See, here you have problems and solution, yes, but solving problem is very very important manually, because in the examination you have to complete the problem manually now. Yes sir. So you people draw the formats and make ready, right? So three accounts in a page, draw the accounts first and write down one by one account name. First account cash account, second account capital account, third account purchases, fourth account Y account, next account Z account, next account sales account. Like this, draw 6 accounts. I hope you have completed. Yes sir. Now come to ledger. How many accounts? Cash account, capital, purchases, Y, Z, sales. 6 accounts we have. Now post one by one entry. First entry, tell me. Cash account debit to capital account. First we post in cash account. So come to cash account first. Write down. Come to cash account first and write down. Date column December 1st. Cash account is debited now. Come to debit side. Write down to capital. Which account is credit? Capital is credit. Write down capital. How much? 20,000. How much? 20,000. Over. Okay. Now come to capital account. Capital account is credited now. Come to credit side. Write down December 1st. By cash account. How much? 20,000. By cash account, how much? 20,000. Now this is said to be first journal entry is posted into cash account debit side, capital account credit side. Observe carefully. Okay, 20,000 debit, 20,000 credit. Now come to second entry. Purchases account debit to Y account. So first purchases account debit, go to purchases account debit side. Purchases account debit side. December 2nd to Y account. How much? 4,000. Now come to Y account credit side. Come to Y account credit side. Y account is credited na? Yes sir. So December 2nd by purchases account. How much? Same amount, 4,000. There is no change in the amount. There is no change in the amount. Okay. Now second entry, posting completed. Next entry, Y account debit to cash. So Y account is debited na? Go to Y account first. Now here Y account is debited. Come to Y account debit. Third to cash. Y account debit. What is the other account credited? Cash account. How much? 2,000. How much? 2,000. Now cash account credited na? Go to cash account credit side. Go to cash account credit side. By Y account 2,000. Over. Cash account credit means what? Cash account credit means what? Cash goes out. Yes, cash goes out means cash paid. To whom cash is paid? To Y. That is why we are writing the name of Y. Next entry, fourth entry. Z account debit to sales account. Z account is debit, go to Z account. Go to Z account debit side. To sales account. How much? 4,000. To sales account 4,000. Now come to sales account credit, because sales account is credited na? Yes sir. So 4 by Z account 4,000 completed. Fourth entry, posting completed. Now look at fifth entry. Cash account debit to Z account. So here cash account is debit. Come to cash account debit side to Z account. To Z account. I hope you are following. How much? 6,000. What is the amount of transaction? 6,000. Now go to Z account. Z account credit side. Z account credit side. December 5th by cash account. How much? 6,000. How much? 6,000. Next one. Next entry. Purchases account debit to Y account. Go to purchases account debit. Purchases account debit. To Y account 4,000. What is the meaning of this? We have purchased goods from Y. On which date? 2nd. For how much? 4,000. Again we purchased goods from Y. On which date? 6th. How much? 4,000. This is the meaning of posting. That means we are classifying, we are bringing information relating to purchase in one place. Now go to Y account credit side. December 6th. Again by purchases. 4,000. Clear? Next one. Seventh entry. Y account debit 2,000 to cash account 2,000. Go to Y account debit side first. To cash 4,000. To cash 4,000. Now cash account is credited na. Come to cash account credit by account by Y account 4,000. Sorry, 2,000 na. Yes, 2,000. Here also 2,000. Over. Next and last entry. No, one more entry is there. Z account debit to sales account. So Z account is debit. Z account is debit to sales account 4,000. What is the meaning of this? Z account is debited. Why? Because Z is the receiver. On December 4th, he purchased goods. We sold, he purchased. For how much? 4,000. On December 8th, again he purchased, we sold. How much? 4,000. That is the meaning of this. Next, sales account credit. By Z account, 4,000. Over last entry. Cash account debit to Z account. Now cash account is debited na, debit side. To Z account, 2,000. To Z account, 2,000. Now go to Z account, credit side, by cash account, 2,000. By cash account, 2,000. Now tell me what work is completed. Here we have to do journalizing. We have recorded all these transactions in the journal. Next work, posting. After that, what is the next work? Balancing. Before balancing the account, first make the totals of account. Very, very important, students. Observe carefully. Come to one by one account. First, total debit and credit. Tell me, what is the total of debit first? Total of debit is 20,000, 28,000. Take out your calculators. Total of debit is 28,000. Total of credit, tell me. Total of credit is 4,000, sir. This is called totaling or casting. Total of debit is 28,000 and here total credit is 4,000. Totaled na? Now identify what is the difference. Identify what is the difference. So 28,000 debit, 4,000 credit. Difference is 24,000. Look at 28,000. 28,000 debit, 4,000 credit. Tell me what is the difference? 24,000. Debit more or credit more? Debit is more, sir. This is called debit balance. This is called debit balance. This terminology is very, very important. This is called debit balance. What is the meaning of debit balance? Debit side of the account. Debit side of the account is more than credit side. Debit side total how much? 28,000. Credit side total how much? 4,000. So debit side total is more. By how much it is more? By 24,000 it is more, sir. So this 24,000 is called debit balance of cash account. I repeat, this 24,000 is called debit balance of cash account. If you want, you can make a note of it. Debit balance of cash account 24,000. Okay, now tell me, balancing means what? Both sides must be equal. Balancing means what? Both sides must be equal. See, if you weight 1 kg of any grocery item, then you get 1 kg of items now. 1 kg weight means 1 kg items you get. Balance 1000 grams. Here also an account means both sides total must be equal because debit is equal to credit now. Yes, sir. Now to make this account equal, balancing, we have to write 24,000 on the credit side. 24,000 on the credit side. Then the total becomes equal. Then the total becomes equal. Look at 28,000 and 28,000. Now this is balanced. And this 24,000 is called balance of account. Balance of cash account. This is balance na. 24,000 is what? Balance. Credit side you are writing the balance na. Write down. So here on which date you are balancing? 31st December, sir. On which date you are balancing? 31st December. Credit side write down by balance. And this balance we have to carry to the next day. That's why we write the word C by D. C by D is nothing but carried down. Carried down. Now look at, we have recorded the data in journal, we have posted the same data in ledger, and we total the account both sides, debit total, credit total, and we identified the balance. What is the balance of this account? 24,000. Balance is nothing but difference of debit and credit. Debit 28, credit 4,000. What is the difference? 24,000. This is called balance, and this balance we have on the debit side, sorry, credit side. That credit side is short na, write down 24,000 on the credit side so that both sides becomes equal. On which date you are balancing? 31st December, sir. Write down in the date column. Credit side is balanced na, so by balance, this balance we have to carry to the next day. That's why we write the word C by D, carried down. And this is called closing balance. This is called what? Closing balance. If you can understand one account na, everything is similar. Closing balance. C by D means closing balance, and this 24,000 is called closing balance of cash account. I repeat, this 24,000 is called closing balance of cash account. Means we have 24,000 rupees cash in our hand. What is the meaning of this cash account? Sir, cash account is showing 24,000 rupees balance. 24,000 balance means you should have physical cash in your hand, 24,000. This is as per books. This is as per books. What is the meaning of 28,000? During December, we received 28,000 rupees cash. How did you receive this? Capital 20,000. Capital 20,000. Z paid 6,000 and another on 9th 2,000. Total during December, we have received 28,000 cash. Out of this, we have paid 2,000 rupees to Y on December 3rd. Again 2,000 rupees to Y on December 7th. After making payment of 4,000, what is the balance you have? 24,000. This is layman language and this account is professional language. That's it. There is no difference. We are presenting the data in a different manner. Now tell me, this the balance of cash account 24,000 means cash in hand. Now check. This is as per books na. Check your physical cash. Count the physical cash. Count the physical cash. Balance as per cash account 24,000 as per books. Physical cash also 24,000. Both are tallied. Very good. If both are not tallied, we have to check the transaction once again. Suppose physically I have only 20,000 rupees cash. Physically I have only 20,000 rupees cash. But as per books, cash balance is 24,000. As per books, cash balance is 24,000. Now there is a 4,000 rupees difference. Na? Ask the cashier. Hello, Mr. Cashier. As per books, it is showing 24,000, but physical cash we have 4,000 rupees. Sorry, 20,000 rupees. What is the difference of 4,000? Where is this 4,000 rupees? Now he check one by one transaction again. Understood? And this 24,000 we have to carry na? Yes. So on the debit side, what we write is January 1st. We write the next day, January 1st, to balance brought down 24,000. Very, very important, students. If you can understand this balancing procedure and writing the balances amounts, very important. To balance brought down. B by D means brought down 24,000. This is called opening balance. This is called opening balance. Before totaling whatever the balance we have in the account, that is called closing balance. After totaling whatever the balance we are writing in the account, that is called opening balance. Most of the students, they get confusion here between opening balance and closing balance. Before writing the totals, whatever the amount you are writing in the account, that is called closing balance. After totaling, after writing the totals, whatever the amount you are writing, that is opening balance. Now, closing balance is shown with the words balance C by D. Closing balance is shown with the words balance C by D carried down. Opening balance is shown with the words balance B by D. That means opening balance. Most of the students, they fail to understand the meaning of opening balance and closing balance. Very, very technical. Not technical, easy, but confusion. That's it. Pause the video. If you want, you can watch the video once again, but try to understand this account. This account. Once you understand this account, next accounts are easy. Just pause the video and try to understand. Make it fast. Understood? Yes. If you understand this, come to the next accounts and make it fast. Make it fast. Look at students. Look at. Come to capital account. First total. First total it. Total 20,000 credit. Debit side 0. Total 20,000 credit. Debit side 0. Now tell me what is the balance of this account. Difference 20,000. Write down on the lesser side. Lesser side 20,000. Debit side is less na. So we write with the words to balance. Carried down. Now total is 20,000. Now both sides are equal 20, 20. On which date we are balancing? December 31st. Now tell me, this account is showing credit balance. This account is showing credit balance. This account is showing credit balance. What is the meaning of this? What is the meaning of this capital account credit balance? Means capital account represents proprietor. Proprietor account personal account. Personal account means debit the receiver, credit the giver. Here proprietor account is credited means proprietor is the giver of 20,000 rupees. Later we have to repay this 20,000 rupees to the proprietor. Later we have to repay this 20,000 to the proprietor. Do remember. Next one. Write down the same opening balance. This is closing balance now. January 1st. By balance brought down 20,000 rupees. This is called opening balance. If you write the word B by D brought down, this is opening balance. This is closing balance. Now it is said to be capital account is having credit balance. Capital account is having credit balance. Do remember. Next one. Come to purchases account. Come to purchases account. Same. First what we have to do? Total. Total is 8,000. Total is 8,000 debit. Credit side 0. Look at credit side no postings na 0. Now tell me what is the difference? 8,000 is the difference. What is the difference between debit and credit? 8,000. So this is credit side na. So by balance carried down. On which date you are balancing? December 31st. Now look at credit side 8,000. Now both sides are equal. What is the meaning of this? Purchase account is having debit balance. Purchase account is having debit balance 8,000. What it means? During the month of December, we purchased total 8,000 rupees worth of goods. During the month of December, we purchased total 8,000 worth of goods. 8,000 worth of goods. Because purchase account is nominal account now. Nominal account rule, debit all expenses and losses. Here purchase account is showing which balance? Debit balance. Because debit side is more now. Expense is more. So expense account, debit balance. Expenses account shows debit balance. What's the meaning of this? Tell me. Total during the month of December, We have purchased 8,000 worth of goods. 8,000 worth of goods. Now brought down the same. January 1st to balance brought down. Most of the students, they do the process. They will do the process, but they fail to understand what is the meaning of this. C by D closing balance. B by D opening balance. Now it is said to be purchase account is showing 8,000 debit balance. 8,000 debit balance. In the same manner, Y account balance. Total debit, total credit. Total credit 8,000. Total credit 8,000. Total debit 4,000. Total credit 8,000. Total debit 4,000. What is the difference? Difference is 4,000 short on debit side. Difference is 4,000 rupees short on debit side. So write down December 31st, to balance carried down. To balance carried down. After writing 4,000, now the total become 8,000. Total becomes 8,000. Now what is the meaning of this? Y account is showing 4,000 rupees credit balance, because credit side is more, na? Credit side is more. Credit balance. Tell me, what's the meaning of this? We have to pay 4,000 rupees to Y. What's the meaning of this? We have to pay 4,000 rupees to Y. See, why I am discussing this problem slowly means, if you can understand the journalizing, posting, totaling, balancing, and understanding the balance of the account, then only it becomes easy for us to ascertain the profit or loss, at the same time to know the financial position of the business. Hope you are following. Next step. So write down here January 1st by balance brought down 4,000. Now it is said to be Y account is showing credit balance, means we have to pay. The business has to pay 4,000 rupees to Y. What's the meaning of this? Business has to pay 4,000 rupees to Y. Now come to Z account. Debit side 8,000. Credit side 8,000. Sir, what is this? Debit side 8,000, credit side 8,000. Yes, the account is said to be automatically debited. Sorry, automatically balanced. Previous accounts, observe, we have forcefully balanced the accounts, but Z account is automatically balanced. What is the meaning of this? This is said to be Z account is closed. This is said to be Z account is closed. Sir, what are you saying? Yes. Observe debit side, we have purchased, sorry, we sold goods to Z 8,000. We sold goods to Z 8,000. Z is the receiver for 8,000, and Z also paid 8,000 rupees. Z is the giver for 8,000 rupees. Z paid 8,000, na? Sir, yes, sir. So he purchased for 8,000 and he has paid 8,000. His account is closed. He need not to pay. He need not to pay any amount to us. So his account is closed. Now Z account neither debit balance nor credit balance. His account is said to be closed automatically. Easy na? Very, very easy na? Next, come to sales account. Come to sales account. Total 8,000. Debit side 0. Write down debit side 8,000 rupees to balance carried down. What's the meaning of this? Sales is income. Sales is income. The meaning of 8,000 is, during the month of December, we sold total 8,000 rupees worth of goods. We sold during the month of December 8,000 worth of goods. Okay, now balance. Now this is said to be sales account is showing credit balance. Why? Because nominal account income is incomes comes under nominal account, na? Nominal account is credited, na? Sorry, income account is credited, na? That's why sales account is showing credit balance. Sales account is showing credit balance. Write down. January 1st, buy balance brought down 8,000 credit balance, because credit side is more. This is said to be sales account is showing credit balance. Sales account is showing credit balance 8,000. That's it. Look at total how many accounts we opened. 6 accounts. Out of them, one account is closed. Cash account is showing debit balance. Capital account is showing credit balance. Purchase account is showing debit balance. Y account is showing credit balance. Z account closed. Sales account is showing 8,000 credit balance. Understood? This is the concept of balancing. Sir, what we did after balancing, what we understand after balancing, what we get after balancing means account balances. Account balances. And this account balance is called summary of that account. This account balance is called summary of that account. This 8,000 is nothing but summary of sales account. What is the meaning of summary of sales account? During the month of December, I sold total 8,000 rupees worth of goods. And what is the summary of Y account? We sold goods to, sorry, we purchased goods from Y. We paid goods, we paid some amount to Y. Finally, tell me what is the amount payable to Y. That is the summary. Finally, we have to pay 4,000 rupees to Y. This is the summary of Y account. At the same time, purchases account. During the month of December, total we purchased goods worth 8,000 rupees. Next up, capital account. What is the summary of capital account? 20,000 means we have to pay 20,000 to the proprietor. Cash account. During the month we received this much of cash. During the month we paid this much of cash. What is the summary of cash account? Nothing but how much of cash you have at the end of the day. Tell me. Sir, 24,000 I have, sir. Now do one thing. Do one thing. Take out a new page. Now tell me the list of accounts. List of accounts and balance. Can you tell me the list of accounts first? Cash account, sir. Next one, capital account, sir. How many accounts? Cash account, capital account, purchases account, sir. Next, Z account, sir. Next, sorry, Y account, no? Y account, sir. Next, Z account, sir. Next, sales account, sir. These are the list of accounts we have. Now tell me, cash account is showing which balance? Cash account is showing which balance? Tell me. Sir, cash account is showing 24,000 rupees balance, sir. Debit or credit? Sir, debit, sir. Debit balance, sir. Debit balance. And some accounts are showing credit balance. Tell me, students. Sir, cash account is showing 24,000 debit balance, sir. Fine. Capital account is showing 20,000 credit balance, sir. Super. Purchase account is showing 8,000 rupees debit balance, sir. Fine. Y account is showing 4,000 rupees credit balance, sir. Fine. Z account neither debit nor credit. Sales account 8,000 rupees credit balance, sir. Super. What we did here? We have made a list of accounts and balances finally. This is the summary of our account bookkeeping work. This is the summary of our bookkeeping work. This is the entire transaction. The summary of these transactions, nothing but this. This is a summary of all account balances. And it is a statement. This is called a statement. Nothing but trial balance. Nothing but trial balance. Understood? So tell me, after posting, balancing, totaling and balancing, we prepare a list of ledger accounts, and their balances. And this statement is called trial balance. By utilizing this trial balance, we prepare financial statements. So ultimately, these are the transactions recorded in journal, posted into ledger, totaled, balanced. All these, with these balances, we prepared a statement, and this statement is called trial balance, and check whether the debit amounts are equal to credit amounts or not. Tell me, debit total 32,000, credit total 32,000. Sir, debit balances total is equal to credit balances total, sir. How? Why? Because which system you have followed? Double entry system, sir. Which system you have followed? Double entry system, sir. What is the double entry system rule? Every debit should have corresponding credit. That's why debit balance accounts, cash account and purchase account showing debit balances, and remaining accounts are showing credit balances. Both balances are equal. To check this arithmetical accuracy, this is nothing but arithmetical accuracy. To check this arithmetical accuracy, whether all accounts showing debit balances and equal to credit balances or not, to check this arithmetical accuracy, we prepare a statement which contains the list of accounts and their balances. This statement is called trial balance. This statement is called trial balance. Our next chapter, we do the same preparation of statement in the next chapter. What we do now is, for every problem in the ledger, we prepare a statement also. We prepare a trial balance also, so that you can understand the next chapter easily. Hope you understand. This is the problem 1 summary. That means practice question 1 summary. Finally. Okay. Now look at. Observe carefully. Entries, postings, balancing, casting, balancing. With the balances, we prepared a trial balance also. With these balances, we have prepared a trial balance also. Practice question 1. Hope you understand. Hope you understood. That's it. Check the problem once again. Check the problem once again. Right? In the previous video, we have discussed additional problems. Problem number 1 and problem number 2. Now, come to the concept of ledger. We see any concept is pending. So, concept of journal completed, ledger, format, explanation, meaning of posting, rules regarding posting, whatever we have followed the process of posting, the same is given in theoretical form. Next, examples to understand the concept of posting. Here we have discussed simple entry posting and compound entry posting. After that, balancing of ledger account. This also we have discussed debit balance, credit balance, balanced accounts. If you observe this concept once, personal accounts. Generally, personal accounts are balanced. Personal accounts are balanced. In our problems, if you observe, look at illustration 2. Cash account, real account. Bank, personal account. Bank, personal account. See, personal account is balanced and the balance is carry forward. Inventory, asset account. Building, asset account. Vijay, personal account. Because he person, na? Here his account is automatically closed. Observe. Madhu, personal account. We balanced, na? And this balance is carried forward. Anand, person, personal account. Kapil, person, personal account. Capital, representative, personal account. Balanced, and the balance is carried to the next period. Discount allowed, nominal account. Purchases, nominal account. Discount received, nominal account. Plant, real account. Mukesh, personal account. Sales, nominal account. Rahim, personal account. Bad debts, nominal account. Like this, the ledger book contains various ledger accounts. That means all ledger accounts. Real account, personal account, nominal account. Now observe carefully. Personal accounts are balanced and carried to the next financial year. The balance is carried to the next financial year. Real accounts also balanced plus the account balance is carried to the next financial year. Means personal accounts are automatically closed. Suppose Vijay, from Vijay we have to receive 2000 rupees. If Vijay pays 2000, then automatically Vijay account gets closed. If Vijay did not pay 2000 rupees during the financial year, we collect the same 2000 rupees in the next financial year. Till then, his account balance we have to carry. At the same time, real accounts. Suppose we have building. We have building. Observe. We have building worth of 1 lakh. If this building is sold, then automatically building account gets closed until this account balance we carry to the next financial years. Hope you understood. Next one, nominal account. Very, very important. Nominal accounts are not balanced generally. Here you may ask, sir, in this case we balance bad debts. Take for example bad debts. Bad debts. Bad debt is nominal account. Expense, loss account. Na, bad debts is loss account. Nominal account. You may ask, sir, here you have balanced, na sir. Yes. During a particular year, we balance nominal accounts. During the particular, suppose we are in the financial year 2023-24. Means 1st April 2023 to 31st March 2024. During this financial year, generally, we record the transaction and we post them to the ledger. And every month, generally we balance the accounts, ledger accounts. During the financial year, all accounts are balanced. All accounts means personal, real, nominal accounts. But at the end of the financial year, means 31st March 2024, only personal accounts and real accounts are balanced, and these balances are carried to the next financial year. But all the nominal accounts total is transferred to the profit and loss account. Means at the end of the financial year, to calculate profit or loss, we calculate profit or loss. Now profit is nothing but what? Income minus expense. Income minus expense. Income accounts and expenses accounts. Nominal accounts na. Nominal accounts. To calculate or to ascertain whether the business has earned a profit or loss, we have to close all the nominal accounts by transferring them to profit and loss account. Do remember, this is very, very important true or false statement. At the end of the financial year or accounting year, all the nominal accounts are balanced. Is it true or false? It is false. Why? At the end of the financial year or accounting year, all the nominal accounts are closed by transferring them to profit and loss account. Very, very important true or false statement from the chapter ledger. Do remember, students. So look at nominal accounts. At the end of the accounting year, all the nominal accounts of the ledger book are totaled and transferred to the profit and loss account. Hope you understood. Next one, look at noteworthy points. Look at the time of preparation of financial statements, the balances of all nominal accounts such as incomes, gains, expenses and losses are transferred to the profit and loss account. Based on this concept, we get one important true or false statement. Next, the net result of all nominal accounts is reflected in the profit and loss account for an accounting period and is transferred to the capital account. Already we discussed this. To ascertain whether the business has earned profit or loss, we have to transfer the balance to the nominal account balances to profit and loss account. So the net result of nominal accounts, nothing but profit or loss. Observe, income minus expense. Income, expense, both are nominal accounts. the net result, total income minus total expenses, nothing but profit or loss. Hope you understood. Next one. The balance of all accounts relating to assets and liabilities means personal real are reflected in the balance sheet at the end of the accounting period. This you can understand when we discuss the financial statements of business. Okay. Here already we discussed real accounts and personal account balances or accounts are balanced and carried to the next financial year. The capital account is adjusted for profit or loss at the end of the accounting period. If you observe here, at the end of the year we get profit now. So profit is added to capital account balance. At the end of the year, whatever the profit the business earned, that belongs to whom? Owner, proprietor. In case of partners, partners. Partnership firm, partners. In case of company, shareholders. And this profit is added to the capital account balance. So that capital account balance will increase. Hope you understood. That's it. These are the noteworthy points. Now, the last concept, nothing but concept of bookkeeping. If you observe, the total accounting work can be divided into two parts. One is bookkeeping, another one is accounting. Bookkeeping is nothing but recording the transactions in journal and posting the same into ledger. This is called bookkeeping work. Once this work is completed, next we start our accounting work. So accounting includes bookkeeping. I repeat, accounting includes bookkeeping. Clear? So this journal, maintaining journal and ledger comes under bookkeeping work. After that, we start accounting work, nothing but preparation of financial statements. At the time of preparation of financial statements, we have to do a lot of work. Accounting depends on bookkeeping work. Accounting depends on bookkeeping work. Bookkeeping will not depend on accounting. Accounting will depend on bookkeeping work. To put it simple, accounting work starts where bookkeeping work ends. I repeat, accounting work starts where bookkeeping work ends. The moment we record the transactions in journal and we post them into ledger. Now in the ledger what we do? Posting, casting, totaling and balancing. With the account balances we prepare trial balance. Once the trial balance is prepared, we start next accounting work, means preparation of financial statements. Now this is the concept of bookkeeping. Look at, bookkeeping is an activity concerned with the recording of financial data relating to business operations in a significant and orderly manner, means chronological order. In simple words, bookkeeping is the art of recording business transaction systematically. We have followed a double entry system of accounting. By following double entry system, we classified the transaction into debit and credit, and both debit and credit is recorded in the books of accounts, chronological order. Accounting is based on a careful and efficient bookkeeping system. If you commit any mistake in the bookkeeping process, it will directly affect your accounting work. If a proper record is not maintained, it is not possible to get details of the transactions regarding income and expenses. Yes, to ascertain profit or loss of business plus financial position of the business, each even 1 rupee incurred as expense, we have to record it in the, we have to give accounting for that amount. So careful observation and identifying the transactions and recording them in the books of accounts, very important. Maintenance of books of accounts and the preparation of financial statements of a company are guided by the Companies Act, banks and insurance companies by special act governing these institutions, and so on. Means, see, I am running a sole proprietor. Mine is a small business. Now the question comes: should I maintain books of accounts? Means, should I record all my business transactions and post them into ledger and preparation of financial statements? The question is no. It is up to you. If you want to maintain books of accounts for careful recording and knowing your profit or loss or financial position of your business purpose, then you can maintain. But there is no obligation on sole proprietorship firms and partnership firms to maintain the books of accounts. But when it comes to companies, suppose Reliance Industries Limited, Infosys company, or Wipro company, you take any company form of organization, mandatorily they have to maintain books of accounts. This provision is given under Companies Act. And banks also should maintain books of accounts. Who said? Banking Regulation Act. Is it clear, students? Yes, but when it comes to sole proprietorship and partnership form of organization, there is no such obligation. Do remember. Next one. However, sole proprietorship and partnership business, there is no specific legislation regarding the maintenance of books of accounts and preparation of financial statements. Note, the terms bookkeeping and accounting are different. Accounting is a wider concept that includes bookkeeping. This note point also very important for true or false statements. They give you in the true or false statements that accounting and bookkeeping both are same, but actually both are not same. Why? Bookkeeping is different aspect and accounting is different aspect. These two are used synonymally, but actually these two are not same. Very important for true or false statement. So this is the concept of bookkeeping, students. Okay, now observe. So almost all concepts in the ledger we have discussed. We have discussed all the concepts plus illustrations. Look at all the concepts, illustrations, practice questions, additional problems. Till now we have discussed. Now we discuss true or false statements. After that, MCQs. Once we discuss these two, the chapter is completed. In each chapter, we discuss these things. All concepts we discuss, illustrations, practice questions. If any additional problems are there, we also discuss them, and true or false statements and MCQs. Now we start our discussion with true or false statements and MCQs.